Welcome to India Market Close with Sharad Dubey and myself, Hiral Dadia. And this is exactly what Sharad and I were just discussing before the show started, that the kind of range that we are seeing right now, somewhere in that range of 140, 170 points on intraday levels. And this is on a day when we have an expiry going on. But we did go to that 26,000 mark in intraday trade, have come back below that. 25,970 is what you're tracking on Nifty 50 as well. And you're seeing further cuts coming in on Bank Nifty, which is down nearly 0.4% to almost 0.5% in trade. So the deal when it comes to the financials is something which is hurting the street in today's session. Let's quickly look at what the VIX and the advanced decline ratio is indicating since morning to now, because there was pressure. If you see India VIX as well, pretty stable. We've seen that range of between 10.58 to 11.27, so no major, gyrations coming in on that front. Let's quickly look at what's happening in terms of the advanced decline ratio as we speak right now, because that will tell you what the breadth looks like. Very interesting, I think, There has been convergence that happened when we started off the trade, widened again for some part of the trading day. You've seen that convergence happen yet again, and now you've seen the mouth opening further down. Almost 1,400 declines coming to versus 980 advances. So the breadth is in favor of the bears as we speak. Let's look at Nifty 50 components and see what's happening on that front, and then we'll look at the broader markets as well. Clearly, it's the IT segment which continues to see the gains, and basically it's the tailwinds from the rupee depreciation that are coming in favor of all these names. SBI Life, which is interesting, it was one of the top losers when we started off the trading day. Now it is in one of the top three gainers. Adani Enterprises, ONGC, Bajaj Auto, HUL, BEL, one of the defense majors coming in on the top gainers list as well. But Interglobe Aviation continues to trade under pressure. Some recovery has come in, but 2% downtick on the back of the disruption that we're seeing in terms of flights. Maruti, Kotak, Eternal. Eternal is very interesting because there's a Daulat Capital note which says sell Eternal and buy a Paytm. So interesting note coming in there. We will give you more details. Dr. Reddy's, SBI, a few of the other top losers, but the breadth over here has somewhere turned in favor of the greens when you talk about the large cap names. Let's look at the sectors, and then we'll look at the broader markets as well. In terms of individual sectors, IT, real estate, defense is seeing a pickup right now. And again, this is on the back of Russia, India, Modi-Putin meet that is expected to happen. Putin will be coming to India, I would beg your pardon, by 6:30. But apart from that, media, durables, Bank Nifty, and the private banking space continues to drool under pressure. Let's look at the broader markets as well, and then we look at NSE 500 components. Mid-cap 150 again at the day's lowest level, so there is pressure building up there. And if you have to look at the small cap 250 as well, after that surgence for a short amount of time in the green, it's majorly traded in the red, and again at near the day's lowest levels with cuts of 0.3% coming in there. If you look at BSE 500 components, India Cements, interesting one, 7% up move coming in there. Hind Copper, again, that's moving on the way. Metal prices are panning out. Petronet LNG as well on the back of the JV, strong moves there. Delta Corp, L&T Tech, Bikaji Foods is very strong. Coforge also, in fact, a lot of bets coming in when you talk about mid-cap IT versus large-cap IT right now. And that's where the action is. Hitachi Energy losing out, and along with the Hitachi Energy, you have Keynes Energy, which is also under pressure. Suzlon, RBL Bank, a few of the other losers. So a whole host of names which are buzzing, Sharad. But I think few factors we need to watch out for taking expiry into consideration today.
Expiry, RBI MPC, and even PM Modi and Putin's meet as well. Largely macro factors are something which is driving the markets. But Nifty is still stuck in the lower range of 25,950, 26,050. So largely trades are not being made. 20-day EMA are the key levels for both Nifty and Nifty Bank. Nifty PCR is also stable. It's at almost 0.7, 0.8 times. So there's no clear trend coming out, whether it's bullish sentiment or a bearish sentiment. And during these times, what happens is even the VIX is on the lower side, then option strategies become tentatively useless. But apart from that, the Sensex expiry is also at play, and the rupee is trying to find some strong congestion at the 90-odd levels. If you could just show the rupee, there is a significant improvement coming in. If you look at the day-to-day basis price, but overall still the sentiment is on the negative side.
It hit a low of 90.4041, and the
conversation was 91.
Exactly. So I mean, this is interesting. But a lot of people are talking about a pullback as well from levels of 90-91. So it's going to be interesting.
So a lot of short people will get a squeeze, and that's what's happening right now in the counters. That's why you're seeing the dollar. Small caps are not continuing the performance, and last 3 sessions, Hiral pointed out also that they're losing the steam. The value buying is out. IT stocks are gaining for the second straight day. RBI MPC meet is also there. Interest rate sensitive stocks would be important. 25 bips rate cut is expected, but we never know. With a very high the dollar coming up, might be that there might be a very small chance that there might not be any rate cut also. But European markets, they are still opening positive if you look at it, and that's of course on the news flow coming in that the RBI, the FMC meeting, we are expecting that there will be almost 92% chance of rate cut as there more data comes out, which is suggesting a very weak labor market as well. But lots of pushes and pulls are happening here, and there is of course confusion which side the market will go on, and the closing will be very important. To decode this confusion, we are having our tech and fundamental guest Kush Bora from kushbora.com and Aditya Shah from Hercules Advisors. A very good afternoon to you, gentlemen. Kush, the first question is, which side are we actually on? Because right now divergence is going across. A couple of macro events will be coming in the next 2 odd days. Of course, the setup on a medium-term basis is fine, but if you had to take some positions or bets, will it be today or will it be less?
Hey, hi, Shah. First of all, very good afternoon to you and to all the viewers. I'm on the side of optimism. Does not mean that you go out and buy just right away. But let me give you a couple of data points, just to support that idea. If you look at the index, yesterday's support and today's support both have come around the 20-day moving average. I think you also briefly alluded to that. After 4 sessions, today Nifty's made a higher high, higher low formation on the daily setup, which is an indication that yes, perhaps from a near-term perspective, at least the bottom looks to be in place. Again, it could be a little too soon, but that's the first indicator. PCR also close to 0.85. So even if the index slips a little, there will be that support coming in. 26,000 call and put, both of them have had a very strong base, and the premium comes roughly to about 200 odd rupees. So the range, from that calculation also comes at 25,800, 26,200. And those are the technical levels also that tie in beautifully. So yes, we've seen a sharp bit of, profit taking on the index, Nifty in particular. And, we've seen some selling pressure on from the higher side today as well. But as long as this 25,800, 850 support zone is intact, and till the time the 20-day moving average is respected, I think the bias will continue to remain positive. We remain in that upward sloping channel, and that trend could continue. I think the market is just waiting for a positive trigger to go out and conquer that 26,300 and then 26,500 levels once again, at least the 26,300 once again.
Okay, so interesting levels to watch out for. Trend remains positive. Kush, your top picks in this kind of a market?
I'm still going with both longs here, and the 2 sectors that are doing well. So it's from the IT and the pharma space. From the IT space, it's the big boy TCS. A very interesting move on this one in the sense that there was a mild resistance around the 3,200 mark for the last few sessions. That's been taken out. Very healthy volumes yesterday. Today also, volumes are very, very encouraging. So yes, from a near-term perspective, 3260, 3340 are your targets. 3150 is where you place that stop loss. Pharma pack has also started to revive. We did discuss Natco Pharma yesterday. That stock's been doing well. But today it's Ajanta Pharma. After about 3 to 4 months time frame, the stock's now convincingly above the 200-day moving average. Volumes also on the upside. Relative outperformance, relative strength very clearly apparent. So 2665, 2730 are your targets on the upside. 2535 is where you keep that stop loss. So TCS and Ajanta Pharma.
TCS and Ajanta Pharma are the picks coming in from Kosha. But on to our stock of the day segment, we are having Petronet LNG. The stock is up in trade today on a back of an ONGC signing a 15-year ethane handling deal, and that's worth 5,000 crore rupees. Somit is here to tell us more. Somit, this is a very big deal coming in for Petronet LNG.
Yes, definitely a positive deal coming in for the company, and what they will be exactly doing here is that they will be managing the ethane supplies. They will be handling the ethane supplies for ONGC. So that's what Petronet's deal is, and this Petronet is expecting this project to start contributing in terms of revenues of around 5,000 crore rupees over the 15-year period starting FY29. So it's a long-term contract that has been signed. Now, what is the impact of this on Petronet? Now, what Petronet what Petronet here means for them is that they will continue charging 78 rupees per MMBTU, and they will have a provision to increase these charges by at least 5% every year going forward. And over these contracts, the company could generate margins of 50% plus. The company has not confirmed this, but analysts are quite sure that the company could generate margins of more than 50% on this project. And this 5,000 crore revenue, which will be spread over a 15-year period starting FY29, the current value or the current DCF value of this stands at close to 2,200 crore rupees. So this 2,200 crore is nearly 6% or 5.5% of Petronet's market capitalization, and that is the biggest reason why we are seeing this 4.5% move in the counter, because this project or this order adds nearly 5.5% of the company's overall value, and that's the reason it's 4.5% move that we are seeing in the counter. Brokerages continue to remain quite bullish on Petronet. Nomura has come out with this note where they have maintained their buy rating on the counter with a target price of 360. They say that they are viewing this announcement as a positive development for the stock, and they expect that the remaining 50% capacity of the counter may also be booked anytime soon going forward, and the Petronet continues to remain one of the top picks in the oil and gas space. Similarly, UBS also has maintained a buy rating with a target price of 340. They are saying that this order win improves the visibility of revenue growth for the company going forward, and they also believe that this will elevate investor concerns around Petronet's project execution going forward.
Okay, interesting take coming in when it comes to Petronet LNG as well. And you know, as Somat was mentioning, almost 2,200 crores is what could be added to Petronet's current value, representing almost 5.5% of its market cap, and that's the reason why you're seeing such a strong surge on this counter. Aditya, let me come to you on this one. With regards to Petronet, what do you make of the ONGC pact where they will be executing this 15-year binding term sheet for ethane unloading, storage as well as handling? What is your call on the stock as well?
So from my perspective, I'm positive on Petronet LNG. We've seen a lot of problems in Petronet LNG with respect to the USD in 2018, 19, 20. That has eased off. The stock continues to remain cheap, and gas is a theme of the future as we move from conventional fuels to gas. Petronet LNG is the one who's going to benefit. The dividend yield on the stock also continues to be really very good. So from my perspective, on the oil and gas space, Petronet LNG continues to be the top pick together with GATE.
All right, as the street is awaiting the result of RBI MPC meet, NDTV Profit gets a lowdown on what the analysts are penciling in from the last policy meet of the year. Vishwanath Iyer is here with more details. Vishwanath, take it away.
So in the midst of all of this news flow around the rupee, growth, inflation, finally you're having the Reserve Bank of India Governor Sanjay Malhotra coming out and laying out the MPC or the Monetary Policy Committee's plan for December. Now, there is a wide expectation that there is going to be a rate cut by the Reserve Bank of India and the MPC. The MPC might bring down the repo rate by 25 basis points. Of a poll of 36 economists, 24 believe that there's going to be a 25 basis point cut. About 11, however, believe that there's going to be no cut, and just one economist out there believes that there's going to be a 50 basis point cut. What are some of the factors that the RBI and the MPC will consider before announcing their decision to cut rates or hold rates? Now, the expectations are that they will look at the Q2 GDP numbers, because those are the most recent set of numbers that have come in. GDP for Q2 of this financial year came in at 8.2%. That was a massive jump from what was widely being expected to be an okay quarter. But then 8.2% really surprised most people out of the blue. For the first half of this financial year, that growth number, GDP growth number, is about 8%. The next factor that to be considered is, of course, CPI inflation. There, as of October, CPI was at about 0.25%. That's a monthly reading for CPI inflation. That's coming in much below the expectation of the RBI and most market participants. In fact, now most economists believe that the future readings, which is November, December, and January, you might see some readings coming in the negative territory. And that might be a problem as well that the RBI will have to address, because if there is low inflation, ideally an inflation targeting central bank should be cutting rates. But alongside that, you've also got a high growth base for India, and that will limit the RBI's ability and the MPC's ability to go out and cut rates. So we'll watch out for how they weigh these factors against each other. The other factor that will play a crucial role is, of course, where the rupee is. At 90 rupees or close to about 90 rupees against a dollar, rupee is at an extremely weak level, with what traders believe is highly oversold and highly undervalued. So the RBI has to also take that into consideration, because any rate cut decision will have an impact on future weakness of the rupee. Currently, everybody's watching out for the US trade deal to come in as the next piece of next trigger for the rupee to start appreciating. But before that, you might see more weakness, especially if the RBI cuts rates. What you will also watch out for is the RBI's commentary around growth and inflation, whether the RBI's estimates of growth and inflation for this financial year change at all. Remember that they are on the lower end of the expectation on growth and on the higher end of the expectation on inflation. On both those counts, the RBI's estimates are very widely different than what the actual numbers are. So we'll have to see whether the RBI goes ahead and fixes those numbers. The RBI governor in a recent interview has said that there is room for cutting the repo rate. This was something that he mentioned in the October policy as well. However, the timing and the quantum of that rate cut is something that the RBI and the MPC will decide over the course of time. We'll wait and watch whether that commentary and communication to the market changes at all at the RBI.
Okay, thanks, Vashi, for that. It's going to be very interesting because the dynamics in terms of for the RBI have completely changed with what's happening when you talk about the GDP, when you talk about IIP, the GST collections, the fiscal deficit number that has come in, and in turn, the rupee, the way that's panning out, because that somewhere sets an imbalance when it comes to your crude and gold bills as well. But to discuss this further, let's get in Gaura Sen Gupta, Chief Economist at IDFC First Bank. Gaura, good afternoon and welcome to the show. Hiral on this side. My question to you is, I know you have been slightly cautious when it comes to what the RBI is going to do, but from the last couple of days with the way the rupee has been panning out, does anything change according to you for the RBI to make their decision?
No, we have maintained status quo. So we had a status quo call. It's definitely a close call. The governor did indicate that there is space to ease rates. But the reason why we are still maintaining a pause call for the December policy is because from the growth perspective, Q2 GDP at 8.2, more importantly, high frequency indicators, whatever limited that we do have, is showing that the recovery is holding up even in the post festival season. So there is some moderation in pace, which was expected because I think the October quarter got the support of the GST cut. So there was a postponing of consumption there. But we are still seeing post the festival season, there is a sort of a pickup that has held up. Urban consumption is showing good signs. Rural has become broad-based in Q2 itself. So the need for a cut is much lower. The reason why it stays a close call is because of the fact that inflation, as per us, inflation is averaging at around 2% for the quarter, for the year FY26. The target for the monetary policy is 4%. And even next year, our inflation is tracking at 3.9%. So it's comfortable from an inflation perspective. But the reason why we wouldn't advocate for a cut in December is because the space is, as per us, maximum 1 to 2 more cuts, 1 to 2 cuts maximum. So given the volatile situation, you will want to use that policy space when downside risk to growth materialize. Right now, we still don't have any clarity on the trade deal. The last statements that did come out from, let's say, both the governments, both India as well as US, have been positive. So we are still hopeful that we may get a deal. And so it's better to wait for clarity and then take appropriate policy action. From a growth perspective, there's no urgency for a cut.
Hi Gaura, this is Sharad here. RBI intervention, this seems like it has been benign over the last 2 trade sessions as well, and that's why rupee did get a kind of a belt treatment. Almost that 90 levels is something which the traders are saying is a major congestion zone, despite an improvement in today's charts as well. How do you see that? Will we see this RBI intervention or more commentary coming in tomorrow's meet?
Definitely, if last time it was part of the policy statement where the governor said that they will take appropriate measures for the currency. If it's not part of the policy statement, definitely a question will get asked in the post-policy press conference. So definitely we do expect some indication from RBI regarding FX management, some statement. There could be also some measures that the RBI announces to ensure that the flow of dollars into the economy improves. Right now, the major challenge that is the reason why we are having depreciation pressure is because the capital flows have really slowed down. It's not a trade, it's not a current account issue. Current account deficit, yes, it's widening, but it's still pretty low. For us, the full year current account deficit is tracking at 1.6% of GDP. It's lower than that psychological 2.5% of GDP. It's the capital account, the slowdown FDI, not FDI, sorry, the slowdown in FPI, the debt capital inflows, etc., which is the real issue for the INR. So some measures to boost dollar flows into the market, or some indication from RBI regarding currency management is expected. We are also looking for some guidance on liquidity, especially domestic liquidity, whether the RBI gives us any hints of a potential liquidity infusion, which we do expect will be needed in Q4 FY26.
Gaurav, my question to you is now, we're talking about a status quo is what your expectation is. But when you talk about the RBI's policy stance, what is the likelihood of the RBI changing its policy stance from neutral in the coming months, and what are the indicators that are most important for this kind of a decision, number one? And two, how is the RBI balancing the need for credit growth in the economy with the potential risks associated with prolonged high interest rates?
So the change in stance is not expected. We expect the stance to be neutral. The reason being we are towards the end of the rate cutting cycle. If they change the stance to, let's say, accommodative, that means that, you have a deeper rate cutting cycle. As per us, they have space of maybe one cut or maximum two cuts. So we are towards the end of the rate cutting cycle, and a neutral stance doesn't prevent a rate cut. So from a stance perspective, we would assign a very low probability, but what could change that is, let's say, if there is some pronounced downside risk to growth, then only will the rate cut cycle be deeper. Right now, from an inflation perspective, though there is space, if you look at inflation, it does go up. So FY27 inflation is coming close to 4%. For us, we are at 3.9. From a interest rate perspective, the cost as the cost of the credit or the interest rate, for example, the policy rate, monetary policy is accommodative for us. In terms of, the cost of credit is not the reason, is not holding off credit offtake. Bank credit since the August onwards has actually picked up, currently tracking at 11.5%.
Thanks a lot, Gaurav, for that. You're giving us an entire 360-degree view on the economics and the expectations what we will have from the RBI MPC. But there's a very strong domestic voice, which was Gaurav, but we have an international voice also. CLSA's Lorenco Banco says the rupee's recent weakness looks close to maturing, with a reversal likely if it dips below 90. Listen in.
The Indian rupee sort of has worked in reverse, that you've seen the slow, steady uptrend of weakness in the rupee versus the dollar, but it really hasn't affected or been a negative for the equity market and the relative performance for India versus the broader EM or even global benchmarks. The one thing that we would highlight on the daily chart of the rupee right now is that while we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90 and more of a consolidation pattern developing in the rupee between the 84, 85 being the bottom end and the top of the range between 89 and 90. So we wouldn't be chasing the dollar above 90 and would be looking for a reversal back into a holding pattern and trading range.
And that's exactly what is happening. You are seeing some bit of a reversal that's coming in from levels of around 90.40. How sustainable is it going to be is what we have to see. But let's shift focus, the impact of this rupee depreciation on Indian IT, because that is what is probably boosting margins of tech companies as well, and that's the reason why you're seeing these kind of gains that is coming in terms of Indian IT companies. Let's just pull up the IT index and see what's happening on that front, and then we look at the components, because TCS was a call that Shrikant Chauhan had given this morning, and it was one of the top gainers. There you go. Gains in that range of almost 1.5 to 3.5%. All components of Nifty IT index also trading in the positive. Now, let me come to you on this one, Kush. Again, I'm talking to you about IT. There is a tailwind in the form of a rupee. Is this now still convincing you?
Convinced or not, the momentum speaks for itself, right? So there's no denying the momentum. It does come up to the resistance of the 39,000, 40,000 zone, which is the previous swing high, that it made in June. So yes, there could be some profit taking, some resistance coming in, but even that is some distance away. In fact, if you look at the texture of our calls as well, yesterday it was LTI Mindtree, today TCS, a few sessions ago it was Signity Technologies. So it's already starting to show up in the calls and the selection that we are making. So momentum is for sure there. Will it last or not? The time will tell. But I think if you have to play momentum and if you have to take trading bets, you have to stay with strength. And IT is definitely showing that right now.
Okay, so that's the view on from a technical side. Aditya, how are you looking at IT? I mean, with the way it's panned out in 2025, the tailwinds coming in the form of rupee depreciation, would you be a buyer of Indian IT companies? And within that basket, how would you club in, or how would you select between your large cap versus your mid cap ITs? Because the bullishness is very much evident in the mid cap IT companies and the small cap IT companies, not that much in the large cap IT companies when you talk to a couple of analysts.
So from my perspective, I am positive on the IT pack already for the last 6 months. I believe a lot of problems of the IT sector will get solved over a period of time, and these companies will continue to do well. Within this space, I have a bias towards the large cap IT space. The mid cap IT space continues to be really very expensive. So within the large cap IT space, HCL Tech and TCS continue to be my topics. Within the mid cap IT space, an NLT Infotech Mindtree or KPIT or NND Technology Services, those companies continue to be my topics. Mind you, if you are a long-term investor, only then you should invest in these companies. If you are a short-term investor, IT could give you some bit of more pain before which it could start to stabilize.
Okay, so those are picks coming in from Aditya Shah in terms of IT. Thank you, Aditya, so much for joining us on the show and sharing your views. And both the space, pieces that we've spoken about, Petronet LNG and Nifty IT, where Aditya Shah is absolutely positive on as well. But we'll quickly slip into a short break. Lots more lined up on the other side on NDTV Profit. Please stay tuned.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट शोल्डर्स जो प्रेजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर।
Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां। The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely. You can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course.
Welcome and welcome back. You're watching India Market Close. My name is Alex Matthew. With me is Sharad Dubey and Hiral Dadia. Of course, they've been here for the last half an hour. Guys, you know, when you're in an aircraft, and since the conversation today and yesterday has been about aviation, you
Not being in the aircraft.
Not
the
yet, but
conversation
in the
is
airport.
Being outside the aircraft.
Okay, bear with me. Since we're talking about aviation, you know how in the aircraft they ask you to fasten your seatbelts when there's turbulence, and still when you hit that air pocket, there's a lot of up and down? Well, that's exactly what's happening with the benchmark today.
Absolutely.
It's choppy.
It's absolutely choppy. The range on the day of expiry is also something which is very narrow. And I'm sure Sharad has something to add to it.
Well, I spent 8 hours in the airport as well.
You didn't get on the flight, so you didn't experience the turbulence. But let's take a look at the chart for the Nifty 50, and you'll see what I mean. Because there's been so much chop and churn from that low point to the high point, back again to below the mark. And now we're trading with just about gains of 0.1%. And let's see if the market breadth reflects that. And you will see this in the advanced decline ratio when you pull it on the screen, because this is more or less the trend across the market. You started off with the declines in the driving seat, and then it was eclipsed by the advances. Once again, you're seeing a gap between the advances and declines, but declines ruling the roost heading into the end of trade. And this now just about 50 minutes odd of thereabouts for the end of trade. But let's talk about aviation, and let's talk about Interglobe Aviation, because the latest is that Indigo is clarifying that it has not been under probe by the Director General of Civil Aviation, despite the fact that there are news reports. We've brought you updates as well, saying the Ministry of Civil Aviation is called for a meeting between the regulator and the airline to resolve these delays that have been taking place. Let's go to Danish to find out what the latest is from the DGCA headquarters. Danish, what can you tell us about what's happening right now?
Well, the Indigo officials have reached the DGCA office just a while back, and what sources are telling us right now is the fact that the meeting has begun, and Indigo was summoned by the DGCA yesterday. So within 24 hours, we are seeing a lot of regulatory action that has happened, and in accordance to the summon, Indigo has come to the DGCA office, and over here they will be providing the mitigation plan, that how do they really plan to ensure that going forward, post 48 hours, how they are planning to stabilize their operations, because yesterday after Indigo informed everyone that the flight cancellations are also because of the new FDTL norms, and the new FDTL norms, the second phase of that kicked in just a few weeks back, and after that we are seeing a spate of cancellations and delays by Indigo. The pilot organizations like the ALPA and FIP, they are clearly alleging that this is just an arm twisting tactic by Indigo. They are not following what the government asked them to follow. They have raised many questions that if they knew that they don't have adequate number of pilots, then why did they apply for so many slots in the winter season? And similarly, they have raised a lot of questions on the DGCA, on Indigo, that how come all of this is happening. So both the pilot organizations are requesting highest level of intervention in this fact, and they feel that Indigo should be fined in some way or the other, because ultimately the normal passenger like you and I, they are at the loss right now. So as soon as the meeting ends, we'll update. But all if we see a tight scrutiny by DGCA is happening right now inside the headquarters.
Sure, absolutely. Thanks so much, Danish, for getting us the latest. And of course, we'll come back to you to find out what the outcome of that meeting is. And remember, the airline is saying that it is going to compensate, as the case may be, in the event of cancellation. But of course, airports are also sending out messages to passengers to say, check your tickets on an ongoing basis, or check the status of your flight on an ongoing basis to find out whether there's a delay or a cancellation. Meanwhile, what is the implication for Indigo and Interglobe Aviation? Here's a Profit Intelligence to talk about the financial impact of these cancellations, etc., that could well go on for the next week or so. Somit, who tracks the space very, very closely, is joining in to tell you about that. Somit, impact on the financials, specifically on the bottom line?
Indigo has been in focus for the last couple of days, and this is largely because of the flight cancellations that have been announced by the company. So we have tried to gauge what could be the actual financial impact on Indigo, given the fact that there has been a lot of hue and cry about these flight cancellations. Firstly, just to give an idea, over 350 flights have been cancelled over the last 2 days. And on an average, Indigo operates nearly 2,200 to 2,300 flights on a daily basis. So as a percentage, flight cancellation is just 7 to 8% of the total flights that Indigo operates. Now, what could be the financial loss? So we are assuming that if a company continues to earn what they earned in the third quarter of FY25, and if the company continues to incur the cost what they did in third quarter of FY25, that is last year, then in third quarter of FY25, the company earned a revenue per unit of 5.44 rupees, and the cost that it incurred per unit cost was close to 4.83 rupees. Now, out of this total cost of 4.83 rupees, fixed cost is 40%, 60% is variable. And whenever a flight is cancelled by an airline, they actually save on the variable cost and they incur just fixed cost. So fixed cost stands at around 1.93 rupees per unit, and the variable cost stands at around 2.9 rupees per unit. So Indigo, if you look at, has on an average around 190 seats, and the average kilometer that an airline aircraft flies is close to 1000 kilometer. So if you try to gauge the notional revenue loss that the company might incur on cancellation of each flight, that is 5.44 rupees that it earned as a revenue last year, multiplied by 1.9 lakh crore. 1.9 lakh crore is derived by multiplying 190 seats with 1000 kilometers. Then the notional revenue loss would be around 10.3 lakh rupees for Indigo on cancellation of one flight. But the impact on profitability, in fact, would be much lower, because I explained to you that they only incur fixed cost and not the variable cost. So if you minus the variable cost then from the notional revenue, then the cost that they actually see on the profitability would be just 2.5 rupees on a unit basis. And if you multiply 2.5 to 1.9 lakh, then the actual loss for Indigo on cancellation of one flight would be just 4.8 lakh rupees. Now they have cancelled 350 flights, so 350 into 4.8, the total cost for them so far would be around 17 odd crore, or the total loss for them so far would be around 17 crore. Now to put this number into perspective, in the third quarter of FY25, the company had a profit of 2,450 odd rupees, and 16.9 crore is the loss that the company will incur because of the 350 flight cancellations so far. So that is just 0.7% of the total profit that the company had earned last year. So obviously, this is not going to have much of a big impact on the financials of Indigo in the third quarter of FY26 as well.
Okay, this is interesting in terms of calculation. Soumit, thank you so much for getting us this number. And to be noted, we're talking about around 350 odd flights. You can multiply the same number, because we spoke about the month of November, where the number of cancellations is about 1200 odd flights. And to add to that, the December woes do continue. Let me get in Samir Dalal from Natwar Lal & Sons as well. Samir, welcome to the show. Always a pleasure to speak to you on NDTV Profit. My question coming to you is, I'm sure you've heard the calculation that Soumit was getting us through in terms of the impact that Interglobe Aviation would see. How would you look at Interglobe Aviation? Because we're just talking about a 0.7% kind of a profitability impact right now with 350 flights. You multiply that, yes, it could be a little higher. And on top of that, you have a SpiceJet, which has an analyst meeting today. So there could be some information that could be coming in from there as well. Your view in terms of aviation and specifically Indigo?
Okay, so as I've always stated, I'm not a very big fan of the aviation sector. Having said that, Indigo is probably the best airline and the only airline in India that is investable at this point of time, given the fact its scale, size. It's going to be difficult for competition to come about, and they command some amount of premium. But I mean, I disagree with the calculations and the point that was made that, the profitability impact will be lower, because every flight that does not fly is added cost without revenue. So in fact, it has a double negative impact on the total profits. So I wouldn't look at it that the variable cost is not there, but the revenue has completely been wiped out. So the cost has to be split now amongst the lower number of flights that they've got. So it would affect their profitability. So hopefully the cancellations stop. Again, not a big fan of airline industry, so I have not invested either in SpiceJet or Indigo.
Fair point. Let me go across to Kush just to find out whether there's a case to sell based on the technical levels, right? Because the stock is down about 3% intraday. What are the key levels that you're monitoring, Kush?
Hey, hi, Alex. No, the stock has nosedived. I mean, it's been a turbulent descent. So I wouldn't go short just yet because it's approaching the oversold territories. And, the immediate support for this one is at 5,400. But if that is broken, then the next level of support is at 5,200. So let's see where the stock lands. But as I said, with the kind of fall that it's already seen, supports might just kick in. And, you might see some sideways consolidation. So don't short, but don't go long either. There aren't enough signs to suggest that, there's this sharp dip of 4 days is making a strong case for buying. So I would wait and watch on this one.
All right, thank you very much, Kush, for that. And of course, be careful also if you're booking your tickets in the next 2 to 3 days. But let's go on to our bulls and bears segment. And cement space has caught my interest. And interestingly, the trends are slowly coming up of this sector. For the last 2 to 3 odd years, this sector had consolidation. But now some green shoots are also coming up. So first of all, let's see the bull case scenario for the cement sector. Pricing is expected to improve in the fourth quarter, and that's where the better demand is also lying. There has been a suppressed demand in the last 2 odd quarters as well. But the price which was there in the month of November, that was lower side on 0.5 odd %. That means the demand has still not picked up on a current level basis. Also, another bull case scenario is that a lot of signs of private capex pickup has started to come in. L&T, HDFC Bank, all have started talking about it. And when this happens, cement also has a lag effect on that. The bear case, near-term pricing is still an issue because there's a cap put on the GST rollout, and slowly these cost reduction benefits are coming on the price impact as well. The third bull case is that correction has made the risk reward favorable in a lot of counters in the cement space if you look at the EV EBITDA multiples, while the bear case scenario is that the imported petcoke prices, they have a higher impact on the dollar. The dollar is right now near its record high levels as well. Amongst the brokerages also, the views are very different. Jeffrey's view is that they are remaining constructive on a 12-month basis, and interestingly, BofA's view is that they are staying under view about this. Also, let's look at the most target price potential on the next 12 odd months, and that is JSW Cement. That's a 38% return potential coming with a target price of 150 rupees per share. While bear case, we can say it's not negative, it's flat. That is Ramco Cement, because there was a rally in this stock and a flat return potential coming in. So JSW Cement is something which the street is looking out for with the highest bullish kind of return potential in the next 12 odd months. So these are the divergent trends coming in the cement space.
Thanks so much, Sharad, for laying that out. Samir, if you were to talk about some of the metrics that you are tracking, the latest updates, of course, is that the pricing trends are not the best. After a couple of quarters where you saw the improvement in pricing that led to that better than expected margin performance for these cement companies, it seems to be easing out just a tad bit. And so from that perspective, if you were to look at the EBITDA per ton metric and say you would pick from the lot to say which has the best, which would it be?
Us, EBITDA per ton has been Shree Cement historically, and that doesn't change. I mean, but look, we discuss about the fact that cement pricing pressure has been there, but the cement industry has been working. And if you look at the last 5 years, 70% utilization consistently. And even in the face of this low utilization rate, they have managed to remain profitable and keep prices firm when and as needed. So I do believe that that trend will probably continue. You see, what's happened is the industry has become very concentrated, where the top 5 to 6 players control over 50% of the market, 55-60% of the market. So when that is the case, you definitely have some amount of pricing power. And we do also believe that the infrastructure push, which is your real estate, which is your roads, ports, bridges, the works, is going to continue to see a lot of investment over the next many years, because that is the need of the hour for India. So is cement going to keep growing? Yes, it is. Is profitability going to remain there? Yes, it is. Valuations are a little bit on the higher side, but these valuations can sustain if utilizations move up to 85-90%. The only problem with that is constant capacity addition by players, which is not allowing the utilization rates to go up. But we do believe that they will remain profitable. So we are on the bull side for cement. Just we feel that for the time being, it may be a sideways movement before the run-up, because capacities that are new ones that are coming will also need to be absorbed quite better before the run-up starts.
Understood. Okay, and that's a fair point. All right, I want to draw your attention to IT, just to pull up a few of these counters that are now quite significantly off the high point of the day. And by the way, that's a lovely metric, right? Because it tells you about the USD INR move as well as the move in the IT space. But pull up these charts if you can. Persistent Systems, HCL Tech, Tech Mahindra, Mphasis, Coforge, Wipro, and then TCS. these are all off about 1% or so from the high point of the day. And so the question is, Kush, would you take money off the table if you have the charts?
Well, Alex, not really. The reason being that, the run-ups actually just started and, it's now starting to perhaps look a little sustainable. And if you look at the sector rotation graphs as well, this is the one that will perhaps stand out, for some time to come. This, along with perhaps metals, will, start to stand out. Because see what's happened with the banking pack, right? The private banks were already under pressure, consolidating, and now they're starting to see some cut. PSU banks had something going for them. The announcements that came yesterday have sort of dampened the spirit. So where does the big money go? I mean, ideally it'll go in the IT space only. Yes, some profit taking is visible, but nothing to be worried about. The larger trend, or at least the medium-term trend, does seem intact. I would actually hold positions in Persistent, Emphasis, TCS for that matter, with trailing stop losses rather than book profits at the current level.
So Kush has stated to hold the positions if you are having in these IT names. Alex had pointed this out. But now let's move on. My colleague Sumit Sarkar joins in with all the chatter from the dealing room. Sumit, which are the stocks in focus today?
Right. The first stock that remains in focus today is Biocon. Now the stock is down owing to two reasons. Firstly, the street is disappointed because in the notice that had come out on the exchanges, the company is also talking about considering QIP, and the second reason was long unwinding, because previous 2 days we had seen a sharp up move in the stock price. So some profit booking has also led to this downfall in the share prices. But what dealers are now indicating is that the company could potentially consider a share swap to merge Biologics, a subsidiary, into Biocon, and the merger ratio could well be in favor of Biocon is what dealers have indicated. When it comes to Shriram Finance, mutual funds are a seller in trade today. In fact, dealers have indicated that two prominent mutual funds who own a sizable stake in the company have been selling their shares in trade today. For Birlasoft, there are strong buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter in trade today. And when it comes to SRF, multiple dealing rooms are recommending positional buy calls to their clients for this counter. There are two triggers that dealers have highlighted. The first one is that there is a sharp pickup in volumes that they're expecting to happen in the second half. And the second one is the ref gas, which is one of the key products for the company. The prices for the same have continued to remain quite stable. And the last stock on the list is Hitachi Energy. That stock is down around 7% in trade. It was down 4% yesterday. It's one of the top F&O losers in trade today. And dealers are indicating that a potential order loss is one of the major reasons why the counter is down in trade. In fact, dealers have clearly indicated that the order win that could have come in for Hitachi Energy has now gone to GE Vernova, and hence we are seeing this kind of a downtick when it comes to Hitachi Energy. Over the last couple of days, it has fallen more than 10% in trade.
Thank you very much, Somit, for that. Kush, let's just mark Hitachi Energy. The stock has taken pressure the last two odd trading session, down almost 10% if you show it. Kush, further room for downtick coming in this category because of a potential order loss?
There could be, but if I just put things in context, I mean, the stock did have a good run-up as well, starting late October. So the last two sessions that you are seeing, yes, could be, is in all likelihood because of the news of the order loss. But I think the stock could perhaps find support at the 19,750 mark. So my suggestion would be, if you have a position, you should continue holding on to this one. If it does go sideways around the 19,750 mark, you could see some consolidation and then perhaps the next leg of up move coming on. So I wouldn't be too worried if the support zones are held. Yes, it's a sharp round of profit booking, but the support zones are close by.
Samir, quick view on this one. Hitachi Energy ended the quarter September with an order book of 29,400 crore rupees odd, and assuming that there is some loss on account of an order loss, it's still got a substantial order backlog. Would you be a buyer at these levels, or would you wait?
I think I would wait. I find, again, valuations extremely expensive. Yes, orders are there. Yes, execution will happen. But for something like this, you pay a fair price. And for me, valuations are a bit rich.
So that's with Hitachi Energy. Very quickly, in terms of the EMS sector as well, from a Keynes Technologies to our Amber Enterprises, PJ Electroplast, that entire space has been under pressure. Keynes itself is down little over 6% in trade. PG, again, it did hit a day's high, but trading in the positive. Let's look at Amber Enterprises as well. again at the day's lowest levels. In fact, Amber and Keynes, a very similar chart if you see on the screens. In fact, Kotak Securities has flagged key areas of focus in today's session as well when it comes to Keynes 2025 annual report. Let me head across to my colleague Puneet to tell us more. Puneet, what are you picking up in terms of the annual report? I know, we've spoken to the management earlier as well. A lot of commentary that's coming in from there is something that the management has already spoken to us about. But the stock at the day's low is telling you something.
Well, most certainly, and there has also been some selling which we've seen over the last, last month or so. Very famously, Motilal Oswal came out and sold their stake in the mutual fund business, of course, of theirs in Keynes Tech, and since then it has been on a downtrend. But overall, what Kotak is highlighting is, of course, based on 2025 annual report, and as you rightly said, a lot of those issues have been starting to work on from Q1 of FY26. But they have mentioned that significant revenue as well as profit contribution from the smart metering business is a positive. But there's been ambiguous accounting treatment for goodwill of the acquisitions that they've done in the last couple of years, where they've also mentioned a very sharp increase in the intangibles for the technical know-how of these said acquisitions. So that's a concern that they've flagged. They've also flagged that there's been a 22-day increase in the net working capital business, something we spoke to them post Q2 earnings, and they have mentioned that there are a lot of actions that are underway to reduce the net working capital below 100 days. The free cash flow is the other one where they will continue to focus on that. But CAPEX, as they've already announced, for the OSAT business as well as for the PCB business will be high over the next couple of years. So you will start to see a slight pinch on that aspect. But management has reaffirmed post the last 2 quarterly earnings that a lot of these issues are transitionary, and as and when from January of 2026, when the new ventures start to come in, a lot of the capex will be taken care of by those said entities. So while this report, it does highlight about the challenges faced in 2025 on the basis of net working capital amongst others, these are transitionary issues which have happened in the past, and it's important to look at the management commentary that they mentioned post quarterly earnings, as you rightly said.
Okay, thank you so much for that. Samir, what would you advise investors to do for these other names like Keynes Technologies, Amber Enterprises, both of them drooling under pressure today?
Yeah, they have been, but then also they had run up quite a bit in the past, right? So what you're seeing is maybe time consolidations. Yes, of course, price consolidation as well, but this was required because all of these stocks had run up significantly. If you pull up a slightly longer term period of 2 years, you'll see the kind of run-ups that they've had. So this is okay. We think the industry still got a lot of growth ahead. Amber, Dixon, Keynes will keep doing better as things move forward. AC business has struggled in the recent past because of weather not being conducive, early monsoons, not a very big summer. So, these kind of things are not going to keep repeating. And the penetration, if you look at it also in India, only about 30% or 40% of India has air conditioning. Fridges at 40%. I think washing machines are at 8 or 12%. So the entire EMS space for manufacturing in India has a long way to go. It's just that valuations needed a correction, which is happening, which is fine. I think these are good long-term investments. One needs to see where the value starts emerging and when growth starts to pick up. I think you will see all of these stocks moving back up over a period of time.
Okay. That's an interesting take from a fundamental perspective. If I have to come back to Kush, do you have a similar opinion in terms of charts as well?
Yeah, just a quick point. This is where all the fundamental analysts, including Samir, will be so happy. And, it's their "we told you so" moment, because all of these had shot up. And I would hear just one thing, that the valuations are far too stretched. Took a while coming, but it's here now. So yes, that's from, that's my kudos to all the fundamental analysts, as I said, including Samir. The only one that I like in this space is PG Electroplast. It's already had its fair share of rubbing. It's starting to see some sort of an uptick. It's slow and steady, very gradual, but nevertheless an uptick, among the entire space. The rest of the pack, the last 3 weeks, the downturn has been on the back of very serious volumes, including this week. So I wouldn't really go out bottom fishing, but the only one that's showing strength, PG Electroplast, that's the one that you can consider if at all you're really in love, with the entire space.
Regards to EMS as a sector. But let's quickly slip into a short break. On the other side, we'll get to the buy today, sell tomorrow, picks as well from Khushbu Rapi. Stay tuned to NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
Is a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct.
Welcome back to India Market Close on NDTV Profit. Now, investors are exploring multiple ways to actually go ahead and hedge against the rupee depreciation. Several options are available. I'm sure all of us are wondering what could those options look like, because this is a slightly tricky situation right now. And Alex has all the answers for all you viewers and investors as to how you can actually hedge against the rupee depreciation when it comes to making your investments. Alex, go for it.
Well, whether it is a trip abroad on a vacation where you're concerned about how much you're spending to buy those dollars that will fund the trip, or it is sending somebody abroad to study for foreign education, you need to watch the value of the rupee against the dollar. So is there a way to protect against the falling rupee? Let's talk about a few options. The first one that you can consider is gold, because India is a price taker. It's an importer of gold, and gold is denominated in dollars. So when you're buying gold, it is fungible, and so essentially if you're buying an ETF, then the price of that ETF in rupees is adjusting for depreciation on an ongoing basis. If you look back the last 20 years, on an average the rupee has depreciated about 3% or thereabouts, and the ETF is actually adjusted for that. Now, beyond this, you can also look at investing in a few mutual funds through either mutual fund schemes or ETFs that are India listed. The problem is that the SEBI has an overarching limit for the industry, $7 billion for the mutual fund schemes and a further sublimit of $1 billion for ETFs. And that has been hit, as a result of which these schemes are not issuing new units in the ETF space, and schemes are not investing more money in international assets unless they have the ability to do so when redemption comes through. And the result of that is that there's a huge gap between the traded price of ETFs in India and the net asset value of the fund. I looked at one example, and that's Nippon Hang Seng Bees, and it's trading at a 19% premium to the NAV. So when you're buying it, you're not really paying what you should be paying per unit for this ETF. It's a dangerous thing to do. So what should you consider doing? Well, Gift City is an option for you. There are a few mutual funds that have gone ahead and launched schemes that are outbound for retail investors, but even here, there is a minimum amount that you will have to cough up, and that's $5,000. It's not a small amount of money. And remember, if you put more than 10 lakh rupees in something like this through the LRS route or the liberalized remittance scheme route, you will have to have a tax collected at source of 20%, which you can adjust down the road when you claim your returns. So it's not the most easy route to consider for large sums of money. And finally, through the liberalized remittance scheme, you can also have a foreign account, a trading account that you can have through Indian brokers or through Indian brokers that have foreign partners. And that allows you to buy stocks or ETFs directly. Just bear in mind that the capital gains treatment is different from equity here in India, and it's a 24-month cycle for it to be considered long-term capital gains, after which it will be 12.5% of capital gains. So there are options available for you apart from holding dollar in physical form, which is not really a good idea.
Thank you so much for that, Alex, because this is really informative as well when, investors want to look at multiple other options as well. But also, let's get in Rajesh Palvia from Axis Securities. Rajesh, welcome to the show. A choppy session of trade is what you're looking at. We managed to scale above those 26,000 levels back again in terms of intraday trade today. But again, if you see in terms of what's happening, it's a topsy-turvy ride. It is expiry as well. Range is narrow. What are the levels that you would be tracking, and what's the direction you're staring at?
Good afternoon. So the direction is still on the upside, as we are able to defend this 20-day moving average in the previous fall, and around 25,900 is a good put base concentration, and major put writing is attracted around those levels. So I think till we are holding about 25,900, I think near-term trend is also likely to remain on the bullish side. Though short to medium term structure is improved, and I think we are in uptrend only, and possibly once Nifty crosses about 26,100, I think short covering action could trigger, and then Nifty can scale up further higher to 26,200, 250 zone in near term basis. So buy on dips is the strategy at this juncture. Bank Nifty also took support from its put base concentration of 59,000, 58,800. That's the major support area for the Nifty at this juncture. Until these levels are intact, I think here also one needs to deploy buy on dips kind of strategy, as overall structure for Bank Nifty is also on the bullish side. The sector where we are finding that strength based on the technical parameter like automobile, pharma, IT, banking, NBFC, capital goods, all these spaces are showing sign of strength. Even metal is also showing sign of strength on the short to medium term perspective. So I think here many stocks where we could find opportunity to buy in these kind of market. So one needs to be selected in terms of stock picking as well as on the sectors also. So overall structure is bullish. Buy on dips, one needs to adopt a strategy. 25,900 should be your stop loss. Target is 26,250 for Nifty.
Got it. All right. And closing above 26,000 is something to watch out for on the benchmark Nifty 50. What about individual stocks, Rajesh? What are you looking at?
So first stock where we are focusing is APL Apollo. After a corrective move of last 3 weeks, now stock has shown very strong recovery from its upsloping trend line support area on the weekly chart. Looking at the movement in stock in last couple of days, stock has now able to regain above its near-term moving averages. So we believe that this stock can scale up to the next target of 1815, 1820. On the downside, one needs to keep stop loss towards 1750. And the other stock where we are focusing is Siemens. Siemens managed to give breakout of its falling channel on the weekly chart, and this is the fourth consecutive week where stock is making higher high low formation. It's a sign of sustained buying action. Stock managed to give breakout of long consolidation on a monthly chart also. So we believe that now Siemens has shown sign of bottoming out, and we could see upward trajectory. So for trading point of view, 34.20 we are projecting target. On the downside, 3330 should be keep as a stop loss.
All right. Samir, I'd like to get your view on a couple of these pharmaceutical companies, specifically Biocon. So do stay with us. Let me just set the context, or ask Varsha to do so. Biocon is set to consider investment in Biocon Biologics. And the interesting part is how it's going to fund this transaction. Varsha is joining in with the details here. Varsha, they've called a board meeting to do exactly this, right?
Yes, exactly. So the board meeting will be on December 6th, that is Saturday, wherein the decision will be taken. Well, what they're going to do is they're going to invest more in Biocon Biologics, which is the growth lever for the company, and also they're also considering fundraise. And this is, Alex, one of the reasons why the stock is under pressure. Stock is down almost 5% because this is the second fundraise recently which the company has been doing. Now, why more funds are needed? One is, of course, the Biocon Biologics is a very high growth segment, and this segment, or this this will need more capital for the company to grow, and company wants stronger balance sheet to chase global biosimilar opportunities. So the aim is to improve debt to EBITDA ratio. Now, talking about the biologics business, why this is a good growth driver? If you see the revenue was up 25%, EBITDA was up 40%, and a company had a good operational performance also. Now, talking about the high debt overhang, if you see, the main pressure point over here is the debt in the books of Biocon, and this is what is hurting investors. If you see, after the Whitetrace deal, the debt picture for the Biocon jumped from $300 million to $1.5 billion, and the leverage remains very high, and the management needs fresh capital to ease balance sheet stress, and one of the reasons why they're going for the fundraise. Now, why this is concerning investors and why maybe the stock is down 5%, because this is the second fundraise that the company will be doing. They already raised 4,500 crore earlier, and another fundraise means dilution, which investors normally don't like, and this is probably the reason why the stock is under pressure, because going for the fundraise, then again dilution of shareholding pattern will upset investors, and hence the pressure in Biocon.
Right. Thank you so much for that. Samir, a quick view when it comes to Biocon as well as the other pharma majors as well, which have been buzzing in trade. You have a Spark, which has been seeing a good ride. You have, Wocard as well on the back of Zenith, which has been pretty much up in trade. Again, tailwinds coming in for a Dr. Reddy's when it comes to semi-glutide sale. That's the GLP-1 portfolio. How would you look at these names?
Okay, so first let's talk about Biocon, since that was discussed in detail. The way I look at fundraise, fabulous. You're getting money at 70 times earnings. So if you look at the yield, it's like 1.5%. If I look at the earnings yield versus my borrowing cost, which is probably as high as maybe 8-9%, right? So I'm saving 6.5% straight. I think it's a win-win for everyone, existing shareholders also, that the fundraise happens and they repay some of the debt. Now coming to the business opportunity, still for Biocon is still very large in the biologic space. They've launched a few medicines. They have more in the pipeline, which should be launching soon. And as those get on stream, you will see turnover and profitability increasing. So I think Biocon makes a good sense to buy. You just need to see what the pricing of the fresh issue could be. If it's a rights issue at a slightly lower price and you're already a shareholder, buy that. If it's a QIP of some sort, then yeah, you could probably consider buying into the stock, because we are long-term positive. And in the pharma space also, we remain quite positive and constructive. We've been saying it for a while that the US market is huge. The number of drugs that are coming off patent that Indian companies like Dr. Reddy's, like Lupin, Sun Pharma, Torrent, and many more have filed. They will continue to see traction going forward. Their top line and bottom line growth will remain in the 15 to 20% comfortably going forward. And last, Wockhardt, which has got this approval for this new drug, I think that's going to be a game changer for them if it actually launches finally, whenever it does, because they are going to have a protection for that drug for a period of time, which means they'll be able to capture the market share at pricing that is suitable for them. So if that goes through, I think Wockhardt could probably be on a trajectory of its own and probably even cross 2000.
Right, Samir. But let's move on to other stocks also which are buzzing in trade. Websol Energy, Newgen Soft and Mukka Proteins are making headlines today. Varsha joins us with all the list of buzzing stocks. What are the reasons for this, Varsha?
Well, talking about Websol, they came out with a corporate presentation wherein they expect demand for solar cells to rise to around 4 gigawatt by FY27, and the projected demand for solar PV cells in FY26, if you see, is around 20 gigawatt. And for that also, they are increasing their capacity when it comes to cells to 5.2 gigawatt from current 1.2 gigawatt. They are also expanding their capacity when it comes to solar modules, which is to 4.5 gigawatt from 550 megawatt currently. And this expansion is expected to be executed by calendar year 2028, and they're aiming for CAGR capacity growth of around 50% between 2024 to 2028. Next on the list is Newgen Software Tech, wherein they've received 13.9 crore order from Mercedes-Benz Financial Services for loan management system, and the order execution period lies around 5 years. Last on the list is Mukka Proteins, wherein the stock is buzzing. This is on the back of 474 crore order win from Bengaluru Solid Waste Management for landfill sites, and this order needs to be executed within 4 years.
Thank you very much, Varsha, for that. Rajesh, out of these three stocks, I'm trying to avoid Mukka Proteins because of lower volumes in this counter generally. But in case of Websol or the other stock which you discussed, anything looking interesting on the charts?
So Websol was in correction mode, and in last couple of days, some recovery has taken place from its oversold trajectory. But still, until the stock not crosses over 115, 117 zone on a weekly closing basis, trend is still remain on the weaker side. So those who have bought at lower level can try to book some partial profit around 117. That's the immediate hurdle for the stock. But Newgen is showing sign of some bottoming out as stock is now available near to its multiple support zone on the weekly monthly chart. So for Newgen, the important support area is placed at around 870, 880 zone. If it continues to trade above these level, I think some recovery we may see in the near term perspective. Any breakout over 920 could take this stock further higher to 1000 level also.
With regards to a couple of stocks that are in the news, but let's address a couple of other counters or sectors that will be in focus on the Modi-Putin meet that is on the agenda between today and tomorrow. If you have to talk about individual sectors as well, it's mainly defense that will see a good boost that could be coming in there, and that is one of the sectors which is gaining in trade today as well. Let me ask Samir this. Samir, any stocks or sectors that you identify that could be beneficiaries that should be on investors' radars today?
So from the Putin meet, I think the defense sector is one of the spaces that could be something that one can look at, but we need to see what eventually gets signed. Now, I have another worry that comes up. If India and Russia agree on a lot of positive things, where does that leave us with the US trade treaty? Because the 25% import duty is because we are kind of supporting the Russian war. And if we keep buying defense from them and we're doing more trades with them, does that push the can down further for the US trade treaties? So for me, if anything, I would look at is maybe defense, where companies could get technical knowledge, because Russia does deals with India where they do a technology transfer. So India gets that ability to make it themselves in the future. So that is one space that one can look at, but barring which, I don't see anything major benefiting from investment purpose.
Samir, very quickly on this, right? Because in the recent past, we've been talking about nuclear energy. And if you look at uranium, apologies. If you look at uranium deposits the world over, and anyone that could potentially supply India with enriched uranium for the production of nuclear energy, it is Russia. Would you agree?
Absolutely. I mean, they are one of them. Of course, other countries are also there. But it's not going to be that we are going to get the technology with one visit of his here, or we're going to get the uranium. And if we do start picking up things like that from them, how is the US going to react to that? Because at the end of the day, look, the reason the Indian rupee has fallen also as significantly is because our exports to the US have taken a bit of beating, right? So we want that to resume. So you don't want to be showing overtly friendliness. You want to get your work done and also make sure you keep the other party happy.
Absolutely. Samir, thanks so much for taking the time today. Absolute pleasure speaking with you as always. All right, let's talk about what is at stake here. And of course, Vladimir Putin is set to land in New Delhi later today and hold those key bilateral talks over the course of tomorrow. Of course, today there's only the dinner with the Prime Minister that has been scheduled. But there's lots on the cards. And in fact, at the bottom of your screen, you're seeing the Commerce Minister making statements about the Russia trade with India, and the fact that there is quite a big deficit at this point and the fact that it needs to be corrected. We've got Rishabh joining in to tell you about what you should look forward to. Rishabh?
Right, for the larger part of this year, we've been talking a lot about India and the US, but the flavor of the week is Russia. What we're seeing is the fact that, firstly, during this visit by President Putin, the trade deficit between India and Russia, that is something that will be addressed. We've seen that the current trade volume, the bilateral trade volume, is roughly $68 billion and heavily skewed in favor of Russia. Roughly $64 billion of that is what Russia is selling to India. And India is only selling roughly about $4.5 to $5 billion worth of goods and services to Russia. So that is something that is being remedied in this current visit. You had the president also talk about they're looking at expanding imports from India, and those could be in the area of pharmaceuticals, agriculture, processed foods, and many other areas. Apart from that, today itself, you have a bunch of very interesting engagements with Russia. And that is across sectors. Firstly, you have meetings with the Russian atomic energy officials. You have talks of building and commissioning a Russian modeled small modular nuclear reactor. Apart from that, you have Russia's largest bank, Sberbank, also hosting an event today talking about what sort of financial products they can come out with for the Indian market. You have the India-Russia Business Forum, where Commerce Minister Piyush Goyal will be there, alongside the senior ministers from Russia, including the Agriculture Minister, the Digital Development Minister, the Economic Development Minister. So ties being expanded across sectors there. And apart from that, you have a military technical cooperation meeting as well, the Intergovernmental Commission, where you have the defense ministers of both countries talking to each other about how technical cooperation can be expanded. So you have energy, finance, trade, as well as defense, all key sectors in this Russia-India partnership, in this very strategic partnership that has come out. And what we can also foresee is more progress on the FTA. You have a Eurasian Economic Union that Russia is a part of, and India is looking to tie an FTA, a free trade agreement with that cooperation. So progress expected there as well. And a very key.
So I think lots to watch out for. Thank you, Rishabh, for that. And sorry to cut you on this one, running short on time. Very quickly, let me go to Rajesh. Your BTST, STBT calls.
So I think Coforge from mid-cap IT space is looking attractive, and the way stock has managed to give breakout on the near-term chart, we believe that this stock can extend its possible target towards 2000 to 2020. We could see in the continuation of this up move. So one can buy Coforge with stop loss of 1930.
1930 is what you should be watching out for. Thank you for that, Rajesh. Stay with us. In fact, let me head across to my colleague Jasmeet, who's getting us the trending stocks towards close. Jasmeet, what's trending?
Well, thank you for that. Starting off with Ease My Trip, the stock is tanking in trade today. We see the stock is seeing a cool off, given that the stock had recently hit all-time 20% high in the trade after the recent announcement. So that's something we'll be watching out for. The announcement was with regards to the winter carnival sale, which saw a positive up move for the stock, and the stock is buzzing in trade up almost 2.5% even today. Well, the next stock is Hindustan Copper. Well, the stock is buzzing on the back of increased copper prices. As the copper prices hit all-time high, is something leading to the growth for this particular company. As well as the company recently signed an MOU with NTPC for mining for domestic and global services. That's also something that's supporting the stock going forward. Well, the third one is TCS. As per media sources, OpenAI to partner with TCS with regards to AI infrastructure in India. While OpenAI with the project of Stargate, they want to increase the expansion in India, and TCS being a partner for Hypervault, their recent investment data center is something that will be in focus going forward. Well, lastly, I have Ola Electric. Well, stock hit 52-week high in trade today. The stock has been tanking over a year. It's almost down 52%, and the trading volumes today were at 7 times a 20-day average. Given the guidance of the management, it remains completely strong as the management aims for 1,000 to 1,200 odd crores of top line by FY27. Given that particular outlook, the stock is still tanking in trade. On the other hand, the gigawatt factory, the management commissioned at 2.5 gigawatt is something the management is saying to expand to roughly 5.9 gigawatt by the March of FY26, which will be in focus. On the back of all of this positive guidance, the stock is still tanking.
Thank you very much, Jasmeet, for that. But both the stocks, Ola Electric, that 40 odd levels, that has cracked. It's a very important technical level. A lot of buying was there institutionally. But then let's just show the journey of Ola Electric, how it's expanded out in the last 2 to 3 odd months. There was a euphoria. It went up almost to 60, and then the correction happened. And you see, that's the numbers coming in 3 months. It's down 44 odd percent. Rajesh, is there more downtick coming in for Ola Electric going ahead, or is there a kind of a value emerging in these levels?
So overall structure is weak, series of low top, lower bottom formation. Stock is now at all-time low trajectory. There is no recovery. There is no sign of recovery at this juncture. So I think maybe we could see further more pressure. 32 would be the next target if it continues to trade below 40 level.
Okay, that's with regards to Ola Electric that we are watching out for. In these last couple of minutes of trade, Rajesh, any trade that you're identifying which could be, I know you've given your BTST, but that's something that is just cropping up which you didn't really think of a trade?
So I think some buying action has been there in defense space, and I think Mazgaon Dock and BDL, these two stocks are showing sign of buying interest, and I think BDL from its multiple support area has given a pullback action. So we could see some follow-up buying action in tomorrow's session also. 1580, 1590 would be the next target. On the downside, 1505 needs to keep as a stop loss.
Okay, so Bharat Dynamics and Mazgaon Dock is something that one should be watching out for in trade. One more question I have for you is a Paytm versus Eternal. Different plays altogether, but you did have a brokerage note which said sell Eternal, buy Paytm. Is that what is indicated on the charts as well, Rajesh?
So yeah, if I go with the structure also, Paytm structure is more promising compared to Eternal at this juncture, as the stock is holding about 20-day moving average. So yes, one can remain invested in Paytm as overall structure is bullish, and we believe that till stock is trading about 1280, trend is remain on the bullish side. Once a stock crosses over 1370, I think trajectory would be further higher to 1450, 1500 also.
Wider market, we're now looking at Hitachi Energy at 8.2% low at the low point of the day, and Keynes Tech also is losing as much as 6% or thereabouts. Rajesh, if you were to trade Keynes Tech, what are the key levels that you would watch out for?
So I think further more down move can be there in this counter. 4750 would be the next target where we could see Keynes Technology to slide further, as the stock has broken its immediate support area of 5000 also. So I think 4750 would be the next target.
Thank you very much, Rajesh, for giving your views in the technical space, and we see the markets also focusing on how that it's actually panning out. And today, of course, Sensex expiry was at play, but look at the divergence coming in. Nifty banks that was actually good at 2 o'clock, but then there was a movement happening in. But slightly that Nifty is expected to close above the 26,000 mark, and that's coming in after 2 to 3 odd trading sessions as well. Let's look at how the constituents have actually panned out for the Nifty 50 index, and this was the day It was a narrow range, but you see the sea of green coming in, and IT actually holding the pack. Stocks such as TCS, Tech Mahindra, Wipro holding the fort, but the life insurance stock, there was a significant up move in both of these counters, which includes both SBI Life and HDFC Life. Also looking at the losers over here, Reliance is here, and that's down almost 1% odd, but the biggest loser is Interglobe Aviation. That's down almost 2.5% odd. Let's look at the sectors, how they have actually performed in the day's trade. And we have spoken about the IT stocks. That's Nifty IT is up almost 1.3%. Even the defense space, that is also buzzing. Looking at these numbers and ahead of Russia and India's diplomatic meet. Also tomorrow, PSU Bank slightly coming back into the green. But overall, net we see there is a downtick in the metal space and also in the consumer durable segment. Also, let's look at how the advanced decline ratio has panned out, how the markets are looking like. And we see there has been so much change of hands coming in, but net, it's actually falling on the decline segment mostly. Let's look at how the mid-cap index and the small-cap index has performed. The Nifty mid-cap index, it's largely, if you see in the intraday chart, if you can pull that out, the Nifty mid-cap 100 index, it's likely to end in the day's low levels. It's in the red, and same story goes for Nifty small cap. No recovery happening here, but if you look at it, the Nifty has actually done well in this segment as well. BSE contributors, how it's actually panned out, that's also important in day's trade today. India Cements is something which you are looking at. The stock is up 10%. Hindustan Copper, Hikal and Delta Corp also gaining in trade. Amongst the losers, if you look at it, this includes Hitachi Energy, Biocon, Keynes, JM Financial, and even Godrej Industries making it to the list where there has been a significant selling pressure. Apart from this, let's look at what you should be prepared for tomorrow. A lot of macro data coming in, US jobless claims, US balance of trade, Japan Forex, it's very much important. But stock split is also there for CAMS, that's coming at 10 rupees to 2 rupees. And domestically, the anchor lock-in, these two is coming out, Prostram and Suds Accessories as well. The NSE board meetings, if you look at it, this includes the financial results for the recently listed company Tenneco, C8 and Jaiswal's important fundraise, and the most important interest rate sensitive stock especially is the RBI MPC. The street is confused whether it will be a 25 basis point cut or it will be a status quo. So these are the important triggers which we'll be looking at tomorrow, especially on the macro side, as the setup till now still looks like it might be a range bound. That's all for India Market Close. Stay tuned to NDTV Profit. Up next, we are having Market Express.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award. I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
Hello and welcome. You're watching Market Express and I'm your host Makshi Bahugna. Now let's get straight into the show and let's see how the markets are fared today. So Nifty ends the day above 26,000 level. Sensex ends marginally in green with an uptick of 50 points. Advanced decline ratio tilted in the favor of the declines. And if we talk about the sectors, so most of the sectors have ended the day in the green with IT sector gaining on the back of a declining rupee. So media and energy were on the back foot. Here's all eyes on the crucial Modi-Putin meet. The much-anticipated visit by Russian president underscores critical bilaterals on defense, pharma, agri and tech services. Ukraine conflict and crude imports too on the agenda. In more news on Putin's India visit, India will pay about $2 billion to lease a nuclear-powered submarine from Russia. The delivery of the vessel has been finalized after roughly a decade of talks. Talks for leasing the attack submarine from Russia had stalled over the years because of price negotiations. The two sides have now agreed on the deal with Indian officials visiting a Russian shipyard in November. So India expects to take the delivery of the vessel within 2 years, although the complexity of the project means that it could be later. Here's the rupee slide to record lows is proving to be a tailwind for India's IT sector, with the currency down 1 to 3% against the US dollar and euro. Revenue translation is getting an immediate lift. So this is as dollar billing converts into higher rupee earnings. Now, since 75 to 90% of its revenue come from, in foreign currencies, majors like TCS, Infosys and also Wipro were among the gainers in today's trade. So the weaker rupee also widens up margins because offshore delivery costs remain rupee dominated. And for context, offshore margins are nearly 3 times higher than on-site work. So typically a 1% move in the rupee can actually shift the margins by roughly 30 basis points. Here's our Repsol Energy is betting big on India's solar surge. Industry demand for photovoltaic cells is projected to hit 20 gigawatts in FY26 and double to 40 gigawatts by FY27. So to capture this growth, Repsol is planning a massive capacity expansion. Solar cells to 5.2 gigawatts from 1.2 and also modules to 4.5 gigawatts from just 550 megawatts. So this rollout is targeted by 2028, implying a 50% annual growth rate in capacity over the next 4 years. Next up, we have Lupin. That has inked an exclusive licensing deal with US-based Velaurium Biologics. Under the pact, Velaurium will handle commercialization and distribution of ARML Lupig in the US. I beg your pardon. It's the distribution of Lupeg in the US, while Lupin will manufacture and supply the drug. So Lupin will receive an upfront license fee and also royalties on the net sales. So Lupeg is used for patients undergoing chemotherapy, making this agreement a strategic push into the oncology space for Lupin. Next up, we have BML that has bagged a 157 crore order from Lorem Rail Maintenance. The order is for supply of switch rail grinding machines, which are critical for maintaining rail tracks and also ensuring operational safety. So this deal, reinforces BML's position in specialized rail equipment manufacturing and also adds momentum to its order book in the infrastructure and rail maintenance segment. Copper prices are on a tear globally, and Hindustan Copper is riding the wave. So the stock has jumped 11% in just 5 sessions as rising copper prices boost the demand and also valuations across the sector. Adding to the momentum, the company recently signed an MOU with NTPC Mining aimed at collaboration in critical minerals, which is a space that's gaining strategic importance. So analysts say that elevated copper prices could actually keep the sentiment strong for metal stocks in the near term. Electricity trade volumes on the Indian Energy Exchange saw a sharp uptick in November. Total trade rose nearly 18% year-on-year, and this was driven by strong growth in the real-time market, which surged over 40%. So prices have also moved higher. Real-time market rates have climbed 9%, while day-ahead prices were up nearly 7%. However, day-ahead volumes stayed flat at around 5,668 million units. Next up, we have Petronet LNG that has locked in a major long-term deal. They have signed a 15-year agreement with ONGC for ethane unloading storage and also handling the services. So as part of the arrangement, Petronet will provide an ethane storage tank capacity of 1.7 lakh cubic meters. ONGC, meanwhile, has committed to reserving roughly 600 KTPA of that capacity. So the transaction is expected to generate around 5,000 crore rupees in gross revenue, and operations are set to begin between FY28 and FY29. So this marks a significant step in strengthening India's ethane logistics and also midstream the infrastructure. Viewers, next up we have Nugent Software Technologies that has secured a notable global client win. They have bagged a 13.9 crore rupee order from Mercedes-Benz. Now the contract is for implementing a loan management system, reinforcing Nugent's presence in the enterprise-grade financial automation. So the project will be executed over a 5-year period, and this will also add visibility to the company's long-term revenue pipeline and strengthen its footprint in the automotive financial services space. Next up, we have Pace Digitech that has announced a significant order win, securing a 99.7 crore rupee contract from Advait Green Energy. So the deal is for supplying an LFP battery energy storage system. For context, that is a key component in renewable and grid stabilization projects. And under the delivery schedule, Pace Digitech will supply 50% of the BESS DC blocks by March 15th of 2026. And the complete system is expected to be delivered by April 2026. So the order adds strong momentum to the company's presence in India's fast-growing energy storage sector. Next up, we have Mukka Proteins that has also announced a major contract win. They have secured a 475 crore rupee order from Bengaluru Solid Waste Management Authorities. The project involves the treatment and also disposal of legacy leachate. Now, it is to be stationed at the Mitta, Ghana, Hali and also Kannur landfill sites. So this will address one of the city's long-standing environmental challenges. So the order will be executed over a 4-year period, marking a meaningful diversification for Mukka Proteins. Biocon is also back in focus this week, with the company announcing that its board will meet on December 6th. So the agenda will involve considering a potential investment in Biocon Biologics, its biosimilars arm. So the proposal includes buying shares from existing Biocon Biologics shareholders. A preferential allotment is also among the options being evaluated. Alongside this, the board will review a broader, fundraising roadmap. So this would include commercial papers, equity securities, QIP, a rights issue, preferential issues, or other capital raising mechanisms. Next up, we have Rail Vikas Nigam that has also bagged a new order worth 145 crore rupees from Southern Railway. So the contract is for the supply and testing of traction substations. This is a key component for railway electrification. The execution timeline for the project is set at 540 days. RVNL has been actively securing orders in the infrastructure space, which remains a focus area for the company. And viewers, AMFI is gearing up for its semi-annual categorization update with potential changes for the first half of calendar year of 2026. So the list serves as a reference framework for active domestic fund managers. However, no incremental inflows or outflows are expected purely due to the recategorization among the potential shifts. So notable large cap entrants could include names like Muthoot Finance, HDFC AMC, Canara Bank, Hero Moto, Tata Motors CV and LG Electronics. So potential mid-cap entrants include Endurance Tech, Poonawalla FinCorp, Lenskart, Misho and Physicswala. Let's look at some brokerages, and they remain bullish on JSW Steel. Investec has a buy call with a target of 1,250 rupees, citing expectations of net debt reduction. Morgan Stanley also stays overweight, pegging the stock at 1,300 rupees. Jefferies is even more optimistic, maintaining a buy with a 1,400 rupees of target, saying that recent transactions will strengthen the balance sheet. Analysts see that improving fundamentals and financial discipline as key drivers for the steel major. US Indigo Airlines has cancelled over 400 flights in the past 3 days as disruptions continue. And today alone, it has crossed over 180. Now, the airline has pointed to some key factors affecting the operations. This include the tech glitches, schedule changes, and also weather conditions, along with increased congestion, updated crew rostering rules. To contain the disruption and restore stability, Indigo has said that it has initiated calibrated adjustments to its schedules. The airline said that these measures will remain in place for the next 48 hours. They added that this window will allow it to normalize the operations. Next up, Dream 11 is making big changes. At a press briefing, co-founder of Dream 11, Harsh Jain, has announced that Dream 11 is set to exit the gaming segment completely. He said that they would instead become a sports entertainment platform and also plans to become a second screen for live sports viewers. The platform will allow viewers to watch matches along with creators, and also set to go live on the App Store and Play Store in the next 24 hours. In a major development in the computer hardware space, Micron has announced that it will discontinue the Crucial consumer brand, which used to sell computer RAM and SSDs. Micron, which is a key player in the technological supply chain, said that it will no longer make memory and storage services units for Crucial. So, although the company has confirmed that the Crucial will continue to honor warranty service and also support for existing products, its products will no longer be available at the major retailers worldwide. So, Micron's announcements come as part of the company's pivot towards artificial intelligence. Because Meta has started removing Australian children under 16 years old from its Instagram, Facebook and Threads platform a week before an official teen social media ban begins. Now, the tech giant has announced last month that it had begun notifying users aged between 13 to 15 years old that their accounts would start being shut down from 4th of December. An estimated 150,000 Facebook users and also 350,000 Instagram accounts are expected to be affected. Threads, similar to X, can only be accessed via an Instagram account. Meta Platforms has poached Apple's most prominent design executive in a major coup. Now, this underscores a push by the social networking giant into AI-equipped consumer devices. So the company is hiring Alan Dye, who has served as the head of Apple's user interface design team since 2015. So reports suggest that Apple is replacing Dye with long-term designer Stephen Lemay. Now, the move represents a seismic shift in Silicon Valley, showing that Meta is committed to becoming a name brand maker of hardware devices. Now, in an effort to permeate the Indian tech ecosystem. OpenAI is in talks with Tata Consultancy Services to build an AI compute infrastructure in India. As per media reports, this is a clear indicator of OpenAI's ambition to leverage the Indian market as part of its global Stargate project. Also, India has the largest, second largest base of ChatGPT users in the world after United States. So the report adds that OpenAI is finalizing a leasing agreement for at least 500 megawatts of data center capacity. This will be from Hypervault, a new infrastructure unit backed by TCS and also private equity firm TPG. Fitch Ratings has revised India's GDP forecast for FY26 to 7.4% from earlier 6.9% as per the global rating agency. Private consumer spending is the main driver of growth this year, supported by strong real income dynamics and also increased consumer sentiment. So the estimates come nearly a week after government data showed that India's GDP has quickened a 6-quarter high of 8.2% in the second quarter of FY26, which is up from 5.6% in the same quarter last year. So the agency has added, however, that the growth may slow down in the later years. On to some national news now, viewers. The Supreme Court has directed all the high courts to submit details of pending trials related to acid attack cases across the country within 4 weeks, terming the 16-year delay in one of the trials in a Delhi court as a national shame. The bench sought the details from the registry of all the high courts within 4 weeks. The CJI said that acid attack cases should ideally be tried by special courts to ensure swift justice. Union Minister for Road Transport and Highways Nitin Gadkari has clarified that government-backed studies show no significant performance issues or component damage from using 20% ethanol blended petrol. Now, in a written response in Parliament, he also confirmed that no compensation fund for E20 related damage is under consideration. Gadkari also clarified that vehicles sold before April 1st of 2023 were designed for E10, while vehicles sold after that date are E20 material compliant. Now, while this does not bar older vehicles from using E20, it does mean that they were not originally engineered for higher ethanol content. Union Minister Nitin Gadkari has also said that the current system of toll collection will come to an end within a year and an electronic system will take its place. So this is to ensure a seamless experience for the highway users. The new system has been rolled out in 10 places and will be extended across the country within a year. Gadkari has also said that currently 4,500 highway projects worth 10 lakh crore rupees are ongoing across the country. The National Payments Corporation of India has developed the National Electronic Toll Collection Program, which is a unified platform for electronic toll payments. Here's opposition MPs held a protest at the Parliament House complex against the air pollution in Delhi as the winter session entered its 4th day on Thursday. So Delhi's air quality was in the poor category on Thursday morning, with the overall air quality index at 299. So 3 Congress MPs, Manikam Tagore, Manish Tiwari and Vijay Kumar alias Vijay Vasant, also moved adjournment motion notices in the Lok Sabha to discuss the rising air pollution in Delhi NCR and other parts of North India. The United States has announced sweeping changes to the structure and also membership of the G20 ahead of its 2026 presidency. So they have declared that South Africa will not be invited to participate and also have outlined plans for what officials are calling a new G20 shaped around American economic priorities. The move marks a major departure from precedent and signals, Washington's intent to recast the forum's agenda under President Donald Trump. The 2026 summit will coincide with the United States' 250th anniversary. Officials have described the event as an opportunity to showcase the values of innovation, entrepreneurship, and perseverance that made America great. On to some more international news. The Trump administration is tightening rules for H-1B visa applicants, ordering enhanced vetting for foreign workers seeking to enter US. The move aims to scrutinize applications more closely, focusing on skills and also qualifications. Companies hiring foreign talent may face additional checks, slowing down the processing of visas. Now, this could impact tech and other industries relying on skilled overseas workers. Viewers, the Trump administration is weighing an expansion of its travel ban from 19 countries to more than 30 in the wake of last week's shooting of 2 National Guard soldiers in Washington, D.C. Homeland Security Secretary Kristi Noem has recommended the U.S. president to increase the travel ban to 30 to 32 countries. So, the Trump administration paused the immigration applications such as requests for green cards for people from 19 countries banned from travel earlier this year. So this comes as part of sweeping immigration changes in the wake of the shooting of 2 National Guard troops by an Afghan national. A U.S. Air Force Thunderbird F-16C Fighting Falcon has crashed during a training mission in the Southern California desert. The U.S. Air Force clarified that the pilot survived the crash by ejecting safely. According to the U.S. Air Force, the crash has happened around 10:45 a.m. on Wednesday during a training mission over controlled airspace in California. So the jet was assigned to the Air Force's elite demonstration team based at Nellis Air Force Base. So the pilot has received non-life-threatening injuries during ejection and is also being treated at a hospital. Here's on to some more global news. China has rejected Japan's Prime Minister, reaffirming his stance on Taiwan, escalating tensions in the region. Beijing says that such comments interfere in its internal affairs and also warns against actions, could destabilize cross-strait relations. So the exchange comes amid ongoing regional security concerns, with both the countries monitoring the situation very closely. Yes, Google has released its annual India's Year in Search 2025, the A to Z of trending searches. So report says that it highlights the search trends that defined what Indians were looking for this year. So on the entertainment side, Sayyara stars Aneet Padda and Ahan Pandey took Google search by storm, followed by Final Destination and Kantara, while many searched for rising stars like Vaibhav Suryavanshi and Jemima Rodriguez. Others looked up to the Women's World Cup. So Fukuoka also emerged as a popular breakout destination. Now, coming to the memes and the internet, the 67 meme went viral this year, which was followed by Arjun Kapoor and the Vishal Mega Mart security guard meme. Viewers, Spotify has rolled out its personalized Wrapped 2025 in India, giving users a quick look at the music, podcasts and audiobooks they spent the year with. According to Spotify, Arijit Singh topped India's chart as most streamed artist for the 7th year in a row, followed by Preetham and Shreya Ghoshal. And another highlight is that romance continued to dominate listening habits across the country. Sayyara by Tanishq Bagchi emerging as the most streamed album in 2025, followed by Ashiki 2 by Mithun in second place for the second consecutive year. With that, viewers, it's a wrap on this edition of Market Express, and stay tuned to NDTV Profit for more news and updates.
Woo! 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are Are you ready for the best show in town? NDTV Golf Pro-Am. We are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
Is a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
Over 400 Indigo flights cancelled in 3 days. Aviation Minister Ram Mohan Naidu calls a meeting with all stakeholders at 4 p.m. today over Indigo flight chaos. Indigo denies any probe information, claims that DGCA has sought information on flight cancellations only. Russian President Vladimir Putin will arrive in India today at 6:30 p.m. PM Modi and Putin bonhomie is in focus today. According to Bloomberg sources, ahead of the visit, India clinches a $2 billion Russia submarine deal after nearly a decade of talks between the two countries. Russia's largest banks, Sberbank and JSC First Asset Management, have introduced a new mutual fund, First India, offering investments linked to the performance of the Nifty 50 index. Market recovers nearly 100 points from the day's low. Nifty closes above the 26,000 mark, snaps 4-day losing streak. TCS and SBI Life Insurance gain the most in Nifty. Benchmark indices outperform broader market indices. Rupee closes above 90 against US dollar, ends 21 paise stronger at 89.98 against the greenback. Big huddle on Vodafone AGR. Cabinet Secretary to review relief plan. Finance Ministry and the Department of Telecommunications officials meet on Vodafone Idea AGR demand. DOT's fresh relief proposal is on the table. Meesho IPO day 2, overall subscription over 5 times. However, retail investors lead with over 7 times subscription on the second day. Big development after crackdown on online gaming. Dream11 exits gaming segment, enters new venture of sports entertainment, aims to become second screen for live sports viewers. Dream11 to go live on App Store, Play Store in the next 24 hours. Hello and welcome viewers. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we'll be taking you through some of the major updates when it comes to national, international, as well as news related to markets. But on to our top story this evening. It's chaos in the skies and panic on the ground. Indigo, India's largest carrier, has cancelled over 180 flights across Mumbai, Delhi, Bengaluru and Hyderabad, leaving thousands stranded and desperate. On-time performance, which is also called as OTP, has crashed to just 19.7%, which is a staggering fall from 35% the previous day. The airline struggles with crew shortages after the implementation of new flight duty time limit rules designed to ensure pilots get adequate rest. The DGCA has summoned Indigo, demanding explanations and mitigation plans. Meanwhile, at airports, nationwide emotions are boiling over. Passengers stranded for up to 14 hours, crying, pleading, furious, and sharing videos of long queues, confusion, and silence from customer support. Indigo says the disruption is triggered by a mix of tech glitches, winter scheduling, congestion, weather, and new crew rostering rules. The airline has promised to stabilize operations within 48 hours. But for tens of thousands stuck today, that promise might be too late. The question now is who takes the responsibility and how soon will the skies calm down? Let's go across to my colleague Danish, who joins us from the ground. Danish, what's the latest that you're gathering from the ground?
Well, right now I'm present just outside the Civil Aviation Ministry. Just an hour back, the meeting between DGC and Indigo officials ended. We are yet to know what exactly happened in that meeting, what were the directions that were given to Indigo from the DGCA. But after that, we came to know that India's Union Civil Aviation Minister, Mr. Raymond Realty, will be chairing a meeting at 4 p.m. With all the stakeholders. Well, this meeting has been called on after the entire Indigo incident, which we saw. And as you said in your anchor read, that thousands of passengers are stranded. Social media is full of a lot of sad videos of people that are waiting inside the airports from the past 10 to 12 hours. So this meeting has been called, and all stakeholders, and by that I mean the DGCA, BCAS chief, and officials from other airlines have also been called. And while we were standing outside, we saw officials from Air India, officials from Indigo, and other airlines also entering inside the ministry to just talk about that what exactly is happening. So sources are telling NDTV Profit that this meeting has been called by the minister to ensure that whatever Indigo is going through right now, other airlines don't have to go through that. And the minister just wants to ensure that there is less chaos at the airports, as Indigo has already announced that they would be looking at stabilizing the operations post 48 hours. So 24 hours of that has already passed. Over 180 flights today have been cancelled. So we are yet to know that what exactly the directions are from the government. And the government has taken a proactive step by calling this meeting, by inviting all the stakeholders to really understand that what exactly is happening. But if we look at the other airlines, none of the other airlines are cancelling their flights. It is just Indigo which has cancelled so many flights. The data that the government gave us yesterday, in November itself, Indigo cancelled over 1,200 flights. So this is a huge impact. And why do I say that? Because Indigo is India's largest airline, the largest fleet carrier, the one with the biggest market share, and Indigo always boasted of a very strong OTP performance. But the story is completely different from the past 2 days. 2 days back, their OTP was 35%. Yesterday's OTP of Indigo was 19%. So this is something that we haven't seen Indigo struggling through. And like I mentioned earlier, that the pilot associations have clearly stated that this could be an arm twisting act by the airline, because they said that if we look at the other airlines, everyone has their roster in plan, and if Indigo really wanted to get a lot of winter flights, then they should have submitted a proper plan to the government. So the reason why the flights are being cancelled is the fact that because of the new FDTL norms, they have to be followed. The pilots have to be given a proper 48 hours rest instead of 36 hours. So that is where a lot of chaos is happening. But we'll have to wait and watch, and we'll have to see that how things turn around after that. Whether after another 48 hours, whether there will be some kind of relief from for the Indigo passengers or not. But we'll have to wait for a few hours to see that what exactly is the latest directive from the government, and we'll bring you the latest.
All right, Danish, thank you so much for giving us the latest updates when it comes to this utter chaos that Indigo has been putting its customers through. But moving on, the airlines industry has been in a tizzy since the last 2 days, as Indigo has reported more than 300 cancellations. Cancellations, in fact, during November crossed 1,200, over 1,200, as Danish already pointed out. And in fact, Chhatrapati Maharaj International Airport witnessed 85 cancellations today itself. My colleague Ronit John gives a sneak peek into the current situation prevailing in Mumbai. Ronit, what are you seeing there right now, and what are passengers saying all about?
the major reasons behind these cancellation is that the FDTL norms have come into effect. These norms state that there should be longer resting period for the crew members, that includes the pilot also, and Indigo has failed to comply with all those norms.
No, flight got cancelled. We were supposed to fly by 1:55, but when we reached the airport only we came to know that flight is cancelled. We tried web check-in also, but that was not working.
I was supposed to go to Cochin and the flight was scheduled at 1:55 today, and now the status is cancelled.
So has airlines given any communication or has any rescheduling been done as to what is going to happen and all?
I had received no intimation from the airline side regarding the cancellation. I tried to do the web check-in a while ago, and then only I came to know that it is cancelled. And no intimation was done and no rescheduled notifications yet.
As of now, we haven't got any informations. We haven't seen any Indigo staffs also. So we are searching for Indigo office or Indigo staffs.
The Indigo sources, they were saying that a statement will be issued by around like 5 or 6 p.m. as to what will be the initial course of action. So through that, maybe the passengers will come to know that what are the steps that they have to undertake in the near future.
And viewers, our reporters are actually reporting from all across the nation. Delhi too, in fact, has been hit hard. 33 flights cancelled, hundreds of passengers still waiting without confirmed updates, and frustration growing every hour. Several have told us they've spent the night on airport floors. Let's cut across to Tanushka at Delhi airport tracking this developing situation. Let's take a look at what she's gotten over there.
We have a passenger here who's also faced the, aftermath of the entire disruption and cancellations caused by Indigo at this point. So tell us your name and which flight, what?
My name is Satif Sehgal and I am flying from Hyderabad to Delhi. Then I have another connecting flight from Delhi to Dubai in evening. So the problem was Indigo, I was waiting there till 7:40. My flight was about to leave that airport at 7:45, but they asked us to wait. Even more people were waiting there. All are affected, like those people and others also. So what happened, we waited for 1.5 hours, and then they said now it will be delayed by 20 minutes. So we asked, okay, just tell me whether it will be cancelled or in exact timing when I can go, or because I have a connecting flight. So they said we don't have any estimate. We don't have enough crew members with us. That's why flight is getting delayed. And then again I waited for 2 hours, without knowing my flight will be there or not. It will be cancelled or so. It created a lot of problems. Totally it is from 7:45 and my flight started at 10 from Hyderabad. So it is more than 2 hours.
And viewers, to help us make sense of this situation, I have with me Vipul Saxena. He's an aviation expert. Thank you so much, Mr. Saxena, for giving us your time and joining us at this given hour of the day. My first question to you would be, in 3 days, over 400 Indigo flights have been cancelled at major airports across the country. First, Indigo said that it's a tech snag, later blamed new roster rules and congestion. What went wrong, and is this truly just about the new crew rostering rules, or is there something bigger that's not being seen at the forefront of this issue?
I think firstly, let me make one very bold statement that globally, I think it's only Indian carrier operators who are really very arrogant and really careless about the regulations and also passenger comforts and passenger safety. You can see the example of Air India, which has flown one aircraft whose airworthiness certificate was expired and flew for 8 days. I mean, there's no compliance being done by these people. Similarly, this rule of FDTL, which in Indigo is giving reason now, it was supposed to be actually implemented from March 24. But that time, all the airlines lobbied and they said that we'll do it in phased manner. So first phase was supposed to be completed by July. And I think all of them complied with this. And this phase was supposed to be, last phase was supposed to be done from 1st of November, which was well known to everybody. And accordingly, they were supposed to have the number of crew, number of pilots, cabin crew and everything, available at the right time. This most surprisingly, what I feel is that for winter schedule, they are supposed to give their planning to DGCA for approval in the month of September. And at that time, they were supposed to ensure that for the winter schedule, they have number of pilots and engineers and also cabin crew available. So I think the plan which they given to the DGCA was a misleading plan. And DGCA probably trusted them being one of the biggest airlines and a big organization. So I think this needs to be investigated and some stringent action is to be taken against Indigo. Otherwise, things will not improve. They will keep violating laws and rules, and only suffering party will be passengers. Because this 48 hours, what they're talking about is unbelievable. It will never happen because the number of flights which have been cancelled over last 2 to 3 days, what will happen to those passengers whose flights have been cancelled or rescheduled? In my opinion, it will take minimum 10 days to recover from the situation, only when they really have number of pilots available.
Mr. Saxena, then are you blaming poor planning, non-compliance and a weak way of handling the entire situation for the chaos that Indigo is putting its customer through? And now that the DGC and the Civil Aviation Ministry has stepped in, how did it spiral so badly before action was taken? Does this point to a bigger gap in airline regulation or crisis planning?
No, this is, I think, as I said, totally careless attitude towards the regulations and also passenger safety, because as per the new regulations, airlines are supposed to have more number of pilots for the flight schedule for winters, which they have given to DGCA. DGCA assume, because when they give schedule in the month of September for winter schedule, it is on the basis that they will have sufficient number of pilots and cabin crew available to operate these flights. It is a basically trust between the operators and between the DGCA, and I'm sure airline knew about it, that they will not have these numbers, but probably they thought some kind of lobby will work out. They will get some more time, or maybe when the chaos happens, automatically government will give some more time for them to comply with this. I think this was a very, very arrogant approach and very ruthless approach towards the passengers, and that's what I would say. And in last 2 days, I got the information the DGCA has really deployed their officers to see that passengers are not at discomfort. I got so many calls from passengers that they've been stranded for 6 hours in the airport. No cancellation, no care being taken as per the regulations of the DGCA. If the flight is delayed or cancelled, what kind of care is to be taken by the airlines? No action has been taken. Even rescheduling has been done for 2 days, 3 days and all, mercilessly.
Okay.
So I think unless government comes out heavily on Indigo, no message will go to other airlines.
Mr. Saxena, the thing is that the magnitude of the problem is huge. Indigo almost operates about 2,200 to 2,300 flights on a daily basis. It's one of the most economical flight carriers in India. It's the most widely operated domestic airlines in our country. And when such a situation happens, there are a lot many people on stake. What can, according to you, be done to prevent such large-scale disruptions in the future? And I'd also like you to comment on an obvious question that comes to my mind is, if Indigo is blaming the new roster format for pilots as one of the reasons behind this lag and the rescheduling and the cancellation of flights, what was the situation before? And were pilots not being given enough rest at all?
See, India was not following the international norms earlier. They were giving 36 hours of rest to the pilots, and also a number of night landings were more. So all those now, as per this new regulation which came into effect from March 2024, is aligned with the international norms, which all airlines across the world are following. And by now, even Air India and SpiceJet also have implemented this norm. It's only Indigo which is violated, in my opinion, because no other airlines is facing this problem. I have not got any call from Air India or SpiceJet or any other airline or even Akasha that their flight have been cancelled or rescheduled because of crew problems. It's only with the Indigo. So Indigo has been singled out clearly that they have taken things for granted, assuming that when the chaos happens, government will give some more time, which is not the case.
Okay, all right. Thank you so much, Mr. Saxena, for giving us your time and helping us make sense of the situation. As you said, the high-stakes meeting is on and we'll have to see what comes out of it. But moving on, viewers, it's a big day for India's geopolitical front as Russia's President Putin has departed for his 2-day visit to India. He is visiting at the invitation of Prime Minister Modi for the 23rd India-Russia Annual Summit. This is his first visit here since the Ukraine conflict began back in 2022. So this is a visit after 4 long years. Just ahead of the visit, though, India and Russia have finalized a landmark $2 billion deal for the lease of a nuclear-powered attack submarine. Under the 10-year lease, India will receive an advanced Aquila-class vessel, larger and more capable than the 2 INS Chakra submarines previously leased from Russia for training and operational development. In another landmark move, Sberbank, Russia's largest lender, and JSC First Asset Management have rolled out First India, the country's first mutual fund giving ordinary Russian investors direct exposure to India's booming stock market through the Nifty 50 index. Moreover, 10 intergovernmental documents and more than 15 agreements and memorandums between commercial and non-commercial entities of the two countries are being prepared for signing. Going forward, intensifying trade and economic relations has been identified as a priority area with a target of increasing bilateral trade to $100 billion by 2030 for both these nations. Let's now go across to my colleague Gauri Dwivedi for a heads up on Putin's visit.
The president will be here in just about 3 hours. He will be here for the 23rd Russia-India summit that will take place. There will be a dinner that will be hosted in his honor by Prime Minister Modi today in the evening. And the formal set of engagements begin from tomorrow morning. There will be a ceremonial welcome. And there will also be a visit, of course, at the Rajghat. And the bilateral discussions will take place at the Hyderabad House between Prime Minister Modi and President Putin tomorrow. And there really is a lot that's really on the table for the two leaders and for the two countries. From energy security to food security to agriculture and, fertilizers. Those are really very important aspects. Not food security, but agriculture and fertilizers are the other aspects of the discussions that will take place. And also trade per se as well, Gargi. There's been a lot of focus about how much oil India imports from Russia, but there is now a growing consensus, especially both in India and Russia, that this trade needs to probably be more balanced, in which case India's exports to Russia, particularly for pharmaceuticals, could really be one of the most important aspects that could come up for discussions. Besides that, defense could really be the big highlight. It continues to be the backbone of the India-Russia relationship and is likely to get a fresh fillip tomorrow as well, when discussions will feature around India's purchase of S-500 that's being discussed amongst several others as well. So all in all, there's a lot lined up. The India-Russia relationship itself is extremely holistic in nature, covers all gamut of a bilateral partnership, from energy to trade to civil nuclear to, of course, fertilizers as well. And all that will be important even as the world watches this crucial meeting.
NDTV also interacted with Daria Sharsovia, our own reporter from Red Square, Moscow. The subject varied from how Putin's visit is being projected in the Russian media, the importance of our ties with the Kremlin, the top priorities of Putin, and a lot more. Let's listen into a brief snippet from that interaction, especially where she talks about how Russia sees this as a strategic partnership. Take a look.
Well, it is a strategic partnership. That's how the Russian president himself has described the relationship between Moscow and New Delhi. And this is the way that the Russian media are portraying this all-important visit. That is also the beefing up of the relationship with the long-standing partner, because Moscow has been saying that its ties with India go back decades, and those are decades of friendly, amicable, and strategically important relationship that the two share. So the Russian president will be in India shortly, and for this visit, Moscow has been preparing for quite some time. They are expecting to make sure that they expand cooperation in different areas, including defense, including military cooperation, but also, obviously, paramount sector for Russia, energy. And they will be trying to make sure that their trade portfolio is much wider than just that focused on energy.
And speaking at the India-Russia Business Forum, Commerce Minister Piyush Goyal highlighted the various Indian sectors that could open up to Russian demand. He also spoke of our skilled demographic dividend, saying that India's workforce can fill Russia's 3 million talent shortage. Let's listen into that portion of his comment.
Russia has a huge demand for a wide range of industrial goods, consumer products, presenting multiple untapped opportunities for Indian businesses. Many sectors with a strong potential would include, as you were mentioning, the automobile sector, whether it's cars, tractors, heavy commercial vehicles, electronics, smartphones, data processing equipment, heavy machinery, also a demographic dividend. The young, hardworking, talented, skilled men and women can fill Russia's large 3 million talent shortfall that I'm told.
And viewers, when I started speaking about Putin's visit to India and the significance of this crucial meeting, I also spoke about a landmark move. Sberbank, Russia's largest lender, and JSC First Asset Management have rolled out First India, the country's first mutual fund giving ordinary Russian investors direct exposure to India's booming stock market through the Nifty 50 index. To help us understand more details of this very fascinating development, I have with me Jasmeet Singh Ghai, my colleague, joining us live from the newsroom. Jasmeet, it's a clear indication of their confidence in our Indian stock market. What can you give us?
100%, I 100% agree with that. Now, if you look at something like a Sberbank being the largest bank of Russia, coming alongside with the asset management company to launch India First Mutual Fund, clearly indicates how confident they are in the Indian industry when it comes to the stock market. Now, well, this particular move will give the access to the Russian investors to directly get an easy access towards the Indian stock market. While with this move, the particular mutual fund will call as First India, which will easily cater to the top Nifty 50 companies of Indian companies. If you look at the overall aspect, the NSE supports plans to boost this further with the clarity and easy market access. This not only ends there, but it also will create a simple bridge between India and Russia in terms of the financial understanding. So all in all, we see positive moves coming in ahead of Putin's visit to India. It's wait and watch to see what more comes up during this particular visit.
Okay, thank you so much, Jasmeet, for giving us that perspective on this mutual fund that would open up to Russian investors via the Nifty 50 index. But viewers, the India-Russia visit, all updates, whatever you would want and whatever is important, you will get them here only at NDTV Profit. And of course, we will line that up with other things as well. So stay tuned, keep watching Profit 360 as well as NDTV Profit throughout the day. And thanks for watching.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The rupee has weakened past 90 rupees per dollar. What is the RBI has to say about the rupee under the current context?
We are trading above 90. Our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And today, Anushi, the company is a Raymond Group company, but it is a demerged version of it. The realty business is coming in. And largely, there is no major coverage from the analyst community as well. And a lot of our viewers actually wrote to us and they stated that let's figure out what is this company all about. But there are a lot of questions about this company. But after its listing, Anushi, it hasn't been a great returns for the shareholders, of course, who are holding in the Raymond in that demerged basis. But let's put out the questions, what we want to actually know about the company. The first question is, which categories is the actually company focusing on? Is it the mass affluent or is it the recently announced luxury segment? They have a massive project in Thane, that's something which we'll be looking out for. And will this expansion involve non-MMR markets as well? MMR is the Mumbai Metropolitan Region markets, to simplify for our viewers, and how the demand queries are actually coming up for these new projects. Interestingly, Anushi, the third quarter is a very heavy quarter for realty space as well.
A lot of launches.
Yes,
yeah.
Exactly. Launches, pre-sales, which you track. Land monetization plans ahead, that's something which you'll be looking out for. Will they go for JD/JV on an asset-light basis? And the timeline for the promoter press release, that is an overhang in this stock as well. And cash flows also, we saw in H1 numbers that got impacted, maybe because of upfront higher costs in the realty space. So these are the key questions for this company. Very less tracking of the company. That's why I think we should give a 360-degree view to our viewers for KYC. So Anushi, what is it about the company totally?
On that note, let's start off with what's happening with the company. So if we just talk a little bit about it, it's mainly its presence is in the MMR region, and it's a real estate development company of the Raymond Group. You know, Sharad just spoke about the recent demerger which took place. That was Raymond Lifestyles as well as Raymond Realty now. So it was demerged from the Raymond Group on 14th of May onwards, and then it subsequently got listed from July onwards. So since then, we'll be tracking its performance and how the financials of FY25 have also shaped up. But just a little bit about the kind of portfolio that the company has. Now, it has about 100 acres of land parcel in Thana. If you take the whole long-term portfolio consideration of the gross development potential size that we are looking at, 40,000 crore is what we are seeing. Thana land parcel of 100 acres. Along with that, they've signed joint development agreements as well. So this adds up to about 25,000 crore. JDA opportunities adds up to about 14,000 crore. So cumulative 40,000 crore is the kind of mix that we are looking at. Now, do note that currently of this 100 acres land which is there, 55 acres of Thane land is currently under development, of which if you look at the realization part of it, revenue potential is around 13,200 crore, of which so far 8,200 crore have already been sold. While if you look at the remainder, from that they have collected 6,300 crores so far as well. So, you know, FY26, the second half, the FY27 picture is an interesting scenario, considering that they have this huge land parcel which is already in place. With the JDAs, they have a development potential of around 14,000 crore. We'll see a couple of launches coming in these next 3 to 4 months, in the 6 to 9 months period itself. And these are 3 to 4 launches that we are seeing across Bandra and other key regions in Mumbai as well. Balance will be launched in the next 12 to 18 months is what we are looking at. So if you just take a mix of what's happening, your Bandra, Mahim, Sion and Wadala are some of the key areas where these JDAs are coming in picture. And if you are looking at that, all of these are located in MMR region. They do not have a presence apart from these particular markets that we are seeing. In terms of the mix also, while it is in premium and luxury, I want to just point out how the own land bank is shaping up and how the JDA is, since, you know, JDA is a rather asset-light model that we are looking at that. So current FY25 and 28, if you just pull up that one, from a 78% mix, now it is estimated that that would be 50% or odd so in FY28, while JDA contribution from 22% will move upwards to 50%. Now, this is the management's aim to bring this ratio to 50-50. So this is an interesting part that we are looking for the company. And with these key launches planned in the second half, how pre-sales and thereof the cash flow shape up is something that we should be watching out for, right?
Yes, Anushi, the expectations is a very important portion, she pointed out. But Anushi, the entire KYC segment, there are 8 parameters where we judge the company. But remember, it's not fair at times because the company's history itself is on a very short notice and there is a literally zero analyst coverage in this segment. But nevertheless, our format of the show is first we take in the income statement, operational parameters, especially for a real estate company. We are also taking in the balance sheet and the cash flow. These are the 4 most important parameters in the financial segment. Apart from this, the shareholding pattern, how it's actually panning out post the demerger, and the street cred, how the stock has reacted. It's a very short term basis, but nevertheless we will take them in. Valuations is also there, and overall outlook, that is very much important, that we'll be judging the company on. So 8 parameters where the momentum would be coming in for. But Anushi, starting with income statement, what are you gathering from here? I think H1 numbers is something which you'll be looking at now.
Absolutely. So, you know, before I talk about the income statement, I want to point out to the key operational metrics because, you know, with real estate companies, we have pointed out that there's lumpiness in terms of how the revenue shapes up, how that is recognized. So if you just look at the pre-sales number, now by the end of FY25, we are looking at a pre-sales of 2,300 crores, showing about a 3% of a growth. This is in comparison with a 67% or a 40% of growth figures that we've seen. So how H2 will shape up is something that we should be watching out for, because even in the first half, there was a dip of around 35%. So pre-sales for these last 2 periods have been on the muted side, but the management is quite optimistic on achieving that 20% of pre-sales guidance. So that is on a positive that we are seeing. Collections also, while they've maintained a 21 to 22% of a growth in these last 2 fiscals, this time the collections were also down about 18%, but they expect recovery also in this particular metric. So considering all of these parameters and a huge launch pipeline that they anticipate in the second half, we've given this a neutral rating. Do note that the 4-year pre-sales CAGR that stacks up to about 55% and 4-year collections CAGR is 64%. So the history has been rather on the positive side. It's now the expectation and execution which will be a key monitorable to watch out for, right?
Thank you very much, Anushi, for that. And it's a very important thing you stated is first, let's just put in the operational parameters. Then I think I'll just discuss the income statement and revise it once again. So already a neutral rating coming in from Anushi when it comes to the operational parameters. And that's the first thing to look at, not the income statement. Now let's look at the income statement. The revenue growth over here, that's of course 1,000 crore plus in H1. And EBITDA numbers are also there, but largely we do not judge a company in terms of these numbers in the real estate space. Net profit for all companies, it matters. It's decent, it's around 77 odd crore rupees, but the company needs to have a long history for us to judge as well. But net, it is decent, and margins 22.9% ahead of this demerger. Now you see that's actually coming down, so that might be a cause of concern. But nevertheless, let's give it more time to the company as well. So it will be a neutral rating coming in from my side.
So on the margin part, you know, there is expectation that this would scale back upwards to 20%. So that would be something that, you know, the street should be watching out for, whether this 20% number will be there in the next FY27 figure that we are looking at. But moving on to balance sheet now, if you just look at equity and other equity, of course, there would be divergence in terms of how these two numbers shape up, considering that there was demerger, so there would be new shares issued. So that, taking FY25 and H1 in comparison on a like-to-like basis would be unfair, but we'll just point out how the H1 has shaped up. Other equity stood at about 1,200 crores, almost up to 1,300 crores, while borrowings are 564 crores and cash in bank at 214 crores. So this, considering the first half, remains on the healthier side. So it's the future periods that we should be watching out for. Hence, considering the first half performance, considering the debt to equity level, which is on the lower side that we are looking at, we've given this a thumbs up.
Okay, a thumbs up coming in for the balance sheet. Cash flow, very important trigger for a real estate company. But of course, we see the history is less, but it's on the lower side. Operating cash flows in H1 was down almost 300 odd crore rupees. Even the net cash flows is there just a mere 53 odd crore rupees, and we have seen that these cash flows, there's of course a lumpiness involved in that as well. Maybe initially the JV expenses which the company might be undertaking, that's why the hit is coming more on the cash flow. So because of that, based on the current numbers, I will give a thumbs down for the cash flow segment.
Okay, so that's on cash flows is what we are seeing. But moving on to shareholding pattern now, we'll have two periods of data as of now. Promoter holding remaining constant at 48.9%, while FIIs have offloaded some bit of that share that they had from June levels. We're looking at about 11% stake as of the second quarter end, while DIIs have about 4.5% of stake, and public holds 35% of overall value to the company, which is there. Hence, considering that there's limited data as of now, we'll be tracking for upcoming quarters as well on how the FII and DII mix shapes up. We've given this a neutral rating.
All right, neutral rating coming in for the shareholding. But overall, let's look at the street cred. Post its listing after the demerger, there hasn't been much returns coming in for the investors. Last 1 month stock is down 19%. But the cause of concern for me, since listing is down almost 46 odd %, and that downtick is something to be actually concerned about. Whether is this a wrong pricing which came in during its listing, or there's a lack of analyst coverage. A lot of questions do come in, but as and when company comes out with its own investor presentation, the management is going to talk with us in some time, then we'll get more clarity in as why there is so less coverage in this counter as well. But it has been on a free fall, so that's a cause of concern for me. So I will be giving a thumbs down for this category.
Okay, coming to the valuations now, what we've done is, while price to earnings, we've derived at a multiple of around 44 times, and this is based on the 12-month trailing EPS which is there. It seems like a metric that we should be constantly watching out for. It seems on the higher side though. So how this shapes up, considering that there's lumpiness in terms of where the income statement numbers are, we've given this a neutral rating as of now. So that's on the valuation part that we are looking at. So but coming to the outlook forward, which is there now, here is the interesting story. Firstly is the 20% of pre-sales growth expectation which is there. Along with that, now the mix in terms of joint development agreements, that is expected to be 50% in this next 2 to 3 years. Now this is an asset light model that we are looking at. So how the financials will improve with this higher mix is something that should also what we should be seeing. If we just talk about the planned launches which are there, now the company expects about 2 new launches on its own land, which is the Thane land parcel that we've talked about. Along with that, there's 3 to 4 new JDA projects which are coming. So if you just take a cumulative figure for the second half itself, it's a 5,000 crore of gross development value that we are looking at. And this is with the expectation that going forward margins will stabilize at 20% or so, which is a high uptick that we have seen from the FY25 and first half levels, going back to its previous trajectory which was there earlier. But along with that, they're also seeing that the cash flows, which we talked about earlier, that being positive as well from the second half. So that's the overall outlook that we have for the company. It's a neutral that we've given, right?
Sure. And let's just revise the overall standings, how the KYC ratings stand, and largely it has been neutral on the income statement and the operational metrics, which Anushi pointed out. Balance sheet was decent, but cash flows is a cause of concern is coming in. And let's pull out the shareholding and the valuation neutral here. Street cred we have given negative because there is a massive wealth erosion post its listing, and that's a cause of concern. We'll be dealing with the management. Outlook, it's neutral to positive overall, but net it's 4 out of it is generally historically we give that's an average number coming in for the company. But of course there was a big conversation you had, Anushi, and that was with Harmohan H. Sani. He's the MD and CEO of Raymond Realty. Please listen in.
Let me start off by understanding this new product launch or new project launch that we are looking at. If you can give us more details of this.
Sure. So this is a project which we are launching, which is in the luxury segment. The name of the project is Invictus by GS, and the location is BKC Bandra. This project has a total revenue potential of 2,000 crores, and it will be executed over the next 4.5 years. We are launching it today. The work at site has already begun, and we are geared up for welcoming customers over there. We've already seen a very good initial response. This is going to be premium 3-bedroom, 4-bedroom, and even higher configuration, which will be available for sale. And good inventory with the excellent location. And this is what we have currently launched, and going forward we would be launching more projects also, since you mentioned our pipeline. So outside of Thane, we are launching another project in Wadala soon, end of December, beginning of January. That launch will happen. That's also a large project with revenue potential of about 5,000 crores of top line. And after that, in Q4, towards the end of Q4, we have another project which is in Sion that will be launching. That is with a revenue potential of about 1,700 to 1,800 crores. That's a project called Address by GS. Wadala will also be an Address by GS product. Apart from that, in Q4, we are also launching projects in Thane itself. So in Thane, we have already in H1 launched one Invictus by GS, one Address by GS. And in Q4, we will be launching a 10X product, which is a 2-bedroom community that has a revenue potential of over 1,000 crores. And then we are also launching a retail-focused high street inventory in Thane, which is Park Avenue. That there also the revenue potential is approximately about 1,000 crores. So in all, between now and end of the year, we'll be launching 3 projects outside of Thane and 2 more in Thane.
So Mr. Sani, just want to understand, while the overall potential that you've given is around 40,000 crore, and I'm assuming this is a 5-year perspective that we have for FY26 and 27, what's the kind of overall gross development value that we are seeing, and how is execution going to shape up is also another question that I want to understand, considering that you're also targeting for an annual run rate of around 4,000 crore of revenue. So help us with that as well.
So what you're referring to is the pre-sales number.
Right.
So if you see last year we did pre-sales of approximately 2,300 to 2,400 crores. It's 2,300 some odd number. And what we've given a guidance that we will be giving a 20% growth over that, which takes the current year close to 3,000 crores, and we are on target to achieve that number with all the launches that we have planned. And this is how the entire year's planning was done by us. So in H1 we did pre-sales of about 760 crores, and it is going to be heavy in H2 for us. But that's how it was planned. And going forward also, FY27, if I see, there also we are looking at a 20% growth because with all these projects which we would have launched by end of this year, that growth would be more or less locked in because we will have enough inventory available in Thane and outside of Thane to give us that kind of a growth number. And the 4,000 crore number that you mentioned that we will achieve, it will be towards the end of 28 or beginning of the year after that, we would have hit that number if you take this 20% growth run rate that I mentioned.
So just want to understand on that aspect, while you're maintaining a 20% of a booking growth, that's the pre-sales growth that we're looking at, the first half, we are looking at a decline of over 35% or so. Is it on the basis that most of your launches are skewed towards the second half that we are seeing, or were there any other concerns like how other real estate players have also pointed out with regards to regulatory overhangs being there, or there would or pricing now playing into a factor which has led to that softer acceleration? Because across industry, if we see, there has been a slowdown in terms of whether volumes have been concerned. So just want to get the overall industry perspective as well, and how you are positioned for the second half, and even if you can give us a picture for FY27 as well.
So, for us, the situation was quite unique because we didn't have enough inventory to sell. So, we did not see any hiccup or delay as far as the demand front is concerned. In Thane, we had such a bumper Q4 of last year that we didn't have enough inventory available for this year to show a big H1. But having said that, it was also planned in that manner because all our launches, when we see outside of Thane, because of the way they were lined up and how we had signed those projects, they were scheduled to launch only in H2. So, we have not experienced any regulatory overhang or any pricing pressure in any of our projects also. We've underwritten these projects at very fair assumptions, keeping in mind what the market is in terms of its cycle. So unless we are compelled to sell at a very high price and then you see pricing pressure, I don't think we are in a situation like that. Can't say much about generally what the other players are experiencing. But as far as the market is concerned, I have not seen any evidence of pressure either on pricing or on volumes. When you talk about the growth number for us, for H1 as compared to last year, in our industry, you can't really compare quarter on quarter because a lot is dependent on when the launches are happening for each project, because you see a significant bump up in sales when the launch takes place.
Understood. So it's a 20% plus of growth that we can expect for FY26. And from what I'm hearing from the commentary as well, there's a lot of emphasis on Thane market, right? So just want to understand what's the kind of pricing growth that you're seeing there? What is making you so excited about this particular region? Are there any other regions like Thane as well that you're going to be focusing on with new launches there as well? If you can give us more perspective on that as well.
Yeah, so Thane has been our home ground because we started our business in Thane, that's legacy land. So naturally, it's a 100-acre plus parcel. So there you will see a slew of launches over there from us. It's a very, very strong market. Still one of the best markets in Bombay in terms of the social infrastructure and the affordability factor as far as pricing is concerned. It has a very cosmopolitan crowd, so it attracts all kinds of people, not only one segment. So it's a very strong, very deep market. So naturally, we want to stay focused on that as one part. The other part that we are focusing on is in and around BKC. We have taken a very, very strong position in the market. So all our projects, if you see the various new projects that we have signed, are all creating a ring around BKC. So the one we are launching today, Invictus by GS, is right next to BKC. Then the Wadala one, which we are launching, that's another big launch this year. That is also within 10 minutes of driving distance from BKC. The Sion is literally walking distance from BKC. You just have to cross the railway line and you're there. And now with the connector from the Eastern Express highway straight landing into BKC, it's a very, very prime location. And the other projects that we have signed, which we will launch next year, also are right next to BKC. So these are the two primary areas that we have focused on, looking at the segment that we want to serve, which is the premium segment to luxury segment.
The management is very upbeat about BKC and Thane regions, and an important disclosure is also coming in from the company. Hardly tracked counter, tested the patience also of the investors. But let's just pick up the key management takeaways, Anushi, from this discussion and which you had done. They are going to launch 3 or more projects outside of Thane by year end itself. That's pretty interesting on that. But the numbers front, I think we should tell our audience what they're actually planning, a 20% odd growth.
Yeah, so 20% is the kind of pre-sales growth that they're expecting, and this is with margins also inching upwards to 20% or also that we are seeing. Apart from that, we're also looking at an important piece is that now there's no regulatory overhang, which has been a theme for the south-based players that we are seeing. Along with that, even pricing pressure is something that has not been a concern for the business, right?
Yes, that's a qualitative statement coming from the management, and net, we would say that there is a positive commentary coming in, but we need to give the company more time so that more data comes in and then we can give them proper ratings. As of now, it's 4 out of 8 in KYC. That's all for the show today. Stay tuned to NDTV Profit.
The rupee has weakened past 90 rupees per dollar. What is the RBI has to say about the rupee under the current context?
We are trading above 90. Our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. When it comes to investments, often you look at the returns, but you look at the returns before you consider tax and certainly before you consider cost. And this is not something of a criticism, it is just the reality of how most people approach their investments. But is there a question to be asked here? Can you construct a low-cost, high efficiency portfolio using the passive route? Some people have said yes, but let's dive a little deeper into that question. Joining me to talk about the options available to you in the Indian market is Prableen Bajpai, the founder of FinFix Research and Analytics. Prableen, thanks so much for taking the time as always, and good evening to you. Let me ask you this. Has the passive industry in the mutual fund space come of age? And the extension to that is, are there enough options available to construct a fully passive portfolio?
Hi, Alex. Good evening. With more than 650 schemes, I think there are enough options for available to investors to actually create an all-passive portfolio. If you're looking at the AUM industry-wise, passives are now at 17% of the overall industry of mutual funds, which is, I think, quite encouraging. The overall AUM currently is around 14 lakh crores, which I think has increased tremendously, especially since 2019. It's almost 6.4 times in rise in the assets which are held. So overall, absolutely a lot of choice available to investors, especially post-COVID, Alex. We've seen the rise in the number of NFOs which were launched, which are catering to the passive space. We've seen passive fund launches, not only in the equity space, but debt, gold, Silver is something which is, relatively recent. Of course, international investing. So I think across regions, across market cap, across different categories, there is a huge variety. And there's an interesting recent survey by Motilal, which actually gives us an indication of how and where passive stand in mutual fund portfolios of investors. And this survey is based on roughly about 3,000 representatives. So it's a sample size of 3,000 and about 120 wealth advisors, including SEBI registered advisors and distributors. And that says that 68% people who were surveyed, they actually say that they have one passive fund in their portfolio, which is very interesting. And 76% say that they've heard of ETFs and index funds, but which also leaves us with 24% who haven't heard of passive investing. So I think, yes, there is a rise, and it's no ways a fringe or a very, it's not on the sidelines, it's becoming mainstream. So passives, I definitely here with the bank and continue. I think it will just get stronger, the inflows and the presence in portfolios.
Yeah, let's talk about some of those options in the equity space, right? Because the question a lot of people have is it representative of wide enough basket? Your traditional options that people have gravitated towards is the Nifty 50 or the Sensex, and now increasingly the Nifty Next 50 is what people are going towards. But what about the broader markets?
Absolutely, Alex. There is enough availability in terms of schemes which cater to not only the large caps, which is the Nifty 50 and Next 50, but also the mid cap. In fact, within mid caps alone, there are 3 different indices which are now available to investors. One is the mid cap 50 index. The next is the mid cap 100 index, the Nifty 100 index, and the Nifty 150 mid cap index. So 3 within the basket of mid caps. And if we are looking down the market cap and we are looking at small caps, then we have the Nifty small cap 50 available. We have the Nifty small cap 250 available. And of course, it is also a small cap, but how it is categorized in terms of an index is the micro cap. So we also have the micro cap 250 index available. So I think enough availability. We have so many of these different beta strategies which are coming up. So I don't think there's any dearth in terms of availability of products. It's out there, but of course, how a portfolio needs to be constructed and whether an investor would stick to it, because there is so much of activity in the active fund space as well. That is a question, very important question.
So therefore, let me ask you about construction. And ultimately, we're talking about the pros and cons of having an all-passive portfolio. The big pro, of course, is the cost factor, right? And there could be a huge difference. You're talking about maybe a percentage point of difference between an active and a passive fund, right? But can you have a core versus satellite allocation that you arguably are able to construct with an active option? And here we're talking about core as in something that is stable, and satellite which will give you the alpha in your portfolio.
So core, Alex, we all understand that core and satellite together, which is, dividing your portfolio into 2 parts where, like you said, that the large part of your portfolio is the more stable options that you have, which is something that you can hold for the long term, 20, 30 years as well. And then the satellite is more of your tactical call, something that you would want to invest in and then eventually exit and, look at slightly riskier options there. So that's the satellite part. Of course, within passives, a combination of creating a core and satellite is totally possible, because within the core, we can, of course, add the mid caps, we can add the large caps, and to some extent, the small cap also becomes a part of your core, because in a very long-term portfolio, small cap should be part of the core. Along with that, I think commodities in form of gold and as well as, some debt products can be creating your core. And in the satellite, there are enough number of passive funds now which cover different themes. They are covering different sectors. For example, the defense index is there, bank index, there is the pharma index. So many of these schemes are tracking these different indices, whether it is the IT or even consumption for that matter. So there is definitely enough scope for any sort of a satellite and core portfolio to be constructed. But at the same time, Alex, because you just touched upon costs, and there is a huge variation in cost, because that does result in a compounding factor. But within, and we're only talking about direct schemes, so direct index and direct active funds, within those, the variation is really stark because, of course, any passive fund would bring down the cost because it's just about 10 paisa to 40 paisa, let's say. But within the actively managed funds, if we are just looking at the mid caps, the variation is like from, 0.30 paisa, 30 paisa to almost 2 rupee, 100 rupee, basically 2%, that means. So not necessarily that every index also will always bring in a very, very low cost. There are some actively managed funds also which are actually having a low cost. And I think in India, we investors, when they're looking at core and satellite, can actually look at a combination of active and passive as well to construct this sort of a portfolio.
Yeah, I mean, that argument is a strong one to make, particularly because you have schemes that are 60, 70, 80,000 crore in assets under management, and the requirement by SEBI is to have the lower expense ratio as you go up in the assets under management, right? So Parag Parikh, if I'm not mistaken, is over 1 lakh crore and therefore 0.7, 70 basis points or so. On the direct side, I'll have to check that. Maybe you can remember.
I think lesser than that, in fact, lesser than that on the direct side.
Yeah, so it's pretty low. All right, so the question therefore is, if you are to use passive even in your debt, and you mentioned silver and gold ETFs, should you do that?
So debt, of course, I think, Alex, target maturity funds are one of the best options to utilize when you have a you have the clarity that this is what I'm investing in and I need the money after 5 years or 10 years because you have a maturity date. So I think within debt, target maturity funds are a great space to be. There are more than 100 schemes available to investors. A bit of their charm is taken away by the change in the taxation, but I think they still become very remain relevant because there is deferred taxation. There is a lot of prediction in terms of what sort of returns you can get from the debt scheme. The expense, like you mentioned, is really low. It's just about 10 pesos, 15 pesos somewhere. So you still have liquidity. And the underlying holdings are mostly government securities, state development loans, and PSU bonds. So I think a debt definitely is a very interesting space. And you also have the without maturity sort of passive funds, which are the gilt funds, which are open-ended. And there is no timeline on the maturity and they're open, but they cover a certain period of the gilt holdings. For example, 8-year holding to 13-year holding kind of case would be there. And likewise for gold and silver. So for gold and silver, there is no active option as it is. So passives is the only way forward. But investors shouldn't jump onto it because, like gold and silver has really, really moved up so much that that requires a bit of caution that taking, chasing the returns.
Yeah, don't chase returns, but then this is something that you can fit into your portfolio construction for the long term. I do want to ask you about final strategy because there's also smart beta funds. Would that fit into your satellite portfolio? And if I were to ask you to construct a portfolio for somebody and you were to suggest options, not necessarily for everybody to do, and obviously everyone does their own research, how would it look?
So smart beta, Alex, I think that's a very, very interesting space. And what we do is that you apply certain filters to a basic index that we see on the news and we track is the Nifty 50. In the mid caps, we usually look at the mid cap 150 index. But let's say we apply certain filters such as momentum or quality value are applied. Then you have these variations. So the parent is like Nifty 50, but then you have offshoots where these variations are there. And these are smart beta strategies. So I think I'll say that smart beta strategies in certain cases can actually be part of your core as well. And I'll give you two examples. I'll give one example for the large caps. I would say that within the large caps, if you're exploring Nifty 50, and there you must look at the counterpart, which is the Nifty 50 equal weight, because it gives you diversification across top 50 companies, but in equal proportion. And in terms of returns, Alex, in the last 5 years, Nifty 50 has given us 12.58% returns. SIP returns I'm mentioning here. Nifty 50 equal weight has given us 16.07% returns. So it's a decent outperformance. And over 8 years, because the equal weight index is only 8.5 years old. So over 8 years, Nifty 50 has given us 13.69% returns, but equal weight has given us 16.65% returns. So it's a simple basic strategy to invest in the top 50 in equal proportion. And likewise, for the mid caps, you have the momentum index and the quality index. And again, their momentum index has topped. It has beaten the mid-cap 150 and the quality. There are times, different time periods, 5, 8, 10 and 15 year, and we have data up to 15 years there, Alex, where 150 and momentum have interchangeably done well. So if I have to create a portfolio for the very long term and it has to be all passive, and then I'll go with 4 schemes, I would go with equal weight index for the large caps, because it's a value centric approach. I would go add momentum in the mid caps, because then it's giving me exposure to the momentum strategy. For the market cap based strategy, I would go with the micro cap 250 and I will add gold along with it. So 4 schemes.
Fantastic. All right. And it's low cost. It's something that is holistic in the approach. And of course, if you want to throw in and you're focused on the low cost approach, you can throw in a few of the larger active managed funds which have proved their track record over a period of time. But do keep an eye on the cost as well, because that makes a big difference. And Prableen mentioned that the compounding over a period of time makes a huge difference, especially when you hit that 1 crore mark, which I hope a lot of you will hit over the course of the coming years. Prableen, thanks so much for taking the time. Pleasure speaking with you as always.
Alex, I'll just add one thing here, that while we, cost is a very important thing, but there's this advertisement which I want to mention, and it says that jab महंगे दाम वाली क्वालिटी सफेदी और झाग कम दाम में मिले तो कोई ये क्यों ले वो क्यों ना ले. So index can definitely fit into that definition, but there are for active funds, I think if they're able to justify the fee, then definitely I think it should be a mix of active and passive.
But for those people, probably the counter argument to that is that you have to pick and choose the active fund to win as well, right?
Yes, absolutely.
That is where an issue comes. And of course, that is why people come to people like you, distributors and advisors that give the right advice. But if you're doing it yourself and you want to erase that from the possibilities of the problem of choice, if you want to remove that from the equation, then passive is the way to go. Prableen, thanks so much for taking the time.
To come back to excise, the Central Excise Act will now back again get the cigarette items, and retaining largely the incidence of tax, we are imposing the excise on these demerit goods. That's the sum and substance of the story behind why now excise is coming in. So in general, I also want to highlight the fact, since the intent is not to tax tobacco and tobacco products lesser than what prevailed earlier, it's important for us and this August House to recognize the fact that during the GST period, tax on tobacco-related products, even with the cess being there, could not reach the benchmark which the WHO sets every year. Meaning, they have what is called as Tobacco Affordability Index of Tobacco Products. They have an index called Affordability Index of Tobacco Products. They monitor the rates which prevail all over the world and point out where the rate is well below the benchmark they set. And therefore they say you're making tobacco affordable, meaning people are not being disincentivized from buying cigarette unless you keep it at a certain level. And there are several countries which keep changing the tobacco rate, linking it to inflation, and even otherwise, annually they keep changing the rate so that the rate is itself a disincentive so that people don't end up buying more cigarettes, because now that it's become cheaper. And in that context, 80 countries revise tobacco taxes annually, as I said, linking to inflation and also looking at their periodic excise schedules. Australia increases tobacco's excise automatically by CPI plus an additional 12.5%. New Zealand does the same exercise plus 10%. Philippines, Turkey, South Africa, all of them also do an automatic escalating way of pricing tobacco products. EU member countries do 60% over and above the CPI. on a weighted average basis, and many countries do exceed 70 to 75%. So what we need to do in India is to see if we are making tobacco affordable, which we don't want to. We want to make sure there is a deterrent, and therefore at the moment, India's total tax incidence on cigarette is approximately 53% of the retail price, which is substantially lower than the World Health Organization's recommended benchmark of 75% of the retail price, or it is even more than 75%. So, as I said, many countries impose over the CPI 80-85%, 75 to 80%, and so on. So we want to keep that in mind, and therefore the rate fixation has happened, keeping WHO's benchmark as well, and making sure that we don't make cigarettes affordable. But here, there's one element, I think one of the honorable members has spoken in brief about BD, but I want to highlight the fact, sir, that whilst doing this, even BD comes back to excise, but there is no change in tax incidence of BD. Considering the fact that the workers who roll BD come from a lower economic strata of our country, we had made sure that nothing goes to hurt the livelihood propositions but of the BD rollers, but equally continuing with very many schemes which will give them health awareness. I'll read that out a bit to highlight, sir. When I say there's no change in the tax incidence of BD, I just want to put it on the record here so that honorable members will appreciate. In the current regime, which will continue till the end of this month because of the compensation cess, which is the scheme of things since 2017 when GST was brought in, the GST rate, as I said, on BD is 28%. And there is this NCCD, which is a calamity-based collection that we do. For handmade BDs, for every 1,000 units, we charge 1 rupee. If it is a machine-made BD, then for every 1,000 units, we charge 2 rupees and not more. Together with that, as I said, basic excise duty continued as a token gesture even during the GST regime, when the compensation cess was being collected. The central excise was kept at a very nominal rate. And how nominal is nominal? 5 paisa per 1,000 units. Not 5 rupees. 5 paisa per 1,000 units, which is man-made, and 10 paisa per 1,000 units if it is machine-made. So this is what prevails currently. Exactly what prevails now is what is going to prevail after excise comes into play. So the proposed regime will have BD at 18% as recommended by the 56th GST Council. That is why when the next generation GST was announced, a lot of people said, what have you done? GST BD rate was at 28, over and above that there was some cess, now minuscule cess, but over and above that, so 28% is the rate at which BD was and continues to be till 31st. But we had to move it along with very many items because 28 is not available anymore as a rate under GST. So every item moved to 18. Unless it was a sin item which went to 40. Cigarettes went to 40. BD did not go to 40. It, on the contrary, moved to 18 because there was no more 28. So from 1st January or whenever this new thing comes into play, in GST it will be at 18. So a lot of people question saying you've reduced the price because you've reduced the tax on BD. But that is because we didn't have 28, so it went to 18. The NCCD portion continues to be the same as 1 rupee for every 1,000 BDs, handmade, and 2 rupee for every BD for 1,000 units, if it is machine made, that continues as it is. And the basic excise duty, where it was 5 paisa per 1,000 and 10 paisa for per 1,000 machine made, will be at 10%. Together, the incidence on BD will be the same. It shall not worsen the situation, or it shall not have a negative impact on BD rollers. That's an upfront statement I want to offer. So now I come to specific points which many members have raised. I want to address them. Pramod Tiwari ji, while speaking, apparently has said that the bill is silent on tobacco farmers. And what will happen to the workers who are working in the tobacco related, in the tobacco cultivation and so on. And also he has observed that this is against devolution. I want to first correct this impression, sir. This is an excise duty. It's not a cess. We'll talk about cess tomorrow, day after, whenever it comes. But this is an excise duty. This excise duty, by the very nature of taxable pool, will join the taxable pool, and it will be devolved per the Finance Commission's recommendation to the states. It is not against devolution, it joins the taxable pool. That is one thing. Second, sir, there are several schemes from the government to take care of tobacco farmers. Now, this scheme has been on since 2015-16. It's called Crop Diversification Program, Rashtriya Krishi Vikas Yojana, and it runs in 10 states, major tobacco producing states, where farmers are encouraged to move from tobacco to other crops. I'll read out the states where this is happening: Andhra Pradesh, Bihar, Gujarat, Karnataka, Maharashtra, Odisha, Tamil Nadu, Telangana, Uttar Pradesh, and West Bengal. In all these states, has it had an impact? Yes, it has had an impact, because over 1.12 lakh acres of land has shifted from tobacco growing to other crops. And I'm talking about a period between 2017-18 to 21-22. So what are the crops to which they moved? Each state focused on its own area, but largely sugarcane, if it is an irrigated area, sugarcane, groundnut, oil palm, cotton, chili, maize, onion, pulses, and turmeric, if it is irrigated. If it's non-irrigated area, or if it is a state-specific subject, I'll read out the example of 3 states. Telangana tobacco growers moved to producing Bengal gram and chilies. Odisha, from tobacco, they moved to vegetable growing and maize. Karnataka, they moved from tobacco to soya bean and sugarcane. So, this move from tobacco growing is being encouraged, and 10 states have been given that attention through this program. As I said, more than 1.12 acres of land have moved from tobacco to other.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
We are trading above 90. Our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me. It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors.
Lawrence Belanco, technical analyst at CLSA, joining us this morning. Lawrence, thanks so much for taking the time. Pleasure speaking with you. Good morning. Help us understand how you see the latest data points that you're monitoring across the world. How important is this unwinding of the yen carry trade, and what are the key levels when you look at the Indian equity market?
Yeah, I mean, it's quite interesting as far as the yen carry trade goes. If we look at speculative positioning, it's nowhere near what we saw in 2024, where we saw that big unwind in the yen currency. So really what we focus on as first support for the yen is around the 155 area. But I think the important part is to take away that the speculated positioning is not as significantly short the yen as you were back in 2024. So there's less risk from that positioning aspect. As far as the Indian market goes, you know, we've been in this sort of grinding uptrend from the February-April double bottom pattern that we saw. We had an upside target of 26,300, which we've most recently met, and we've started to see a bit of hesitation and a pullback. But bottom line is we think the for global markets, that is, the 21st of November lows is the key pivot support area. And as long as price action across global markets remain above that lows that we made on the 21st of November, we think that there's still the seasonal strength to come through and likely a positive start to 2026.
Lawrence, sorry, just so that our viewers understand this correctly, you are saying that there is a possibility for Indian markets to show the seasonal strength in the month of December and start off 2026 on a positive note. Did I get that correct?
And that's correct. And, we had 26,300 as an initial upside target, which we met. Next year, we can see the market work our way towards 28,800 as the next objective above this 26,300 area.
A lot of people tend to look at the Sensex or the Nifty in correlation with gold and that ratio and how that does, and typically when it reaches certain levels, markets tend to outperform. Now in Indian markets, that is at a lowest level in a long time. Indian markets have consolidated versus other emerging markets actually doing well. Are we setting the stage for not just the start of 2026 to be good, but the rest of 2026 to be okay as well, Lawrence?
Yeah, so looking at our outlook for 2026, we see a bit of volatility come through the second and third quarter. Now, I think one of the potential positives for India and the broader emerging markets is that we continue to see weakness in the dollar index, and we're looking at the relative ratio of the EM versus DM ratio continuing to improve through 2026. So outside of some pauses and consolidations, we do think sort of the emerging market and the India setup is that we can trend fairly well through 2026.
Okay. Lawrence, good morning. Hiral on this side. Now, when we're talking about what you're tracking in terms of levels as well, there will be a couple of sectors that will lead this kind of rally. Overall, currently we are talking about auto metals, which is seeing a strong move. What are charts indicating? If you have to look at 2026, which sectors are which sectors are showing you strength?
Yeah, so definitely commodities. I mean, we put out a piece earlier this week just highlighting the broader commodity indices breaking out. And we've also looked at the metal space, metal miners globally breaking out. So there's some of the global ETFs that you can track with those breakouts. And we had copper break out to new all-time highs. We're getting upside target on the LME copper at over 16,000. For the LME aluminium contract, we're looking at an upside target there of 3,500. Palladium, another base breakout. So just repetitive breakouts coming from the commodity side. So we think the Nifty Metal Index can continue to improve through 2026 and just reiterate its leadership that you've seen in the second half of this year and a continuation of that into 2026. And the precious metals are likewise set to continue their uptrends. They've actually been the lead for commodities over the past 24 months. Silver broke out last Friday. You're looking at an upside target there of 65, and gold ultimately, while it's currently in a consolidation pattern since the October highs, this consolidation pattern that you've seen for gold should provide the platform for a move up to the 5,100 to 5,200 area. So broad-based momentum across the commodity spectrum.
What about financials though, Lawrence? And specifically, do you track Nifty Bank closely? The fact that it's hovering around that 60,000 mark and the sheer weightage that it has in the large cap index, I'm just wondering whether you think that there will be a resurgence for private banks heading into 2026.
Well, I mean, I'm glad you brought up private banks, because if we take a step back and we look at NSE banks, split between private banks and PSU banks, the banks index broke out in September, leading the Nifty's breakout above its 200-day. And it's still in a longer term uptrend. But really what the driver's been is the momentum shown in the PSU banks. So that's been the lead sector if you break down the Nifty Banks Index into those two separate parts. So SBI, Bank of India, Bank of Baroda, you've had strong trends there. We think that the private banks will get a chance to break out of their current consolidation patterns. If you look at HDFC, for example, you've been in a trading range for the past 3 months, and ultimately we think that does set up for a break to the upside. But currently the momentum is with the PSU banks, and if you look at the broader NSE banks, you're in an uptrend. And yes, we've got a longer term upside target of 37,000 on the Nifty, and we think banks will be an important sector driving the index up to that longer term upside target.
Lawrence, one question I have with you is in terms of what's happening with the dollar index. It's somewhere around that 99 level. Obviously augurs well when it comes to commodities and metals. From here on, if you have to look at copper, gold, silver, we are constantly at record high levels. Till what extent are you seeing strength in terms of levels if you have to track? And what should be that point where you would say, okay, this is it, from here on, it's time to book profits?
Yeah, well, so let's deal with the dollar first, because that's probably the biggest risk to the commodity trade right now. You'd need to see a close above 100 on the dollar index to suggest any potential weakness on the commodity side. But what we've seen since May is that you've had 3 separate rally attempts in the dollar index back to this 99 to 100, and we failed on 3 occasions. This week, you've actually seen the dollar index roll back from that 100 area. It's broken back below its 50-day. And our measured downside target on this breakdown is to 89 to 90, suggesting another 9 to 10% downside for the dollar index. And like I mentioned earlier on, what we've seen in the commodity side is strong trends and fresh breakouts. That momentum continues to confirm it. So, this is a place to remain long and even add exposure with copper's breakout this week in particular.
In fact, 3% overnight as well. And I love the title on the note, which is Berserk on Commodities. Pretty interesting. Kind of, you read that and the thought process independent of what individual levels might be. But just squeezing in one more commodity question, which is important from an Indian angle, Lawrence, which is oil. Now, do you foresee that to have some upsides from where is it right now, or is it subdued prices that we are looking at for oil?
Well, I think starting 2026, we still remain range bound. So the $70 to $71 area has been a major cap. It used to be a floor that sort of OPEC seemed to have cut production at that level. It is a level that we've seen OPEC increase production at over the past 6 months. So that is the sort of line in the sand. If you do get oil above 70 to 71, then yes, there is upside towards the $82 area. But what we've seen currently, it's the commodity that is subdued. And we're not seeing any significant pickup to suggest that we get an imminent breakout.
Lawrence, you've spoken about the dollar, and we started the conversation with the yen, but I wonder whether you have an opinion on the rupee, because we've hit that 90 mark, and we've seen a considerable slide in the recent past. Do you track the currency, and do you see any signs of maybe consolidation at this point, or further slide possible?
It's an interesting emerging market currency, because the majority of markets that we track, typically you need to get a strong EM currency showing inflows and outperformance in the equity side. The Indian rupee sort of has worked in reverse, that you've seen the slow, steady uptrend of weakness in the rupee versus the dollar, but it really hasn't affected or been a negative for the equity market and the relative performance for India versus the broader EM or even global benchmarks. The one thing that we would highlight on the daily chart of the rupee right now is that while we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90 and more of a consolidation pattern developing in the rupee between the 84, 85 being the bottom end and the top of the range between 89 and 90. So we wouldn't be chasing the dollar above 90 and would be looking for a reversal back into a holding pattern and trading range.
Okay, interesting. Lawrence, if I'm to summarize what we've said, and based on what the note that you've written or the recent notes that you've come out with, it seems to me that what you are implying is that 2026 may be a year of many things, but it's certainly a year promising to be for commodities. The strength continues, and likely that they will be the big winners, at least in the first quarter or the first half of 2026, and therefore that's where bulls could focus on. Would that be a fair assessment?
Absolutely. That's where we've seen the momentum pick up, and we've got the structures in place, in broader commodities. We haven't done anything since 2022, and that's where the momentum's picking up. Absolutely.
And Lawrence, because just one more clarification, sorry, just so that people get it right, there are various facets of commodities, right? Between precious metals, copper, zinc, some others, where is it that you see the highest delta playing out, if you will?
Well, this week it's really been the base metals, right? So Ali's continued the acceleration that we had in October, copper this week, and then base precious metals have been in the uptrend. They've been in for the past 12 months. We think that continues, but right here it is the acceleration that you've seen in the base metals, copper and Ali in particular.
Lawrence, my question to you is, apart from the sectors that we've already spoken about, pharma, FMCG, IT, three sectors, how are you expecting them to perform? Because mixed views coming in terms of IT. You have FMCG, which is still on that consolidation phase right now. And pharma has its own challenges, at least as of now.
Yeah, well, I think the fact that you range bound in all three of those make them funding shorts. If you look at it relative to Nifty, it looks like a place that you really have to be quite selective getting the right stocks, because the broader trends are they in a trading range or grinding lower slowly. So we think all three places are worth being underweight. If I had to single out one where you could try some tactical trades, it would be more in the IT space. You have seen some of the larger cap names show some slowing downside momentum, and you've seen a bit of a pickup in some of the mid cap names within the IT space. So out of those, let's say three underperforming sectors, IT would be top, but pharma and FMCG still look weak and a place to be underweight to fund your overweight positions.
Mid cap IT is where your bets could be. But thank you, Lawrence, so much for joining us on the show. Always a pleasure to speak to you about, and interesting to get you at a time when we're talking about Outlook 2026 as well.
Two very special guests. You could call them the UBS think tank, and they come to us in the month of December to try and understand how is it that they have looked at 2025 and what could be in store for an equity investor per se in 2026. Sunil Tirumalai of UBS, as well as Gautam Chowcharia join in. Gentlemen, both of you, thank you so much for taking the time. I really appreciate your time. And either of you can start. Maybe I'll go in an alphabetical order, and Gautam, I'll start off with you. How do you see the performance of equities and the risk to it from two or three factors? If geopolitics was the risk for all of 2025, suddenly the Japanese yields rising has become front and center of all conversation. Is that something that will eclipse most other risks to equities and risk assets for the near term?
It doesn't seem to be happening as we speak for the broader markets. For India specifically, I think I'll let Sunil answer that Japanese yield question from his EM lens. But from an India perspective, I think Indian markets this year have been boxed, so to say, in a triangle of strong retail flows, but also coinciding with huge capital raising and rich valuations in the context of fundamentals, and that boxing has continued being in that. So it doesn't come down much, but it doesn't also go up in absolute terms. What it's also meant is that India has underperformed the rest of EM because we saw strong earnings momentum in the rest of the EM, especially the tech-driven sectors. Now, whether this changes going ahead or not, look, the retail flows likely to continue strong. The capital raising pipeline remains huge. The question boils down to valuations and fundamentals. So valuations, even despite market stagnating, are not attractive in absolute terms. Yeah, you could say related to a year back, 2 years back, slightly better, or related to EM, less of a premium. But the key driver here on will be the local growth fundamentals. And that's where the debate around tariffs or geopolitics will come in as to how that weighs or does not weigh on the visibility of growth recovery in India. I'll hand over to Sunil in terms of the EM lens on the Japanese yields.
Sunil, so Gautam, thanks. But Sunil, no, I'll peg in one more thing there, right? One is the Japanese impact on emerging markets, and two, emerging markets, within the emerging markets basket, the fact that India has underperformed so much over the last 14 months, does that kind of give a bit of a floor to any large global event that may impact emerging markets?
Right. Thank you. Good morning to all your viewers. Let me answer the two parts to your questions, one after the other. I don't think I would make a big deal of the Japanese yields going up, or what people like to call as the carry trade and the unwind and so on. If you look at what's happened over the last 12 months, 18 months in terms of global portfolio flows, the world has bought record amounts of the US, in 2025.
Hello and welcome to NDTV Profit, joining us in this special broadcast where we're actually here at the offices of Dream 11 in BKC, Mumbai. Office for a few more weeks is what I understand, but I have with me Harsh Jain, the co-founder and CEO of the company. Harsh, after a pretty long few weeks or months that have been spent in trying to figure out, there's one big court case that the result has not been that great, has not been very favorable. What are these companies going to do next? And you were first out of the gate, or at least in the press you were first out of the gate to come out with a financial services app. But now you're talking about an entertainment platform and exiting the gaming sort of concept entirely. Tell me a little bit about what the thought process has evolved like over the last few months, and how is it that you're approaching this new idea?
Yeah, thanks. Thanks for having me. I think that the last few months have been a lot of soul searching, thinking how do we pivot now from what we were doing to where we can continue adding value. And we went back to our roots. In fact, in the office is about we're moving from BKC back to Worli, where we were for I think for 14 of our last 18 years, before just moving to BKC. But we went back to thinking, why did we start Dream 11? And that was to make every match more exciting. That has always been our mission for Dream 11. And if fantasy sports and the freemium version of fantasy sports has been struck down by the government as they don't want it, and they passed regulation and law that says that we don't want it, and PROGA is a law now. We don't want to do that. Yeah. Obviously, we can't do it, we don't want to do it. And so we said, what did Dream 11 do that made it work? And the fact was that Dream 11 basically enhanced a match. It made every match more exciting by making you an active participant. Instead of just watching TV or watching a match, you could now actively engage and feel that you are part of it in a bigger way. Today's day and age, we find that everyone is watching a match alone at home, because the internet has perfected the art of watching the match on your phone or on your tablet or on your screen, TV screen, connected TVs. And so we're all watching alone. But we all want to watch together. But no one has the time. Yeah. No one has the inkling to go create a plan, go like we used to create with going to a pub or a bar or a club or a friend's house. We don't do that anymore. So we said, okay, how do we allow people to watch a match alone together? I know it's paradoxical, but that's the problem. And that's why we saw that the new generation really wants to connect with their friends and loved ones over video calls. So how do we get video calls to integrate with the sports match in a way that they can enjoy watching that sports match together with their friends from the comfort of their home? Okay. And that's what the new Dream 11 is about. Okay. You aim to be a second screen platform, right? I'm trying to understand why that second screen, because even 10 years ago, everybody wanted to be the primary screen. Yes. But now I think there's this aspiration that how can it keep you distracted enough from your original activity? Yeah, I think the second screen experience is something that's always been there. Yeah. Like at least for me, whenever I'm watching sports, I might be watching it on Hotstar, but I'm opening CricBuzz and I'm seeing the scorecard, some commentary, what's happened, who's coming batting, who's gone before. So we're always using a second screen because the first screen is not something you can control. The first screen is something that you're just passively viewing. The second screen becomes your active engagement and control. And that's why Dream 11 succeeded, because it actively engaged you in a way that you could pick a team, you could see how you did. Today our second screen now pivots from gaming to watch-alongs. Now you can have your favorite creator watching the match and watch their excitement, their raw passion, energy, their expressions as they go through this roller coaster emotion of watching sports.
Yeah.
And that's what we want to bring to every household. Watch alongs is something that has been immensely popular worldwide in many other places. Twitch is a great example of a streaming platform for gamers.
Yeah.
People love to watch other people playing games and talk about their feelings and what they're going through. Gen Z today wants raw, unfiltered commentary. They want commentary which will have a bias, which will have a standing, which will have favorite teams and favorite players and have an opinion on everything. And that's what I think they'll find in Dreamlab.
So when you're talking about creators coming on the platform and creating the kind of content that your audience would like to engage with, firstly, how is that process going about bringing these creators on your platform, because they already exist on other platforms and they're fairly comfortable doing that, versus which will be entirely new. The other part of this is also bringing people in, because you have in the recent past talked about curbing budgets for specifically, let's say, marketing. So how are you getting your customers on board with this new?
So fortunately, we've been continuing free to play fantasy since the real money gaming ban, Proga ban. We've been continuing free to play fantasy, and until we pivoted our product, because of which we already have 20 to 30 million people who come to our app every month. Just because they love fantasy sports, they want to play for free, they want to compete, they want to feel connected with that sports match. Now that we've launched today, actually right now, we've launched Dream 11 with watch-alongs. We're hoping a substantial portion of these 20-30 million people that come to make their team will also like to watch along. So we don't need a marketing budget. We already have millions of people that can hopefully convert. If they convert, we'll be like a startup. If our users convert and they like what they're using, they'll tell their friends about it. And there the virality begins. So of course we'll have some marketing budget internally to just tell our user base, because they have a fairly substantial 250 million users, not all of whom are active, many of whom think that Dream 11 was only RMG. We have to remind them now, we have to tell them and inform them that gaming is done. Now we're a second screen sports entertainment platform. So please come and try out something that you liked about Dream 11. This is our new product. Please try it out.
You've famously, as compared to the rest of the industry, which immediately reacted with pay cuts and job cuts, you famously retained your entire workforce at Dream 11. But you also talked about the fact that some of these people will be redistributed into other projects that are part of the Dream 11 umbrella. Tell us a little bit about that as well.
So we wanted to have Dream 11 going back to a startup, because it is a startup again now, a young startup. And so we had 1,000 people working on Dream 11 earlier, but now for the new version we needed less than a couple hundred. So now we have less than 200 people on Dream 11. But this winning team, this team that has done so well to build Dream 11 and to create a great product, is still a winning team.
Rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स, जो प्रिजाइडिंग ऑफिसर्स और जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world.
Good evening. Welcome to the big question on NDTV Profit. I'm Vikram Oza. Now, Prime Minister Narendra Modi is going to meet Russian President Vladimir Putin in New Delhi. This visit loaded with history, strategy, and also timing. Putin is returning to India after a 4-year gap. He was last here in the year 2021. So now he's here to reinforce what both countries call a special and privileged strategic partnership. But this is not a routine summit. It comes with military, energy, and geopolitical stakes running higher than at any point in decades. In the run-up to the talks that the two countries are going to have, New Delhi, of course, has already cleared the key deliverables from ratifying the long-pending military logistic pact, which is called RELOS, the Reciprocal Exchange of Logistic Support, that has been ratified. Also, India has secured a $2 billion deal to lease another Russian nuclear-powered attack submarine. So the agenda for the Putin visit is stretching across defense co-production, long-term oil contracts, there is civil nuclear cooperation, fertilizers, recruitment of Indian workers, and yes, a new payments framework as well, which could include the dirham route. It links Russia's SPFS system, which is short for System for Transfer of Financial Messages, SPFS, and that could be linked with India's Rupee network. All of this is happening as the US tightens sanctions on Russian oil. It is cracking down on major suppliers like Rosneft and Lukoil, and it presses India now to reduce dependence on Russian crude. And this even as Western pressure is growing to end the Ukraine war. That pressure has been building on Russia. So what's on the table this time between the two countries as they meet? India is, of course, looking at an additional S-400 missile system, and they're even exploring Russia's next-gen S-500 Prometheus, along with potential cooperation on the Sukhoi 57 stealth fighter with deeper technology transfer this time. And on the economic side, New Delhi wants long-term certainty on discounted Russian oil. India is looking for solutions to the payments headache, also expanded agricultural access to the Russian market, and a push to narrow that 59 billion trade deficit. It's a yawning one, which incidentally is India's second largest after China. And Russia, for its part, has signaled fresh interest in India, from seafood and shrimp imports to high-yield agriculture, fertilizers, and plans by Sberbank to expand operations and invest surplus rupee funds into Indian government securities. Now, Russia is India's fourth largest trading partner. Bilateral trade has hit $68.7 billion in FY25. But the imbalance over there is quite stark. India is exporting just $4.8 billion, and oil and arms are dominating those imports. So no Indian export category to Russia is actually crossing that $1 billion mark. In fact, India has a trade surplus with only two of its top 15 partners. That's the US and the other country is the Netherlands. And the biggest surplus, which is $41 billion, is with the United States. So compare India's trade with the US and then with Russia. With the US, India trades across pharma, auto parts, electronics, and textiles, and each category is worth billions. With Russia, that relationship is narrow. It is down to crude oil and defense hardware and fertilizers. So that asymmetry is at the heart of India's challenge. But defense is still the cornerstone in the relationship that India has with Russia. It has been so over the years. It is the backbone of their ties, from aircraft carriers to nuclear submarines and missile systems to joint production. Moscow has been New Delhi's primary supplier for decades, but the dependence is shrinking now. Russia's share of Indian defense imports has actually fallen from 78%, that's between the year 2001 and 2004. Now, between the year 2021 and 2024, it has come down from 78% to 34%. Even so, Russia remains India's #1 arms supplier, and the partnership today is more about co-development and technology transfer than that dynamic of a buyer and seller. But then what about the oil rush and the new conundrum that has come up? Because since 2022, India has leaned so heavily on discounted Russian crude. From $1 billion of Russian crude, that was the dependence in 2017. This year alone, it is $57 billion, with Russia supplying up to 35% of India's crude oil needs. But that landscape too is shifting after President Trump's additional 25% tariff penalty for Russian oil purchases. And that has taken the total tariffs on India to 50%, and that has been hurting. Now the new US sanctions targeting Russian suppliers. With that, India's imports this December are projected to hit a 3-year low. Now, some Indian refiners are sourcing non-sanctioned Russian grades. Others, like private refiner Reliance, they have stopped processing Russian oil entirely. So it's a complex moment for India's foreign policy. This Modi-Putin meeting is unfolding at a moment when Russia is simultaneously, one, trying to stabilize a crucial legacy relationship with Moscow. Secondly, India is managing the world's toughest sanctions regime around Russian oil. And thirdly, diversifying defense. And they want to move it away from Russian systems. And yet at the same time, we're trying to deepen our strategic, military and economic cooperation with our largest trading partner, which of course is the United States. Just hours ago in Delhi, India's Defense Minister Rajnath Singh and the Russian Defense Minister Andrei Belousov, they've jointly laid a wreath at the National War Memorial. It's a symbolic reminder of the decades-old military partnership that still shapes India's strategic choices. So that is the backdrop. Now, can India strike the right balance between Russia and the US in this historic Putin visit? That's a big question we're asking tonight. And we're taking it across to our panel of experts. And joining us tonight is Phunchok Stobdan. He is former ambassador and Russia-Eurasia expert. He joins us on the show, along with Lieutenant General Shankar Prasad. He's a defense expert. Rajoli Siddharth Jayaprakash is also with us, junior fellow at ORF. And Deepak Bhojwani, former Indian ambassador, also joining us on the big question. So let me begin by asking you, Phunchok Stobdan, you know, if you try and compare the kind of relationship that India and Russia had before Trump came into the second term that he has as President of the United States, and before these tariffs, the heavy tariffs came in, how has that impacted India-Russia ties since that has happened, since Trump has come into the second term and these tariffs have been imposed?
I think the relationship and the context has become far more serious, far more intense, I suppose, compared to what it used to be maybe a year ago, partly because of the changes that have taken place. But I think this is typically a symbolic in the international relationship, you know, the visits of the head of states to another country. And at this juncture, President Putin's visit is really, really very important symbolically, at least, both for Russia and India, to show that we are not isolated, despite all that happened in the last 1 year, what Trump did to curtail the Russians and the Indian interests everywhere.
Yes.
So I think this is to demonstrate the solidarity, the unity, and I won't say balance. Balance is a very difficult thing. You know, balancing act is a very old phrase used during the Cold War, but balancing of power is no longer important. It's an outright politics, outright political stand, geopolitical stand one nation takes.
Yes.
In favor of the others. So I think this is more than a balancing act.
Yes.
And I think this visit is very, very crucial.
So what is that messaging that is going out on the defense front with the ratification coming in on reloss? Lieutenant General S. Prasad, this question to you. Now that ratification on the reciprocal exchange of logistics support has come through, is that a signal? Is that a message which is talking to the US as well that India is actually doubling down on military interoperability?
Well, not really. If you look at the acquisitions of military hardware of India for the last 2 decades, you will find that this is one country, India is one country, which buys the best equipment available in that particular level, whether it's the tanks or the guns or the aircraft, which best suits Indian condition and it best suits our economic condition. We find that we bought Rafale from France, we bought a large number of military hardware and platforms from US in the last 8 to 10 years, and our dependence on Russia and military aid, military purchases from Russia continues. The most important thing at the moment is this: while very large number of items must have been already discussed with the frequent meetings between the foreign ministers of India and foreign ministers of Russia, as also about the NSA who frequently visited Moscow in the last 6 or 8 months, many of these issues have already been finalized. That's the way diplomacy works. But what is most important is, and that I think will be publicly not even be shared with the public, is what is going to happen tonight at the Prime Minister's private dinner. Now the issue is, with the sanctions put in by the United States on the oil and other trade between Russia and India is a serious matter.
Sure.
If you recall, President Trump has even mentioned that he wants to make sure that the BRICS people the BRICS countries don't hijack the entire system of monetary system in the world. Today, we need to discuss and finalize, and I think the two heads of state who are meeting tonight for dinner will discuss this in very private as to what can be done without overtly annoying the American president, but also some circumvent or find ways and means to overcome these sanctions that have been levied. I think the answer would be also perhaps what kind of rupee and ruble trade that can take place.
Yes.
Many years ago, you'll recall, when the large number of agricultural equipment were being exchanged between the two countries, including leather goods and other garments, a lot of trade used to take place in rupee-ruble trade. Is that the answer? And how much is the answer? Of course, obviously, the trade imbalance is very large, as you've seen.
Yes.
We only do about 4 or 5 billion, and they do about 60 to 80 billion. So the issue today is, and the primary issue which I think needs discussion between the two leaders, independently of the delegations, is how to circumvent, how to find ways and means that you do not upset the Americans, as also continue our trade between Russia and America, in which manner to avoid these taxes and the tariffs.
So
this is the most critical part.
It
which
is.
I think is going to be discussed very privately today.
Yes.
Tomorrow onwards, it's all delegations and the 8 ministers that I hear, they will discuss each of those things. Many of those things have already been ironed out, whether it's S-400, take the example of the two aircraft.
Yes.
The F-35 and the Su-57. India is good. I'm not an Air Force guy. I don't fly planes. But I can tell you, India will go for an aircraft which is better between the two of them. From what we know as laymen from outside, Su-57 is far ahead, whether it's in range, whether it's in load capacity, whether it's endurance. You will find, if you read these through the newspapers and to other defense magazines, you will find Su-57 far goes beyond the F-35. We have to see how to balance this with America, because after all, the Americans are also looking at India in many ways to sell equipment to us.
Correct.
And to also retain our friendship as far as the AUKUS is concerned, and as far as those, Southeast Asian, Japan, Australia, India, and America are concerned.
Correct.
Those have also got to be kept in mind.
Yes.
So it's a very complex situation. What is important is that this is a very critical moment. Maybe we've had 20 meetings between the two heads of state.
Correct.
But this particular one, which is taking place under the shadow of the American tariffs and the Ukraine-Russia war, and the India's phrase that this is not an era of war, we have to resolve problems by dialogue and by diplomacy.
Yes, but on that point, Lieutenant General, on that point, and perhaps I should take this across to Ambassador Bhojwani, because you raised an important issue when it comes to that rupee-ruble trade. With India running this massive $59 billion trade deficit, Ambassador Bhojwani, versus that $41 billion surplus that we have with the US. So I'm just wondering if that economic imbalance is going to distort India's room for diplomatic maneuver between India and Russia at this time, with that kind of economic imbalance that we have, and if you're going to strike a more rupee-ruble tilted kind of relationship than we have in the recent past at least, is that not going to irk the Americans?
I think in the first place, Mr. Oza, we should realize that our relationship with Russia and our relationship with the US have to be treated differently. It's not a zero-sum game. The Americans may want us to believe it is, but I don't think we should agree to that. As our External Affairs Minister said the other day, what we need to do is recognize how different regimes are behaving and react accordingly. If the US is behaving in a manner where it feels it can radically alter its foreign policy priorities and its actions, I believe we have the right to do what we feel is in our interest. And the time-tested relationship with the Russians has shown that we should amplify the relationship no matter what. Now, you're talking about an imbalance. Let me remind your viewers that in the 70s, 80s, 90s, we worked up a $30 billion trade deficit with the Soviet Union, which is the successor happens to be Russia to that state. And we paid it all off, despite the fact that by the time we paid it off, I mean, in the early 90s, Russia and India went through seismic economic shifts, as we all know. But nevertheless, India paid off that debt, and it paid it off at the rate which it was supposed to be before the ruble devalued considerably after the Russian changes took place in the 90s, okay? So we've had these kind of imbalances with the predecessor state to Russia because we have imported more from Russia historically. What Mr. Putin's visit is seeking to do, and will to considerable extent do, is balance that trade somewhat by importing more from India. But if we do need to get more from Russia, whatever that may be, whether it's strategic material, whether it's energy, whether it's nuclear power plants, whatever, I think we should go right ahead, because the Russians have never treated us as if we are debtors and have never deprived us of opportunities. Even despite the debt that we've had with Russia, we've been allowed, our companies, for instance, ONGC, BPCL, and the other oil companies of India, the public sector companies, have invested billions of dollars and realized considerable profits from Russian oil fields. So the relationship has been very beneficial to India. And I don't think we should allow imaginary sort of phobias about having a deficit to get in the way.
So it is very clear in terms of India's stance from what we are hearing from the ambassador and Mr. Stobdan. Perhaps you can answer this for us. Even as India is now trying to do this entire balancing act, and like ambassador is pointing out, that there is a stark difference between the relationship that India has with the US and what it has with Russia. But that pivot is very certain that India is looking after its internal interests. I don't know how you see this, but perhaps you can tell us whether India's stance today in geopolitics, when it comes to concentrating on our needs first, with this visit, the sanctions have already been imposed on Rosneft and Lukoil. That kind of pressure, I'm just using that as an example, is it going to reshape Russia's expectations from India at this visit? And can that American kind of pressure that is building up change our nature of the kind of trade that we've had and the defense ties that we've had?
I think the Russian options are limited. If they want to diversify import from India, I think they will have to go for a big item projects like the migration, which now perhaps the two leaders are now going to talk about, the mobility agreement of taking some 70,000 Indians in the Siberian region, or maybe in the Vladivostok area for working in the military and the industrial areas. Now that would be a grand initiative. How to take it forward would be very critical, not just in terms of the relationship, but also balancing what you are saying in terms of economic and deficit and all that thing. So these are very, very important. But I would say, if you treat India-Russia relationship only as a market dynamics, it won't work. Then this utility items like fighter jets and these things, that will come in the category. But to me, I think India-Russia relationship signifies far more deeper.
Sure.
If you go to Moscow, I have seen myself, a lady finds a small empty packet of tea, with the Taj Mahal photograph on that, somewhere on the street. She picks it up and puts it in the frame at the house. Now, it's so much deep, feeling that they have for India. So it's the spirit which is very important, and the trust,
right,
which is driving the relationship. Not so much F-16 or what do you call it, S-400 or S-5. That will come and go depending on the purchasing power of India or whatever requirement that we have.
Right.
But I think it's the spirit of relationship. And end of the day, it is only Russia which is going to save us, Kashmir. Because otherwise, the way it looks like that Americans are going to take, the Kashmir away from us to put it with Pakistan, which is not easy. But history shows that it's only Russia which has able to protect our interests when it comes to Kashmir issue.
Right. So even as we talk about how there is a tradition of trust between the two countries, Lieutenant General Shankar Prasad, when you talk about the defense relationship in particular that India has with Russia, historically now moving from that buyer-seller to co-development. So there is a restructuring, as it were. How important is that in the current dynamics? Because this submarine lease deal, it reinforces that very trend. Or do you think that shows India still dependent on Russian platforms? Do you think it's actually changing the nature of the relationship, even though the basis, the foundation, like Mr. Funchok is pointing out, is trust?
Of course, yes. The trust is the most important thing. Russia has been with us on a strategic plane right from the 71 war, which we cannot forget. And thereafter, we have found that continuously throughout the period, the Russian and Indian friendship has only grown by leaps and bounds. Today, if you look at India-Russian relationship, the Russians fully appreciate and understand that India is a country which is following the policy of genuinely non-alignment. In fact, it is alignment of what we feel wherever is the best issue available to us. We have gone to the world to say, we will buy the oil from where it suits us. We will buy the weapons from where it suits us. We will import and export things from where it suits us. We have a national interest first. That is the story which is not so prominently known a few years ago. Today, India is known world over in the fact that India is looking after itself. What is India's interest is what is paramount to us. Now, in this particular case, today, India also has another very interesting position to exploit, if I may use the word, that today a large number of people, and if you, I think somewhere in yesterday's newspaper or this morning's newspaper, it even took an article out to say that the NATO countries, although openly they're saying,
Lieutenant General, we seem to have an audio issue over there, and we'll try and rectify it. But I want to take this point across to Ambassador Bhojwani very quickly because we are running short of time. Ambassador, can India, you think, sustainably balance this discounted Russian oil that we are hoping for, the American sanctions? We don't know when a trade deal is going to take place with the United States, the kind of defense diversification that India is looking for right now, and that $132 billion trade relationship with the United States. Do you think that balancing can happen in a way that is sustainable?
I don't see why you have to use the word balancing again and again. Our relationship with the US will proceed. The only difference is that President Trump has sought to link our purchase of Russian oil to tariffs on goods which we export to the US. That's the only linkage. And that's a spurious linkage. We've established that we can buy Russian oil if it's in our interest. Of course, the problem is that it has diminished, not because we don't want to buy Russian oil, but because increasingly the ships that carry this Russian oil are being sanctioned. So they're not becoming available. And there are still over 1 million barrels a day being imported even now as we speak. So as a result of that, it's not as if we're not buying Russian oil. We are. As far as the defense relationship is concerned, to your earlier question about our diversification and indigenization and so on, you must remember that we have been manufacturing BrahMos missiles, which were supplied to us initially by the Russians. And now we are even selling them to countries like the Philippines and so on, with the collaboration of the Russians. It has been a win-win relationship all through on defense. This has been the case for decades since we started making the MiGs and automatic weapons, which were initially supplied, the technology supplied by the Russians.
Right. So Rajoli hasn't had a chance to speak, and we lost connection with him for a bit. But Rajoli, if you can tell us from your perspective, Ambassador doesn't believe that this is about any kind of balancing. Would you agree with that or not? Because Moscow, when you look at what it really wants from India at this moment, perhaps that could be different from what it has wanted in the past. Yes, defense orders, oil commitments as well, but the kind of agricultural access that India needs from Moscow, the strategic signaling that sends out to the West, is that something that Russia also needs with closer ties right now? Have the needs changed? And is that going to impact how these talks progress?
Actually, I agree with the ambassador because I think the word balancing is just taken a bit too far because I think that you have to understand that the premise of the India-Russia bilateral summits have been taking place for the last 20-ish years. So I think it's not to do with balancing, hedging with one power or the other. It's more to do basically with keeping the bilateral relations relevant. So in that light, even if there is a new trade pillar that has been discovered, or trade being the flavor of the year, it's still about keeping bilateral partnerships relevant. It's not about balancing one power with another power. Even though the United States, even though Trump is the first leader who has tried to punish India for its relations with Russia by imposing secondary tariffs, but it's not about balancing with one power or the other. I think it's always been clear that our equation with the US is completely different from our equation with Russia and with any other power to begin with, because that's not the foreign policy we follow by balancing one power with another.
It certainly, yes, of course. And indeed, how this entire visit pans out, as historic as it turns out to be, India hosting President Putin at a time of global churn, the challenge in navigating an increasingly polarized world without losing strategic autonomy is the basic focus where we are coming in from. We'll have to see how New Delhi is going to take the oldest defense partner and its largest trading partner, how they are going to be looking at both of these, even if it's individually. But we are going to be looking at it holistically in terms of India's approach in times to come. But thank you very much, Phunchok Stobdan, Lieutenant General Shankar Prasad Rajoli, and Deepak Bhojwani. Thank you very much for joining us with your insights on this discussion here on The Big Question on NDTV Profit. And indeed, we'll keep our focus as President Putin makes his way to India. We've got our eyes and ears peeled for all the developments on the trade front and indeed the defense front as well. So all of it here on NDTV Profit. But for the moment, from me and the entire team on The Big Question, thank you for joining us. Have a great evening.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I am honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much, Am. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन सबसे पहले जो फुट सोल्डर्स जो प्रेजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys are
Hello and
and welcome. You're watching Market Express and I'm your host Makshi Bahugna. Now let's get straight into the show and let's see how the markets have fared today. So Nifty ends the day above 26,000 level. Sensex ends marginally in green with an uptick of 50 points. Advanced decline ratio tilted in the favor of the declines. And if we talk about the sectors, so most of the sectors have ended the day in the green, with IT sector gaining on the back of a declining rupee. So media and energy were on the back foot. Viewers, all eyes on the crucial Modi-Putin meet. The much anticipated visit by Russian president underscores critical bilaterals on defense, pharma, agri and tech services. Ukraine conflict and crude imports too on the agenda. In more news on Putin's India visit, India will pay about $2 billion to lease a nuclear-powered submarine from Russia. The delivery of the vessel has been finalized after roughly a decade of talks. Talks for leasing the attack submarine from Russia had stalled over the years because of price negotiations. The two sides have now agreed on the deal, with Indian officials visiting a Russian shipyard in November. So India expects to take the delivery of the vessel within 2 years, although the complexity of the project means that it could be later. Viewers, the rupee slide to record lows is proving to be a tailwind for India's IT sector, with the currency down 1 to 3% against the US dollar and euro. Revenue translation is getting an immediate lift. So this is as dollar billing converts into higher rupee earnings. Now, since 75 to 90% of its revenue come from, in foreign currencies, majors like TCS, Infosys and also Wipro were among the gainers in today's trade. So the weaker rupee also widens some margins because offshore delivery costs remain rupee dominated. And for context, offshore margins are nearly 3 times higher than on-site work. So typically a 1% move in the rupee can actually shift the margins by roughly 30 basis points. Viewers, Websol Energy is betting big on India's solar surge. Industry demand for photovoltaic cells is projected to hit 20 gigawatts in FY26 and double to 40 gigawatts by FY27. So to capture this growth, Websol is planning a massive capacity expansion. Solar cells to 5.2 gigawatts from 1.2 and also modules to 4.5 gigawatts from just 550 megawatts. So this rollout is targeted by 2028, implying a 50% annual growth rate in capacity over the next 4 years. Next up, we have Lupin. That has inked an exclusive licensing deal with US-based Valorium Biologics. Under the pact, Valorium will handle commercialization and distribution of ARML Lupeg in the US. I beg your pardon. It's the distribution of ARM Lupeg in the US, while Lupin will manufacture and supply the drug. So Lupin will receive an upfront license fee and also royalties on the net sales. So ARM Lupeg is used for patients undergoing chemotherapy, making this agreement a strategic push into the oncology space for Lupin. Next up, we have BML that has bagged a 157 crore order from Lorem Rail Maintenance. The order is for supply of switch rail grinding machines, which are critical for maintaining rail tracks and also ensuring operational safety. So this deal, reinforces BML's position in specialized rail equipment manufacturing and also adds momentum to its order book in the infrastructure and rail maintenance segment. Copper prices are on a tear globally, and Hindustan Copper is riding the wave. So the stock has jumped 11% in just 5 sessions as rising copper prices boost the demand and also valuations across the sector. Adding to the momentum, the company recently signed an MOU with NTPC Mining aimed at collaboration in critical minerals, which is a space that's gaining strategic importance. So analysts say that elevated copper prices could actually keep the sentiment strong for metal stocks in the near term. Electricity trade volumes on the Indian Energy Exchange saw a sharp uptick in November. Total trade rose nearly 18% year-on-year, and this was driven by strong growth in the real-time market, which surged over 40%. So prices have also moved higher. Real-time market rates have climbed 9%, while day-ahead prices were up nearly 7%. However, day-ahead volumes stayed flat at around 5,668 million units. Next up, we have Petronet LNG that has locked in a major long-term deal. They have signed a 15-year agreement with ONGC for ethane unloading storage and also handling the services. So as part of the arrangement, Petronet will provide an ethane storage tank capacity of 1.7 lakh cubic meters. ONGC, meanwhile, has committed to reserving roughly 600 KTPA of that capacity. So the transaction is expected to generate around 5,000 crore rupees in gross revenue, and operations are set to begin between FY28 and FY29. So this marks a significant step in strengthening India's ethane logistics and also midstream the infrastructure. Viewers, next up we have Newgen Software Technologies that has secured a notable global client win. They have bagged a 13.9 crore rupee order from Mercedes-Benz. Now the contract is for implementing a loan management system, reinforcing Newgen's presence in the enterprise-grade financial automation. So the project will be executed over a 5-year period, and this will also add visibility to the company's long-term revenue pipeline and strengthen its footprint in the automotive financial services space. Next up, we have Pace Digitech that has announced a significant order win, securing a 99.7 crore rupee contract from Advait Green Energy. So the deal is for supplying an LFP battery energy storage system. For context, that is a key component in renewable and grid stabilization projects. And under the delivery schedule, Pace Digitech will supply 50% of the BESS DC blocks by March 15th of 2026. And the complete system is expected to be delivered by April 2026. So the order adds strong momentum to the company's presence in India's fast-growing energy storage sector. Next up, we have
in line with the sizes of those economies. So we need to solve system problems. We need to increase communication between our businesses in order to get to much higher volumes of India's export to Russia.
Mr. Oreshkin, in the past, we've seen a couple of problems when it's come to trade between Russia and India because of currency and the transfer of funds. Has that been resolved?
Already now we see that the most of the trade is being done in rupees and rubles, so it's done in local currencies, and there is not that huge problems like it was in the past. But as we will see more businesses, more contracts and more exports from India to Russia, we will see even less problems with all these systemic issues. It's not only about payments, it's logistics that need to be solved, insurance and so on and so forth. So we will be gradually working on each of that issue to make the trade between two countries more comfortable.
Just showing our viewers images from the area where your president is going to be landing any moment now. Our Prime Minister has reached the Parliament Technical area, the airport area, to receive him in person. What do you make of this kind of personal relationship, these gestures that both of them, both the leaders, make for each other, the fact that today the Russian president is going to be welcomed by the Indian Prime Minister at the tarmac itself?
Definitely the relations between the President Putin and Prime Minister Modi are at a very high level. This is true friendship between them, and this of course helps us to solve a lot of issues that raise and pushes the relations between the two countries forward. This definitely helps.
Mr. Oreshkin, just in terms of, in your opinion, the big takeaways from this visit, what do you expect?
Well, another big step forward in terms of goods trade, step forward in services trade between the two countries, issues connected with the technological cooperation, especially on the artificial intelligence, and also of more free access of labor force of one country to another jobs market.
Okay. You know, this visit also comes immediately after you had Steve Witkoff and Jared Kushner in Moscow. What is the messaging from there? That you had that meeting, of course, any of us would have loved to be a fly on the wall for that rather long meeting, but soon after, Mr. Putin is in India.
I believe that there will be a lot of teams to discuss between the President Putin and Prime Minister Modi, definitely. They will have extensive discussion, I believe, of all global issues. But I'm here to discuss business opportunities between our countries, and we are doing a substantial progress in that area.
Okay, Maxim Oreshkin, appreciate you giving us your time right before the President of Russia lands. We've got these live pictures on our screens, and I'm going to stay with these pictures. There's a tri-service ceremonial welcome. As you can see, the soldiers have all lined up there to receive the President of Russia. They're there, right there on that apron. You can see a few aircraft landing and taking off, Vishnu. That's far in the background. But the Russian president's aircraft, of course, is going to be unmistakable. So I want to stay with these pictures and nothing else right now. Vishnu, a tri-service welcome for the president. The prime minister will, of course, also be there on that carpet to receive his friend Vladimir.
No, absolutely. And if I can just request our PCR to bring up flight radar so that, our viewers know where exactly this aircraft is. Just a couple of minutes away. It's the most tracked flight in the world, which is why we want to track it as well. But yes, it's a tri-services guard of honor. The national anthems of both sides, I presume, would be played out. Prime Minister Modi will be, sort of greeting Vladimir Putin. I think Shiv raised an interesting point earlier on. I think it was Padmaja who raised this point earlier on that, will Prime Minister Modi get into the vehicle of the Russian president? The Russian president usually travels in his own vehicle. It's called, well, like the American president's car, it's called the Beast in a sense, but it's a Russian vehicle, heavily armored. It's got, it's blast proof. It's got secure communications, etc., etc.
And has been delivered here ahead as well. Right.
I would suspect more than one of them.
Yeah.
So would that be done for a while, or would they go their own ways? I would suggest that they would actually travel, their own ways, because there is a dinner which the Prime Minister is hosting for President Putin later.
And the reason why we talk about all of this is, remember, this visit also has ramifications on the kind of politics that we see here. We're right in the middle of the winter session of the Indian Parliament as well. And again, one of the long-standing allegations against the government has been that right now you've got nobody in your corner. Everyone, did not stand up for you, did not stick up for you, especially during Operation Sindoor. And all of these countries were put in that same block. In fact, we've had the Congress saying that your friends like America, like Russia, they did not apparently call out Pakistan. They did not vocally put Pakistan on the mat, as it were, for what happened in Pahalgam and thereafter in Operation Sindoor. But these images tell a different story.
He's landed. The president of Russia has landed. We can confirm to you. Pictures just in. These are live pictures from the Palam airport. The president of Russia has landed. Prime Minister Modi there in his motorcade on the apron. So it is going to be a big Kodak moment tonight. The Prime Minister is there in person. These are the first pictures of Prime Minister Modi at the Palam technical area. So that settles that. Vishnu and Padmaja, he's going to be there on the apron. Expect hugs and handshakes as well on the red carpet as the Russian president gets out from his Ilyushin 96 aircraft. I'm still wondering whether they're going to travel in the same vehicle. You never know with these two leaders. Let me put it out there. You never know with the both of them, because they share a bond that is quite rare, quite unique. So there's every possibility that may happen. But like Vishnu rightly pointed out, I think the Russian president goes to his hotel first and then...
But can I just say, Shiv, if he has landed, then there's another aircraft in the air, which is also from the Russian Special Flight Squadron,
decoy,
which is on its way. And that would possibly be a decoy aircraft, right? Or Padmaja, that might be the aircraft that he is landing in. And the one which has just come in earlier on, if indeed that is the case, is the decoy.
Well, this is a special gesture. The Prime Minister has broken protocol. He is there in person to receive President Putin. But what I do want to, ask both of you, the fact that all this while you've got Europe, you've got America in particular, asking India that you must try and isolate Russia. Despite all of that, this personal gesture, going out of your way and saying, not only am I not going to isolate him, I am going to accord him a special welcome in person.
No, but I think this is the most important point in all of this. India's foreign policy has been entirely independent. The word non-aligned is an unfashionable. We call it an independent
Which
foreign
is funny
policy.
because again and again we hear the word surrender in the discourse we hear in our country.
The fact of the matter is India has chose to do exactly what we feel works for our interests. So we have a great relationship with the United States, but we've got a great relationship with Russia as well. It's not one or the other. This is the path which has worked well historically. It's certainly something that this government actually takes. And as far as the entire narrative is concerned about countries not being on India's side, the facts
or that
are
India
there.
is kowtowing to one country or the other.
The facts are on the ground on what India achieved. And we've got differences on Donald Trump's sort of interpretation of the sequence of events. But if you actually look at the support that Pakistan has gotten, it's just from a very small handful of nations who protested against India during Op Sindoor, Turkey being one of those countries. And therefore, I'm not sure that we have necessarily lost the diplomatic narrative post-Op Sindoor. We acted decisively.
Far from it.
And I think some of the points mentioned by the opposition, quite frankly, are ludicrous.
In fact, what the Prime Minister said that, earlier we used to talk about having strategic distance. Now we have strategic closeness with everyone, and depending purely on our own interests. We are not going to listen to X person's concerns or say that, we are going to bow before somebody else's pressure. We are going to see where our ends are met.
And exactly. The man on your screen, just to add to what Vishnu said and to answer you, Padmaja, is Narendra Modi is perhaps the only leader in the world. In fact, I'm sure he's the only leader in the world who in the last 18 months has met and hugged both Vladimir Putin and Volodymyr Zelensky. He's a person who has met both President Trump as well as spoken to President Trump as well as President Xi Jinping. A person who has not stumbled off that path of having a completely independent foreign policy. So I agree with Vishnu when he says that while it is tempting to look at every action as a reaction to a temperamental leader like Trump. And sometimes it is, because remember, even diplomacy ultimately is a delicate dance. But the fact is, India's independent foreign policy predates many of these leaders. And that's the reason why we're able to stand strong.
And has told both Russia and Ukraine that this is not the time for war, while being friendly with both of them. Again, saying, listen, it's better you come to the table, you talk about peace, this is not the time of war.
So India's foreign policy, Padmaja, has always been, we will be everybody's friend if you're friendly with us, but it's India first, which is our primary goal. And so this is something that works. I think the point on oil, and this was mentioned earlier on, is that, look, we've got relationships with oil all over the world. We wanted to import from Russia. We couldn't at the present moment, but because we've got great relationships elsewhere, we continue to sort of fill that void for the moment.
But Brahmachalani, what do you make of people who still are wondering, how do we trust, or how much do we trust? It had happened when we were engaging with China, that fine, you're going ahead, you're having those hugs and handshakes, but can you really trust China? How much can we trust Russia? Because one of the factors quoted there is they also have a working relationship with Pakistan. They do trade with Pakistan as well. And with China, of course.
Language को कैसे भारत के
All right, we don't seem to have his audio now, but can I just
don't
say...
think Dr. Chelani is with us.
I think the other point, Padmaja, is that, and you make a great point, is that the Pakistan Air Force's JF-17s have Russian engines.
No,
the same ones as...
But it's a fraction, right? I mean, if we look at the kind of trade they have.
It's a problem. India doesn't appreciate Russia, that their
But Russia will also look out for themselves.
Their transport, let's look at it from an India standpoint. Pakistan's transport fleet of
China
is Russian. Russia provides Pakistan with jet engines. So that's a bit of a problem.
Guys, I want to zoom in for a moment to these pictures. Let's just dwell on these pictures in a bit. Once the leaders are here, we'll talk about the trade and other things. Vishnu, the officials you see around the Prime Minister's vehicle right now, because our viewers are very interested in this stuff, are the Special Protection Group, right?
Yeah.
Who are the agencies that will be arriving with the Russian president?
So it's there's a special group which protects the Russian president. There is the KGB as well. There are his inner line of bodyguards who would be sort of coming in at this stage. These images from just a little while earlier on, Prime Minister Modi over there, he's of course protected by the SPG, which is his inner line of protection. So there's a great deal of security over here at this particular time. Remember, this visit does come not too long after the horrific Red Fort blasts which took place, and the plot against India at so many levels, which is a cause of concern. But President Putin has chosen to come over here. He operates under extremely high security conditions, not least of all because of the ongoing war between Russia and Ukraine. If you look at the flight path of his aircraft, he was flying in east of the Black Sea, not too far away from, the center of the conflict between Russia and Ukraine, before his aircraft entered Afghan airspace, Pakistani airspace, and I think in just a little while from now, he will be landing. So a couple of aircraft likely landing, either one of which would have him. One might be a decoy aircraft. But the Prime Minister, in this very rare gesture, it is quite rare, it's infrequent, it's not that he's not done it before, sort of sending out a strong message of friendship, sending out a message where he sort of lets everybody know about the warmth of this gesture. Now, how will America look at this? How will certainly European countries? That's interesting because Shiv and Padmaja, as you know, just day before yesterday, we had 3 ambassadors of European nations writing in the Times of India in a joint article that they had serious concerns about Vladimir Putin and the way that he's been dealing with Europe, to which the External Affairs Ministry and sources over there seem to indicate that, look, you're in our country now, so this third-party interference in the name of freedoms to write what you want, let's be respectful of one another. I think that was the basic message. Padmaja?
Absolutely, but it was interesting. You can also look at it from the prism of, well, in India, you do have the right to free speech because you had a very, cogent rebuttal or a response to that coming from Russia as well. Despite what is said about India, the fact is that we are standing up for ourselves. We are engaging with everyone on our own terms, and everyone gets to say their piece as well, respectfully. However, red lines should not be crossed. I think that has been made very, very apparent. Ambassador Sajjan.
Excellent discussion. And if you permit, I will make 2 very quick points. I think one, we need to, both between the United States, that is the one that has been pushing against India. The United States, Mr. Trump told EU also to levy the same tariffs, that penalty tariffs that he had imposed. He said no. As far as these countries are concerned, maybe we need to differentiate between what Europe is doing, because Europe has said that fine, we recognize what India's position is with respect to Russia and Putin, but we will continue to do business and, we are looking at signing an FTA with the EU. For all we might have the President
All right,
of the
Ambassador,
European
I'm just
Commission.
interrupting you now. We do appear to have some images which are coming in at this stage of an aircraft. This is at the Parliament airport, as I understand it, that we've got these videos coming in. This is an older. Ignore that, ladies and gentlemen. I think that was the French president's aircraft.
Yeah.
We're just going to ignore that for a while. I think this is a mixed feed, which is actually coming in over here. But this is the live images from Parliament. But Ambassador Sajjan, carry on with the point you were mentioning.
Yeah, so that was one point. Second thing, the point that was made by, I think Padmaja or you, Vishnu, that Russia is having good relations with Pakistan. I think this is not an era of exclusivity in relationship. That way even Russia could tell India that you have such excellent relations with the United States. You have such excellent relations with Europe. So, we are following that policy of multi-alignment, that we will work with those countries with whom we can work. We will continue to take that partnership forward. And of course, the most important thing is make ourselves very, very strong, very, very capable to deal with any of the challenges that might emanate, whether it is from a Western neighbor or it is from a Northern neighbor. The second point that I was making was, or let me mention about, Prime Minister going to receive Mr. Putin. Mr. Putin has been here 3-4 times earlier. The Prime Minister never went to receive him earlier. So, we have to see it in the context of the changed circumstances that were taken place. He has gone, I did my research work, he's gone to receive just about 6 or 7 leaders. Barack Obama in 2015, Trump in 2020, Sheikh Hasina in 2017, Emir of Qatar earlier this year, and MBS, some time back, and also the president of Abu Dhabi, and Shinzo Abe, Netanyahu. These are all the leaders that he's gone. But Putin has come here 4 or 5 times earlier.
Yeah.
So I think we need to really see what has changed now. I think this is time to pay back what Mr. Putin, the manner in which he conducted himself in Tianjin, and he was able to create that moment. I think that is, one of the very significant reasons. And the last point that I was making was earlier, that was we really need to differentiate between Europe and the United States. We club them together in the West. But I think, as I was saying, we might have the president of the European Commission as our chief guest at the Republic Day next month. So, our relations with Europe also continue to be. They are also mindful of India's interest, that India has long.
What shots are these?
All right, Ambassador Sajjanar, one other key point which I think we need to reflect on slightly is BRICS. Now, that's something that irritates the United States to no end, but Brazil, Russia, India, China, and South Africa, that's a formation which is absolutely huge. The fact that we've had President Xi, Prime Minister Modi, and President Putin meet in Tianjin in Russia recently, and the fact that Donald Trump is wary of BRICS, could you tell us about the dynamics there between the 3 nations, in as much as India has problems with China?
The expansion of BRICS, as China has been, and Russia has really had not much, it has gone along with China, let me put it this way. It has gone along with China in terms of the expansion of BRICS. But whether it is India or it is Brazil or it is South Africa, they are not happy with the expansion of BRICS because they thought that when we are just 5 of them, then they have a certain clout, they have a certain preeminence, they have a certain profile. But when the club gets expanded to 15 or 20, then of course the preeminence of China will remain. Preeminence of China will remain, but the importance of the other members like India, Brazil, etc., that will come down. So that is the internal dynamics. But as far as Mr. Trump is concerned, I think we have told very clearly that BRICS for us is a non-Western organization. It is not an anti-Western.
Interrupting you now, Ambassador, I'm sorry to do this, but we've got breaking news coming in. President Putin's aircraft, assuming that this is the one that Flight Radar is tracking, it's going to be landing in about 2 or 3 minutes, maybe 4 minutes from now. It's just flying over South Delhi at this stage. So, ladies and gentlemen, in case you've just joined us now, what you are seeing are images from Indira Gandhi, from the Parliamentary technical area, which is a part of the Indira Gandhi International Airport. That's where the Russian president's special aircraft, an Ilyushin 96-300 PU of the Special Flight Squadron of the Russian Air Force, will be landing in a little while from now. Prime Minister Modi, you can see, is there to greet him. It's uncommon for the Prime Minister. Okay, he's landed over there. This appears to be one of the aircraft which has landed. That is an Ilyushin aircraft 96, IL-96-300 aircraft which has landed. We are waiting to see if that is the primary aircraft which is carrying Vladimir Putin, or there is another one as well. There is a decoy aircraft. It's not decoy. It's actually a backup aircraft in case one is non-functional for whatever the reason. But I think it is safe to say that it's likely now that the Russian president has landed in India. He was expected to land at about this time. I would suggest that about 20 minutes later than what was expected. Shiv.
That is Putin's Ilyushin 96 wide-body aircraft. It is the aircraft that the Russian president uses. It's a cold night here in Delhi as the president of Russia arrives. He was here in India the last time 4 years ago, but Prime Minister Modi and Putin met only a few months ago in Tianjin in China for the Shanghai Cooperation Organization Summit. So this is the second time that they're meeting this year, Padmaja. And the president has only 2 items on his agenda tonight. There's that ceremonial welcome that we'll be seeing live here. And I can't wait for those pictures for the Prime Minister and Putin. I think we just have to wait a few more minutes now.
And you know, a lot of people talk about the kind of chemistry they have shared since 2014, but it goes far, far beyond that. In fact, some very interesting pictures that had emerged of when, as the Chief Minister of Gujarat, Mr. Modi had met with the Russian president in Moscow. He was at that time, of course, a junior figure. He was representing what many would later call a small state. But when the Prime Minister spoke about that meeting in 2001, when Mr. Modi had accompanied Atal Bihari Vajpayee, he said that President Putin treated me with great respect and honor even at that time. And that established the foundation for our enduring friendship. It was incidentally during that visit, almost, 24 years ago, that Mr. Modi, as Chief Minister, had signed a historic protocol agreement for cooperation between the state of Gujarat and the Russian province of Astrakhan. So these two men have a relationship which goes back quarter of a century, 25 years. They've known each other, and they still say that that's what has deepened the bond. So irrespective of whether Mr. Trump is happy or unhappy with the kind of relationship that two of them enjoy, at least it's a strong one, it's an enduring one, and it seems to be only getting better.
Vasudha, our political editor, is also live with us. Vasudha, very quickly,
Well, we'll come back to Vasudha in a moment, but just for our viewers, the aircraft on your screen, an Illusion 96, that's the Russian presidential flight which has just landed. There is another aircraft, I can tell you, also on short finals at this stage. We have to wait and see if this is actually the aircraft which has Putin, or whether there's another plane which the one that's about to land, which has him. And if you see a lift being taken up to the aircraft, staircases rather, the official one, with a red carpet being taken up to the aircraft, then this would be the likely aircraft. But we've got it. Journalists around the world have gotten it wrong in the past. We'll have to wait and see whether indeed this is the aircraft. But the presidential visit is beginning at this stage. It's a critical visit at this stage, one where we're going to see the president of Russia, Vladimir Putin, come out of one of two aircraft. This is the first one on the ground in a little while from now. And he's going to be having a meal with the Prime Minister tonight before a very busy day tomorrow before he flies out. It's been an approximately 6-hour, 12-minute flight, is what I can tell you. The president has a busy schedule tomorrow. There's the India-Russia official talks which take place, the summit as it were. We have a special privileged strategic partnership. There's a business delegation which is already in the midst of talks. And after that, we've got many more items coming up. Well, I'm joined now by our political editor, Vasudha, who has a lot more at this stage. Vasudha, what's happening? Where exactly are you? What's happening?
And what's going to happen at that dinner? And are they going to travel together in a car, Vasudha?
Well, Ashil, I had covered the Prime Minister's visit to Moscow last year, and I remember it was a private dinner that Vladimir Putin had hosted for the Prime Minister that made all the news, because the Prime Minister made a very strong pitch for multi-alignment. At the same time, he said it very clearly that ye yudh ka yug nahi hai, and that also showed that while India can be friends with Russia, it's also very clear that it will send across the right message that it believes that there are no solutions that can be found in the battlefield. So there's a lot that's expected from the private dinner today. There's been a lot of secrecy over what the menu is, but I'm told that there's been a lot of excitement. We were not sure. There was also a lot of secrecy as to who is going to receive him. But I remember covering the UAE King's visit to Gujarat for the Vibrant Gujarat Summit, and the Prime Minister himself went to receive him. This was his way of reaching out to his old friends, old allies, diplomacy at its best, Modi style. So we can expect a lot of desi tadka to this. At the same time, this is one of India's tried, tested allies, one of our most faithful friends. So of course, there's going to be a lot of loyalty. There's going to be a lot of warmth in the dinner is what I'm expecting.
It's interesting you talk about this long-standing relationship. A lot of people have tried to make it seem as if this is in reaction to, that this closeness is in reaction to the seeming hostility, or at least the occasional barbs from America, from Donald Trump in his second term. But the fact is, and we were just discussing it a while ago, and you've actually covered so many of these visits, Vasudha, that it stretches back from the time when Mr. Modi was the Chief Minister of Gujarat, cut to when in 2014 he met for the first time as Prime Minister. He met Mr. Putin again. And even at that time, he said that You are a great friend of our country, and this relationship, India and Russia, is incomparable. So between the two countries and between these two men, this relationship goes back more than 2.5 decades.
Well, Padmaja, I was in the parliament today and I happened to speak to certain sources, and they're telling me that there is more at stake for Russia also, because remember the last time the president came to Delhi, it was a different world, it was a different India. The war hadn't begun, COVID was on, and Trump wasn't there in his second term. So, this is also a great opportunity for Russia to send out a message that things are getting normalized for the isolationist policy that the West has towards Russia, and more importantly for India. We have been told by government sources there's going to be a lot of focus on MOUs, there's going to be a lot of signing on shipping and defense-related pacts, more importantly on pharmaceuticals. So a lot is expected, but most importantly, like Shiv mentioned, the carpooling, the softer highlights of this visit are also something that people are looking forward to, because Mr. Putin has always said that Modi is a great friend, and more importantly, India also wants to send out a message that it can.
Good evening, viewers. As you can see on your screen, Russian President Vladimir Putin has finally touched down in India. The countdown that we were counting for so many days has finally come to a close. PM Modi, as you can see on your screen, the visuals, really captive visuals of the airplane landing in Delhi. This, remember viewers, is Putin's visit to India after 4 long years. He had visited India back in 2021. This visit, as you can see on your screens, it is so important, it's so strategic, because for a long time, India and Russia's relationship has stood on a bedrock of defense ties. We have always had a very strong defense partnership with Russia, but this time around, along with defense, we're also focusing on strategic economic ties. We're focusing on how to really bolster our agricultural ties. We're thinking about technology. Of course, even before Putin visited India, there was a spokesperson from Kremlin who spoke about decreasing our trade deficit. There were talks about how India exports more and imports less from Russia, and from their end, this is the key important point of the messaging that is going to happen. I in fact have my colleague Rishabh Bhatnagar, who's been tracking this key diplomatic meeting between India and Russia, joining us at this given point in time. Rishabh, over to you.
Right, Malika, you have President Putin, who's landed in New Delhi. A very interesting 2 days of meetings lined up for him. From a trade perspective, what is important to highlight here is that there has been a very clear cognizance that has come in from the Russian side that the bilateral trade between India and Russia has been heavily skewed in favor of Russia, and that needs to be remedied. And that is something that Russia is very much on board. Russia, what the ministers today, a bunch of ministers at FICCI's Russia-India Business Forum today, they also spoke about how this trade balance is, there's a lot of imbalance in trade, and that needs to be remedied, and they are ready to buy more from India. And when it comes to what sectors they're looking for pharmaceuticals, they're looking for consumer electronics, they're looking for home appliances, they're looking for a lot of non-energy purchases. Remember, a very large chunk of the bilateral trade that India and Russia have, about $68 billion, almost all of it is purely coal and oil that India is purchasing to fulfill its own energy needs. But what the aim now is to diversify that. It is to diversify India's export basket to Russia. Who, despite being such a large agricultural economy, India contributes less than 2% to what Russia exports. And Russia, being a very cold country, is not able to grow a lot of tropical fruits or even other crops. And that is where India can step in. So you have a lot of cooperation that is coming in on the agricultural front. There's a lot of automobiles, textiles, auto parts, leather, healthcare, IT, all of that is missing from Russia's import basket from India, and that is something that will be remedied. That is something the Commerce Secretary Rajesh Agarwal highlighted today, and he said that these are going to be very crucial parts of the trade basket. Remember, an FTA is also in the offing. You have the Eurasian Economic Council that is led by Russia, and they are willing to sign a free trade agreement. The terms of reference have already been confirmed by both the sides, and now what we can expect is a structure of negotiations to come out. And what we can finally understand is, and possibly a timeline as to when a potential free trade agreement could come out. What we're also seeing is that there are a lot of tariff as well as non-tariff barriers that are left to be addressed. The Russian side has shown a lot of willingness into removing a lot of these standardization and testing protocols, and they've said that they are very much welcoming Indian businesses to come into India to tap the Russian market. Two of Russia's largest e-commerce websites, Ozon as well as Wildberries, those are essentially the Amazon and Flipkart of Russia, and both of them have very much welcomed the sort of demand that Indian goods have, and the sellers that and Indian sellers to be brought on board to their marketplaces. So we're seeing bullishness coming in from the Russian government so far. Tomorrow there's an entire day packed where you'll have a lot of engagements between Prime Minister Modi as well as President Putin, and we'll keep tracking that as well.
Of course. And as you also mentioned, there were some really interesting comments made at India-Russia Business Forum, and I'd actually like to draw attention of what Piyush Goyal also mentioned at the event. Piyush Goyal spoke about India's special and privileged strategic partnership with Russia and the expanding areas of cooperation that continue to deepen our economic engagement with Moscow. The minister also highlighted the untapped opportunities for Indian businesses, key sectors with strong potential for collaboration. And you can see on your screen, we can see Vladimir Putin. He will come out of that airplane anytime soon. Of course, before his meeting, we've had key ministers from Russia speak with ministers in India across the various sectors. In fact, we have been reporting a lot of it here on NDTV Profit as well. Remember, Putin's visit to India comes at a time when the country seems to be walking on a trade tightrope with the United States on one end and Russia on the other, because half of the 50% tariffs levied on Indian imports by Washington are imposed as a punitive measure for New Delhi's continued purchase of Russian crude. And India and Russia, as Rishabh already highlighted just a while ago on the phone, stands up to about $69 billion. And both these countries aim to expand our bilateral trade to $100 billion by 2030. And he mentioned that this time around, the focus is going to be on various sectors, not just defense. It's going to be on agri-tech. It's going to be on technology. It's going to be on how, basically, in one word, if I had to describe the diplomacy of India, Russia at this given point in time, it's going to be a multilateral focus. As you can see on the top band also, we write that energy and defense are going to be key areas of the talking points this time as well. PM Modi this time around is also going to host Putin in a private dinner meeting. And we have Rishabh also, in fact, with me at this given point. Rishabh, could you give us more?
Right, Malika, I wanted to add one more point, very interesting. When we talk about agricultural exports, what we often miss out is the seafood exports that India does. India is the largest shrimp exporter. India is the largest shrimp exporter that there is in the world, and Russia is a very large consumer of shrimp. But currently, India does not sell a lot of shrimp to Russia. And what we heard from a lot of fisheries today was the fact that they are willing to approve a lot of Indian fisheries, new Indian fisheries. So today, what the Fisheries Minister of India said, Rajiv Ranjan Singh, he said that about 128 seafood processing units for exports have been approved to Russia, and another 32 are left. And this entire day and this entire engagement could also see those 32 being approved. what we're also seeing is that seafood exports are the ones that have faced a lot of tariff challenges as well when it comes to the United States, and United States was India's largest market. So if that is shut, another door has opened with regards to shrimp as well as seafood exports in EU and Russia. So that is something that is also of a lot of importance as we go ahead. What we're also seeing, and like you mentioned, the oil exports and the oil tariffs have been a very large part of the conversation over the past few months as India has faced an additional 25% tariffs simply because it is buying Russian oil. And that is also definitely going to come up in the conversations. That's something that Kremlin spokesperson Dmitry Peskov had stated in a press conference a couple of days back. So that is something that is definitely tracking worthy. And what we also need to look forward to is the sort of agri-tech collaboration can be done.
Right, Rishabh, thank you so much for filling us with all that information. And viewers, we'll cut across to NDTV to get you all the latest updates from Putin's visit.
India Business Summit, which is happening at the Bharat Mandapam. President Putin will be going over there at approximately 3 p.m. in the afternoon. He'll be going to the Rajghat prior to that. Before that, there will be the primary summit between India and Russia before the evening. And in the evening, there'll be that banquet at Rashtrapati Bhavan before he departs.
You know, the last time we had a frame, okay, the Prime Minister, I think that there was the Prime Minister walking towards that red carpet. We'll keep an eye on those pictures. But, you know, Vishnu and Padmaja, the last time we had a frame of this kind, live pictures of a VIP aircraft and expecting someone to come out. You remember it was that viral picture of President Macron and his wife, and you know what happened. Okay, that's the Prime Minister who's on the red carpet now. That's the Prime Minister on the red carpet. So he is going to be there, like we correctly told you, that the Prime Minister is right there. There he is. All right. There he is, skipping down the stairs off that IL-76 towards his friend Narendra Modi. Okay, let these pictures play out. And the President is on Indian soil now. There's no sound. I just want to tell our viewers there's no sound in these pictures in case you're wondering. But there you have it.
Okay, there's the money shot. You have the handshake followed by the hug. Prime Minister Modi there in person, breaking protocol, right there at the red carpet to welcome Mr. Putin as he touches down on Indian soil.
I think at this level, there is no real protocol. He decides it.
Pretty much.
The two leaders are on the red carpet over there. Yeah. You know, I mean, it's the delegation, receiving the Russian president over there, diplomats. I can see India's ambassador, Vinay Kumar, India's ambassador to Moscow over there, shaking the hand of the Russian president over there. You can see the Russian ambassador as well. You can see members of the Russian embassy, their defense staff who are posted over here in New Delhi, greeting President Putin, and then Prime Minister Narendra Modi along with the Russian president. Let's see what takes place. There's sometimes a small cultural event which also takes place. I think that's something that they are witnessing now. We'll just see what happens over there. We've got these images up full screen, and then we'll have to see if there is a small guard of honor. If that is the cultural event I was talking to you about, a small dance. They'll spend a few minutes over here before you know, he proceeds to perhaps taking the salute and then getting onto his vehicle and leaving. So there's not very much formality.
These pictures are very, very important, Vishnu and Padmaja, with the dance. A lot of people will be wondering, you know, why the dancers there. You know, is this really necessary? The soft diplomacy relationship between India and Russia is enormously significant. And it's something that Putin has mentioned over and over again. You know, the dance culture, the connect between people of India and Russia goes back decades and decades. You know, there are a huge number of Russians who learn Indian dance here in India and vice versa. So these things are not, you know, just cosmetic little embellishments.
They're traveling in the same car. They are about to travel in the same car.
Did they get into the same car?
Yeah, I think President Putin got into that car, and you can see Prime Minister Modi getting into the same vehicle. So this is that vehicle of the PMO, which the two leaders are in. You can see President Putin in the back.
So we can confirm that both the leaders are in the same car. So Padmaja, you were right. You asked that question first. Are they going to ride in the same car? Here you have your answer.
Unlikely.
Here you have your answer.
It's over to you.
Well, it's wonderful. You know, talking about the soft diplomacy, it's interesting. About 10, 11 years ago, when Prime Minister Modi had gone to UFA, at that time in a very small... I was there in UFA, yes.
Well, yeah.
So in UFA, you had an entire community of Indians who were teaching yoga. And you had about 50 to 60 Russians who used to wake up every day at 5 a.m. and at 6 a.m. they used to all assemble for yoga. And I was like, of all the places in the world, I hadn't expected people to wake up at 5 a.m. to do yoga in UFA. But you're right. That's what soft diplomacy is all about. And that is why we keep analyzing these small gestures, the cultural exchanges, the cultural shows. This gesture of traveling in the same car, we will very likely get that picture of the two of them smiling at each other. This is very important. In diplomacy, it's not only about what you say, but also what you are seen to be doing. These pictures are going to be splashed on the front page of every newspaper across the world. Prime Minister Modi and the Russian president in the same car, leaving now for... where will they be going? Where will this car go, though?
You know, it could be just Prime Minister.
Will they be going to
drop him to his hotel or going straight to the Prime Minister's house? I mean,
to be fair, Maurya is on the way to Lok Kalyan Marg. So,
but is it as informal as that? I mean, it's just unbelievable.
No, but Vishnu, I think we can agree that this is Modi-Putin protocol.
That's the Russian beast.
Okay.
The Russian beast, that black car, the Russian president's limo is following the two leaders.
That poor beast has been told, "Hamara picha karo."
That beast was brought in for the journey from Moscow, all the way flown across over here.
Follow this car.
President Putin gets into Prime Minister Modi's vehicle, and the two go off, and the beast follows.
I think this is such a beautiful symbol of how these two leaders, who of course respect protocol and the agencies that protect them and serve them, but are manifesting how there is a degree of spontaneity to this relationship. The fact that they are so easy with each other in their physical space, they're traveling in the same car. I don't even know what car that is. That's a PMO vehicle, I'm guessing. So either they're headed towards the hotel. I'm guessing they must be headed towards 7 Lok Kalyan Marg right now. That my guess would be that they're headed straight for dinner.
That probably makes sense. Because it's 7:20 in the evening now.
Yeah.
And whenever there's a visit,
early dinner and
at a hotel, there's a bit of a ceremony over there. It takes time. This, that, and the other. But I noticed that those armed forces soldiers who were there, the tri-services sort of contingent, they didn't have any role. I mean, there was no small salute over here. The playing of the national anthems.
I'm guessing that will be tomorrow at Rashtrapati Bhavan.
I'm just trying to understand whether this was abbreviated. It could well be that this, because there is usually a bit of a salute that takes place as you get off the steps. The president would likely salute, Indian soldiers, and there was a contingent that didn't take place. So there will be a guard of honor tomorrow presented in the forecourt of the Rashtrapati Bhavan. That's when the formal welcome begins. This is more personal, which is taking place now. And let's wait and see. This is outside Parliamentary area, and that's right next to the Air Force Museum, when this motorcade is exiting. And we'll see the Prime Minister and President Putin in a white Toyota Fortuner SUV. That's the vehicle the two leaders hopped onto.
Also important to note that in Tianjin, it was Prime Minister Modi who traveled in the Russian president's beast, but today it is Mr. Putin who is in Mr. Modi's car. So a sort of a reciprocal gesture there. It's he who's hopped onto his car with his beast tailing all of them.
The beast has gone off. They were ahead of that. But it's interesting, isn't it? I mean, I think that point on reciprocity is important, that, both leaders sort of doing that. You come into my car, I'll come into your car. It shows the trust between the two leaders, the friendship. What I find interesting is...
when one is traveling in the other's car, does the security also accompany them in the same vehicle?
Padmaja, there were only 4 people in that car. So where is the translator? Because there would be a bodyguard up front, unless there was no bodyguard up front and there was a translator up front, because this is really, really informal. But President Putin speaks English. I've spoken to him in English.
Both of them speak English.
Yeah.
The Prime Minister speaks English too.
It's not something that President Putin dwells on for a great period of time. But I mean, it's evidently enough for the two of them to communicate. I don't think there was a translator in that.
No, I have to also underscore that level of trust. If you're leaving your security behind, or at least you're paring down your security, you'll have to. If you're traveling in each other's car, at best you can take one bodyguard along. I think we've also got Aishwarya, Vasudha, all of our colleagues from the ground joining us. The convoy, of course, has already left the Parliament technical area. Where they are headed, let's try and get a fix on that. Aishwarya? Where is the cavalcade headed? Where is the convoy headed? All right, we'll just try and get back to our reporters. You would imagine that there is quite a lot of movement in that entire area. We will try and fix that connection and go back to them. But a very, very... Okay, Vishal Vivek is joining us now from Bharat Mandapam. Any fix yet on where both the leaders go next, Vishal?
Well, as you guys have been rightly discussing that it could be either the PM house or, it could be the ITC Moria where Vladimir Putin is expected to be living. But the dinner is supposed to happen. That we've heard from sources that the big dinner between both the leaders will happen. So all eyes will be on that, whether there are discussions that we have all been talking about, whether it's defense, whether it's AI, whether it's, cooperation when it comes to, exchange of personnel, because Russia has been wanting at least 500,000 skilled workers from the Indian side only. So that is one of the biggest points of discussions that both the sides will have. So all of that will be coming into play in the next hours, few hours or so. But the main, the main gist of the whole the visit, that will be tomorrow, because tomorrow the Russian president will be meeting officially the Prime Minister of India and also the President of India, and also there will be meetings with the business leaders of both the sides. That will be at 3 p.m. in Bharat Mandapam, where I am right now. There was a big conference here today as well. Some senior ministers of the Russian side were here.
We're trying to get a fix for our viewers on where the cavalcade is headed right now. Akhilesh Sharma, managing editor, is also with us. Akhilesh, both the leaders are in the car making their way towards, I'm presuming, the Prime Minister's residence. What are you hearing for that private dinner?
Yes, this is what we have also heard, Shiv, that immediately after departure from the airport, they will arrive at 7 Lok Kalyan Marg, which is the official residence of Prime Minister Narendra Modi. And PM Modi has actually arranged a private dinner for President Putin. And though the details of private dinner are not disclosed so far, that those who are invited, but it is believed that those who are close to President Putin, like Deputy Prime Minister is already here, he will be part of the official dinner, which is being hosted by PM Modi at 7 Lok Kalyan Marg. And apart from that, PM Modi has also invited a few senior cabinet colleagues for this meeting. And there will be informal discussion as far as this dinner is concerned. And because this is unusual, first Prime Minister breaks the protocol to receive President Putin at the airport, and now without being given the guard of honor, which will actually happen tomorrow at the President House, the private dinner is being hosted right now, and they're traveling in the same car. That is also a signal about the bond and the friendship both the leaders share. Sure.
Let's also go across to Himanshu, joining us live from Sardar Patel Marg. I believe the security has been set up there. The Prime Minister's route is going to pass through that area. Over to you, Himanshu.
Well, I'm standing a few meters from the SP Marg, and on my left side you can see the PM security protocol, and this is the cavalcade. We can see perhaps the first car in the cavalcade, which has just crossed our television screen now. This is SP Marg. This is the route which is just a few meters from ITC Moria, where President Putin will stay. His entire delegation will stay. In fact, you can see one by one the vehicles are crossing this area. And on my right side, you can see the barricades have been put in place. And this happens when Prime Minister Modi travels within the city. So all the vehicle has been stopped on this road, and any time now on the screen that you see, the Prime Minister with President Putin will cross this road just in next few minutes. And interestingly, ITC Moria is just a few meters from where I'm standing now, and this is also the route that Prime Minister takes to go home to 7 Kalyan Marg. So I think we'll have to wait for perhaps a few more minutes. But as you can see, the PM security protocol has been activated on SP Marg. This is exactly the route that Prime Minister Modi had taken when he had gone to Parliament technical area to receive President Putin. And this is exactly the route Prime Minister Modi will take to come back with President Putin. Of course, you've been talking about the political significance, the diplomatic symbolism of Prime Minister Modi going to receive Putin. And now you can see the security vehicles are gradually crossing this area. It's a long cavalcade, we have been told, because there are Russian security agencies also along with the SPG and the Delhi police, and that's why there is very tough security. The entire road has been sealed from here till Parliament technical area. There are hundreds of paramilitary forces who have been deployed along this route, and we have seen last 2 hours extremely high security. The ITC Moria Hotel, in fact, has been sealed from all sides. No outsider is being allowed to go inside except the Russian delegation. And I can see the sirens now on my right side. There is a movement of VIP vehicles.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand.
Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And today, Anushi, the company is a Raymond Group company, but it is a demerged version of it. The realty business is coming in. And largely, there is no major coverage from the analyst community as well. And a lot of our viewers actually wrote to us and they stated that let's figure out what is this company all about. But there are a lot of questions about this company. But after its listing, Anushi, it hasn't been a great returns for the shareholders. of course, who are holding in the Raymond in that demerged basis. But let's put out the questions, what we want to actually know about the company. The first question is, which categories is the actually company focusing on? Is it the mass affluent or is it the recently announced luxury segment? They have a massive project in Thane, that's something which we'll be looking out for. And will this expansion involve non-MMR markets as well? MMR is the Mumbai Metropolitan Region markets, to simplify for our viewers, and how the demand queries are actually coming up for these new projects. Interestingly, Anushi, the third quarter is a very heavy quarter for realty space as well.
A lot of launches.
Yes, exactly. Launches, pre-sales, which you track. Land monetization plans ahead, that's something which you'll be looking out for. Will they go for JD, JV on an asset-light basis? And the timeline for the promoter press release, that is an overhang in this stock as well. And cash flows also, so we saw in H1 numbers that got impacted, maybe because of upfront higher costs in the realty space. So these are the key questions for this company. Very less tracking of the company. That's why I think we should give a 360-degree view to our viewers for KYC. So Anushi, what is it about the company totally?
On that note, let's start off with what's happening with the company. So if we just talk a little bit about it, it's mainly its presence is in the MMR region, and it's a real estate development company of the Raymond Group. You know, Sharad just spoke about the recent demerger which took place. That was Raymond Lifestyles as well as Raymond Realty now. So it was demerged from the Raymond Group on 14th of May onwards, and then it subsequently got listed from July onwards. So since then, we'll be tracking its performance and how the financials of FY25 have also shaped up. But just a little bit about the kind of portfolio that the company has. Now, it has about 100 acres of land parcel in Thane. If you take the whole long-term portfolio consideration of the gross development potential size that we are looking at, 40,000 crore is what we are seeing. Thane land parcel of 100 acres. Along with that, they've signed joint development agreements as well. So this adds up to about 25,000 crore. JDA opportunities adds up to about 14,000 crore. So cumulative 40,000 crore is the kind of mix that we are looking at. Now, do note that currently of this 100 acres land which is there, 55 acres of Thane land is currently under development, of which if you look at the realization part of it, revenue potential is around 13,200 crore, of which so far 8,200 crore have already been sold. While if you look at the remainder, from that, they have collected 6,300 crores so far as well. So, you know, FY26, the second half, the FY27 picture is an interesting scenario, considering that they have this huge land parcel which is already in place. With the JDAs, they have a development potential of around 14,000 crore. We'll see a couple of launches coming in these next 3 to 4 months, in the 6 to 9 months period itself. And these are 3 to 4 launches that we are seeing across Bandra and other key regions in Mumbai as well. Balance will be launched in the next 12 to 18 months is what we are looking at. So if we just take a mix of what's happening, your Bandra, Mahim, Sion and Wadala are some of the key areas where these JDAs are coming in picture. And if you are looking at that, all of these are located in MMR region. They do not have a presence apart from these particular markets that we are seeing. In terms of the mix also, while it is in premium and luxury, I want to just point out how the owned land bank is shaping up and how the JDA is, since, you know, JDA is a rather asset-light model that we are looking at that. So current FY25 and 28, if you just pull up that one, from a 78% mix, now it is estimated that that would be 50% or odd so in FY28, while JDA contribution from 22% will move upwards to 50%. Now, this is the management's aim to bring this ratio to 50-50. So this is an interesting part that we are looking for the company. And with these key launches planned in the second half, how pre-sales and thereof the cash flow shape up is something that we should be watching out for, right?
Yes, Anushi, the expectations is a very important portion, she pointed out. But Anushi, the entire KYC segment, there are 8 parameters where we judge the company. But remember, it's not fair at times, because the company's history itself is on a very short notice and there is a literally zero analyst coverage in this segment. But nevertheless, our format of the show is first we take in the income statement, operational parameters, especially for a real estate company. We are also taking in the balance sheet and the cash flow. These are the 4 most important parameters in the financial segment. Apart from this, the shareholding pattern, how it's actually panning out post the demerger, and the street cred, how the stock has reacted. It's a very short-term basis, but nevertheless, we will take them in. Valuations is also there, and overall outlook, that is very much important, that we'll be judging the company on. So 8 parameters where the momentum would be coming in for. But Anushi, starting with income statement, what are you gathering from here? I think H1 numbers is something which you'll be looking at now.
Absolutely. So, before I talk about the income statement, I want to point out to the key operational metrics because, with real estate companies, we have pointed out that there's lumpiness in terms of how the revenue shapes up, how that is recognized. So, if we just look at the pre-sales number, now by the end of FY25, we are looking at a pre-sales of 2,300 crores, showing about a 3% of a growth. This is in comparison with a 67% or a 40% of growth figures that we've seen. So, how H2 will shape up is something that we should be watching out for because even in the first half, there was a dip of around 35%. So, pre-sales for these last two periods have been on the muted side, but the management is quite optimistic on achieving that 20% of pre-sales guidance. So, that is on a positive that we are seeing. Collections also, while they've maintained a 21 to 22% of a growth in these last two fiscals, this time the collections were also down about 18%, but they expect recovery also in this particular metric. So, considering all of these parameters and a huge launch pipeline that they anticipate in the second half, we've given this a neutral rating. Do note that the 4-year pre-sales CAGR that stacks up to about 55% and 4-year collections CAGR is 64%. So the history has been rather on the positive side. It's now the expectation and execution which will be a key monitorable to watch out for, right?
Thank you very much, Anushi, for that. And it's a very important thing you stated is first, let's just put in the operational parameters. Then I think I'll just discuss the income statement and revise it once again. So already a neutral rating coming in from Anushi when it comes to the operational parameters. And that's the first thing to look at, not the income statement. Now let's look at the income statement. The revenue growth over here, that's of course 1,000 crore plus in H1. And EBITDA numbers are also there, but largely we do not judge a company in terms of these numbers in the real estate space. Net profit for all companies, it matters. It's decent, it's around 77 odd crore rupees, but the company needs to have a long history for us to judge as well. But net, it is decent, and margins 22.9% ahead of this demerger. Now you see that's actually coming down, so that might be a cause of concern. But nevertheless, let's give it more time to the company as well. So it will be a neutral rating coming in from my side.
So on the margin part, there is expectation that this would scale back upwards to 20%. So that would be something that, the street should be watching out for, whether this 20% number will be there in the next FY27 figure that we are looking at. But moving on to balance sheet now, if you just look at equity and other equity, of course, there would be divergence in terms of how these two numbers shape up, considering that there was demerger, so there would be new shares issued. Taking FY25 and H1 in comparison on a like-to-like basis would be unfair, but we'll just point out how the H1 has shaped up. Other equity stood at about 1,200 crores, almost up to 1,300 crores, while borrowings are 564 crores and cash in bank at 214 crores. So this, considering the first half, remains on the healthier side. So it's the future periods that we should be watching out for. Hence, considering the first half performance, considering the debt to equity level, which is on the lower side that we are looking at, we've given this a thumbs up.
Okay, a thumbs up coming in for the balance sheet. Cash flow, very important trigger for a real estate company. But of course, we see the history is less, but it's on the lower side. Operating cash flows in H1 was down almost 300 odd crore rupees. Even the net cash flows is there just a mere 53 odd crore rupees. And we have seen that these cash flows, there's of course a lumpiness involved in that as well. Maybe initially the JV expenses which the company might be undertaking, that's why the hit is coming more on the cash flow. So because of that, based on the current numbers, I will give a thumbs down for the cash flow segment.
Okay, so that's on cash flows is what we are seeing. But moving on to shareholding pattern now, we'll have two periods of data as of now. Promoter holding remaining constant at 48.9%, while FIIs have offloaded some bit of that share that they had from June levels. We're looking at about 11% stake as of the second quarter end, while DIIs have about 4.5% of stake and public holds 35% of overall value to the company, which is there. Hence, considering that there's limited data as of now, we'll be tracking for upcoming quarters as well on how the FII and DII mix shapes up. We've given this a neutral rating.
All right, neutral rating coming in for the shareholding. But overall, let's look at the street cred. Post its listing after the demerger, there hasn't been much returns coming in for the investors. Last 1 month stock is down 19%. But the cause of concern for me, since listing is down almost 46 odd %, and that downtick is something to be actually concerned about? Whether is this a wrong pricing which came in during its listing, or there's a lack of analyst coverage? A lot of questions do come in, but as and when company comes out with its own investor presentation, the management is going to talk with us in some time, then we'll get more clarity in as why there is so less coverage in this counter as well. But it has been on a free fall, so that's a cause of concern for me. So I will be giving a thumbs down for this category.
Okay, coming to the valuations now, what we've done is, while price to earnings, we've derived at a multiple of around 44 times, and this is based on the 12-month trailing EPS which is there. It seems like a metric that we should be constantly watching out for. It seems on the higher side though. So how this shapes up, considering that there's lumpiness in terms of where the income statement numbers are, we've given this a neutral rating as of now. So that's on the valuation part that we are looking at. So but coming to the outlook forward, which is there now, here is the interesting story. Firstly is the 20% of pre-sales growth expectation which is there. Along with that, now the mix in terms of joint development agreements, that is expected to be 50% in this next 2 to 3 years. Now this is an asset light model that we are looking at. So how the financials will improve with this higher mix is something that should also what we should be seeing. If we just talk about the planned launches which are there, now the company expects about 2 new launches on its own land, which is the Thane land parcel that we've talked about. Along with that, there's 3 to 4 new JDA projects which are coming. So if you just take a cumulative figure for the second half itself, it's a 5,000 crore of gross development value that we are looking at. And this is with the expectation that going forward margins will stabilize at 20% or so, which is a high uptick that we have seen from the FY25 and first half levels, going back to its previous trajectory which was there earlier. But along with that, they're also seeing that the cash flows, which we talked about earlier, that being positive as well from the second half. So that's the overall outlook that we have for the company. It's a neutral that we've given, right?
Sure. And let's just revise the overall standings, how the KYC ratings stand, and largely it has been neutral on the income statement and the operational metrics which Anushi pointed out. Balance sheet was decent, but cash flows is a cause of concern is coming in. And let's pull out the shareholding and the valuation neutral here. Street cred we have given negative because there is a massive wealth erosion post its listing, and that's a cause of concern. We'll be dealing with the management. Outlook, it's neutral to positive overall, but net it's 4 out of it is generally historically we give that's an average number coming in for the company. But of course there was a big conversation you had, Anushi, and that was with Harmohan H. Saini. He's the MD and CEO of Raymond Realty. Please listen in.
Let me start off by understanding this new product launch or new project launch that we are looking at. If you can give us more details of this.
Sure. So this is a project which we are launching, which is in the luxury segment. The name of the project is Invictus by GS and the location is BKC Bandra. This project has a total revenue potential of 2,000 crores and it will be executed over the next 4.5 years. We are launching it today. The work at site has already begun. Then we are geared up for welcoming customers over there. We've already seen a very good initial response. This is going to be premium 3-bedroom, 4-bedroom and even higher configuration which will be available for sale. And good inventory with the excellent location. And this is what we have currently launched, and going forward we would be launching more projects also, since you mentioned our pipeline. So outside of Thane, we are launching another project in Wadala soon, end of December, beginning of January, that launch will happen. That's also a large project with revenue potential of about 5,000 crores of top line. And after that, in Q4, towards the end of Q4, we have another project which is in Siam that will be launching. That is with a revenue potential of about 1,700 to 1,800 crores. That's a project called Address by GS. Wadala will also be an Address by GS product. Apart from that, in Q4, we are also launching projects in Thane itself. So in Thane, we have already in H1 launched one Invictus by GS, one Address by GS. And in Q4, we will be launching a 10X product, which is a 2-bedroom community that has a revenue potential of over 1,000 crores. And then we are also launching a retail-focused high street inventory in Thane, which is Park Avenue. That there also the revenue potential is approximately about 1,000 crores. So in all, between now and end of the year, we'll be launching 3 projects outside of Thane and 2 more in Thane.
So, Mr. Sani, just want to understand, while the overall potential that you've given is around 40,000 crore, and I'm assuming this is a 5-year perspective that we have for FY26 and 27, what's the kind of overall gross development value that we are seeing, and how is execution going to shape up is also another question that I want to understand, considering that you're also targeting for an annual run rate of around 4,000 crore of revenue. So help us with that as well.
So what you're referring to is the pre-sales number.
Right.
So if you see last year we did pre-sales of approximately 2,300 to 2,400 crores. It's 2,300 some odd number. And what